sense. So what are your thoughts?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah, no, totally. I think there's actually kind of two questions in there, right? There's the beginner's question of, he's actually saying, what system should I use, right? And that implies some sort of technical system or whatever. But then if you take it a little bit deeper, it could also mean, what works for me? What kind of catalyst should I be using? And that might not be a chart pattern. Maybe you're trading the cocoa market and you know something about the companies in the cocoa market, and you'll use that as a trading catalyst and not necessarily what's on the chart. So I think a couple of things to consider there. Obviously, charts are good, and we like charts. We both like charts, and most people trade with that. But what are some other catalysts that you could look at? Maybe that's that's more in the futures and stock market, maybe. But FX has some of those types of catalysts. Also, like I know you look at the retail traders, right? Their ratios and stuff like that. So that might be another catalyst that you can look at. So just something to think about there.
Yeah. There's lots of triggers, aren't there? Yeah, for sure. Yeah. So it really, I guess I just want people to get away from this idea of there's a best pattern or whatever. It's really about what matches up with you. Yeah.
Mm-hmm. Yeah. Totally. Yeah.
Yeah. Cool.
Okay, cool. Thanks.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Especially in this environment, there's a lot of opportunities to make money, in trading or whatever you're going to do.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, this is a big time of change, obviously. This last year and this coming year is going to be probably even more change. So what can people do to kind of weather the change and kind of roll with the punches and even benefit from the situation?
I'll tell you one thing I've learned. I think people sometimes confuse fear as, they give it like a negative. So for example, if I grow up in a country like Australia, where predominantly, I noticed this when I came to Australia, that all the people, when you get off the plane at the airport, everyone looks like they're all from England. They're all these white faces. And that was so different to me growing up in the United States, in particular in California, where, I had black friends, Mexican friends, you know what I mean? I had friends from Taiwan, was a good friend growing up. Lots of friends from Mexico, of course. I had friends from Japan. I had friends, from, everywhere, Guatemala. I had a really good friend from Guatemala in college. And so, it was if I took someone out of Australia and dropped them off in the middle of Angola, where they're going to stick out, right?
Yeah.
That can be scary. But why? Why are you scared? Do you if I just pluck someone out of Sydney airport and I said, okay, we're going to Angola, and I dropped them off in Angola, and they're like, whoa, they would probably be fearful. But why? They don't probably know anything about Angola. Maybe they didn't even know it was a country. They never heard the name. Mm-hmm. But yet here they are, and they look different, and they're fearful. And I think that's really what gets at the core of fear, is the unknown, right? So we don't know about something, and we have to confront it. So what do we do? And so I think fear, in a way, is like a sign that you're in a spot, you're in a place where it's very exciting. Like it's exciting. And think about it. Most of our lives, what we do is so normalized. And so, you get on the bus at the same time, or you get in your car at the same time, you go to work at the same time, you go to the same cafe, you have lunch with the same people or what, you know what I mean? Like so much of it. And I know like it's not always the case for everyone. Like you might have a meeting over here or a meeting over there, or you might have a business trip or whatever. But the point is, most of what we do is just so normal. So when you're fearful, to me, that's like a sign that you're alive and that the unknown is there. And that should be exciting. So really, I think we misinterpret excitement over the unknown as fear.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Because we don't know what's going to happen. We like it when we know what's going to happen. We know what is likely to happen. So I've learned, and I think this really applies to trading. In fact, one of the things FX Street was asking me about this like a couple years ago. What do you like? I think it was New Year's resolutions, and they asked a bunch of people on there, and I said, because I do webinars there, like I just do once a month now. But and they said, what are you working on in the new year? And I said, I really wanted to work on this idea of fear and of embracing the unknown, because that's what we do as traders, right? You and I, we risk our money, we put it down and we say, I don't know what's going to happen here, but I believe enough in my data, in my testing, have enough confidence behind it that I'm going to risk my money because I think there's a good chance that X is going to happen and X is good for me, right? Yeah. And so I think fear, you can kind of twist it in your head and look at it, flip it around, and look at it as an excitement for what's to come, the unknown that's to come. And that can be another opportunity to learn something. That could be another opportunity to see something about yourself that you hadn't seen, like a facet of yourself, whatever. So that's why I think we should sort of reorganize how we view fear as something exciting, not as something so problematic or, dark or, negative. Yeah. But rather interpret it as something, it's really kind of excitement. It's excitement that we're interpreting in a negative way. What are your thoughts on that?
Yeah, no, I totally agree. I think that in reality, there aren't too many things that can really harm you. I think, it's just an opportunity to grow. And I think, especially in this environment, there's a lot of opportunities to make money, in trading or whatever you're going to do. And I think if you just calm down and just objectively see the situation and say, okay, this is going to go away, but then maybe this is going to come up and that's an opportunity, and this is an opportunity to do this, then I think it becomes much more interesting and a lot less scary.
Yeah, and that's why, I think the downside is you can get addicted to that, like base jumpers, or, NFL football players love, running into people or what, you know what I mean? Like there are a lot of big wave surfers. Like there are ways, I think, where you can kind of take it to the extreme. Gamblers also. Yeah. Right. So that's important for traders to recognize that a certain proportion of traders are actually gamblers. And I would say Jesse Livermore's would fit into that category. You guys can look him up. We can put it in the show notes. You can look up the reminiscences of a stock operator, which is a biography of Jesse Livermore. But yeah, so it is tricky. There's that balance of embracing fear versus getting addicted to that feeling of overcoming the long odds of jumping off a building with just a squirrel suit and a parachute or whatever. You know what I mean? Like, so that's a bit tricky, certainly. Yeah. You definitely have to know the odds or whatever, right? In your own skill level, but. That's right. And that's where the simulator comes in for traders, right? Exactly. Yeah.
Totally. All right, cool. Thanks, Walter. Thanks. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Try and think long term. Try and think really far away. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, so if some people don't know this, most people are basically not born to trade, right? Probably 99.9%. How can we first understand that and then use that to become a good trader?
Okay, this is a great question, and I appreciate it. You know what I would say is there's an app, and I will try and put it in the show notes for those of you watching this. And this is your lucky day because you're going to get a cool app. It's free, I believe. I believe it's free. I don't know. I have it on my phone, but it's basically is a risk assessment. Okay. And what's cool about it, and I've only shared this with like traders that I've coached before. So I'm going to put this in the link and I want you guys to check it out. So what it does is it enables you to see how well are you at defining risk. Because I think that's a big part of trading. It's not the only thing, right? It's something that we get wrong. And I think what you said is absolutely correct about the fact that we're not born to trade. We're not built to trade. We're built to make the cognitive mistakes that don't allow for consistent profitable trading. In that app, it'll like you can take the test and see your score and all that. What's interesting, I think, is that there was a study of like professional gamblers, right? And what they found was fascinating, which is these gamblers, they thought of themselves almost as like they just would never die, you know, that they were like they were infinite, they had infinite life. And so it's almost like you need to adopt that point of view when you're looking at your edge. Like let's say, for example, you have a trading system and it has a 55% win rate. And you know, if it gets down to 51%, you're going to be break even. But if you're making anything over 51%, you're going to be making money. What's interesting about that, and you're convinced that it's a 55%. So for a lot of people, that's not enough. They're going to say, no, I want it to be 60. I want it to be 70. I want it to be at least 65, right? It's like, I need to improve my win rate, right? They focus in on that. But for these professional gamblers that they studied, they saw so far into the future and thought about so many thousands of trades that they were going to take that they knew that 4% edge was money. You know what I mean? Like that was all they needed. And it's actually the exact same thing that the casinos do. Like the casinos, those slot machines, they pay out like 98.5% of the money or 97.8%. It depends on where they at. And they actually publish the numbers. So what that means is, on average, they're only taking 1.5, 2, 3, maybe 3% of the money that goes through there. But that's enough to make all those lights and pay for all the entertainers and all the staff. And you know what I mean? Like it's fascinating to me. And it's the same thing with the table games. Table games have very slight edges too, but they all have an edge for the house. So of course, blackjack it varies with the composition of the deck, right? Yeah, exactly. But yeah, so I find that whole thing fascinating that they basically discovered that the guys who are really good at managing risk, the gamblers, right? Because think about it, gamblers are trading. They are basically traders trading systems that have negative expectancy, right? So where do they find their edge? They must find their edge somewhere, right? And I know it's different when you're like betting on sports and things like that because the line changes and all that, but I find that fascinating. So I think if you're interested in this idea, I think you should definitely check out the app. I'll link it up in the show notes. You guys can have a look at that. And also try and think long term. Try and think really far away. And imagine not why you want your 55% win rate system to be 65%, but imagine how much money you could make if you pushed a certain number of trades, a certain amount of money through that. Right? I mean, that's what people at Walmart do. All the companies that sell stuff at Walmart or, any place like that, right? Any discount department store or whatever, they have such, like, Walmart ensures that they have such small margins. You're selling this widget, you're selling all these millions of widgets to Walmart. You have such a really fine amount of profit there. But the reason why they happily sign the contract with Walmart, because they're notorious negotiators. They will push that price down, right? Or they won't take your product. They will say, no, you got to get it here. You got to give us this price per unit, or we're not going to say yes. And so people will happily sign that because why? Because they know the volume. They might only be making 6% on every unit, right? But where normally they might make 20% or 15% or whatever, but they'll take that 5-6% because of the volume of the millions of widgets that they know that they're going to push through Walmart. And it's the same thing with trading. It's the same thing with gambling. Like if you have that edge, however so slight, don't discount that, right? Think about how valuable that is to have over the lifetime of your trade. So yeah, that's how I see it anyway.
Okay, cool. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah, I mean, that's a great way to look at it. I think we get lost in the income, right? How much am I going to make every month? How much am I going to make this month? Am I going to be able to pay my rent or my mortgage, right? And we don't think of the long game, like how can we get investors or something later on to ramp up our trading? And
and do you like, here's a question for you. Do you have like 10-year goals and things like that? Because that's another way to like make it more, sometimes people just say, well, I want to do this year. Like we're recording this podcast in January and a lot of people have New Year's resolutions, all that, right? I think it's easier if you push your goal further out and say, well, I want to have 10-year goals, 5-year goals, 15-year goals instead of like your annual things. Do you do stuff like that? Have you looked at stuff like that? Because I think that kind of takes the pressure off.
Yeah, I mean, I've tried that stuff, but I think for me, it's more about like, what am I really excited about? And that's going to be something that's really far out, right? Anyway, and that's kind of my goal. I don't have to put like a time limit on it, but I just work towards that. And for me, I found that works the best instead of setting like a hard 5 or 10-year goal or whatever.
Right. Yeah.
Do you use those like far out goals?
Yeah, I mean, I think I think it's really important to have quarterly and annual goals and all that, and you can have monthly or weekly depending on how what your time frames are on your trades. But I do think the longer term goals, at least, it's kind of like trading the higher time frame charts. You kind of get like an update every so often. So like if you have a 10-year goal, you might look at that 10-year goal every year and go, okay, well we're 8 years out now from my 10-year goal. The last 2 years, how have I, what I mean? How have I progressed and that sort of thing? I just think I feel like it takes the pressure off. I feel like we're such a, now sort of, everyone's on their phones and you know what I mean? I feel like it just takes the pressure off for me and it helps me see it more clearly. Just like looking at the weekly charts or daily charts makes, you know what I mean? For me, that also can help you see what's going on a little bit easier too. Yeah. Yeah, no,
totally. And I think for me, at least, I make too many of those little goals. So if I have too many of those little goals, they start piling up and I'm like, oh crap, I can't do any of these. But
that's what I mean.
One big one, right? Then it's easier to kind of see what needs to be done. So
yeah, absolutely. I had the same problem. And that's actually that's exactly what got me into doing the longer term goals. Was exactly what you're saying, because you get these lists and you're like, oh, I got to do this week and this and that. And it becomes like, it's overwhelmed. Right. Yeah. So if you can kind of consolidate everything into a big picture, it's just like, for me, it's like, okay, yeah. So,
yeah, totally. I agree. Yeah. All right. Thanks, Walter.
See ya.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
And it was like their parents would just drop them off there when they didn't have a babysitter. That's basically what it was. I should have charged like a door fee, Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I think it might be useful from a psychology standpoint and from an experience standpoint to maybe talk about what we've been into before, like business-wise, and if we had any success or if we failed, and how we learned from that and how we came to trading after that.
Sure, yeah. So Okay, so just real quick. So when I was a kid, I learned how to do magic tricks. And so I was basically a magician from about age 6, where I did, little till I was in my 20s in college. I did magic. So that was kind of my business. And then I had side jobs, mowing lawns and stuff like that, whatever, right? And then when I got to college, so I was surrounded by like psychologists and people that were in, because my mom was a psychiatric nurse. And so I would go to her work, and there would be like whisper, like you would see the rubber room where they would put the crazy people, like the really violent, crazy people in the rubber room. And I always remember being fascinated by that. And walking through there and seeing the patients, there was kind of like this feeling as a kid, like almost like you're going through a jail or something. I don't know. Like I felt like, they were dangerous or they were weird, the people, but they just seemed normal. The people that were there just seemed normal to me. And we were always around psychologists and psychiatrists and people like that. So when I went to college, I just decided to study psychology. And then as I got through it, I knew I wanted to go to graduate school. So I made friends with there was a master's program at the university I went to. And I was talking to someone and actually ended up taking some master's level courses right before I graduated with my bachelor's. And one of the guys there, he was working for a jury consultant. And I thought, that's interesting. And I thought, that's a really cool job, because it's so I was thinking, what can I do? What kind of job can I have where I still have time for surfing? And that was my whole thing, right? And so I thought, if I was my own boss and I did this jury consulting thing, I could kind of work my own hours and stuff. And, I would have the mornings for surfing or whatever. And so he was telling me about it. And so I was really fascinated by the fact that this graduate student was doing like grunt work basically for a couple of jury consultants. And so I applied for psychology and law programs in the US and Canada. I applied it saved up my money and applied for 26 graduate schools. I think I got into 3, and so I did that. And then after I graduated, I went and did the jury consulting thing, and I hated it, because you're always working for the bad guys. You're always working for the defendants that should be sued. That was tough. And also you're traveling a lot and you're living in hotels. It wasn't very fun. So I got out of that, and my friend that I had grown up with, that I went to junior high, high school, and college with, who also went off to graduate school, although he only went for 1 year of psychology school, and then he opted out and worked for an investment bank. He and I were trading all throughout the 90s when we were in university. Okay, in the early 90s, we were in university, and we were trading the .com stocks, right? This is the real big ramp up, that first big ramp up in like NASDAQ stocks, okay? He convinced me to quit my jury consulting job and move down with him in Beverly Hills and learn how to trade currencies. So that's what we did. We went down there. We even had investors lined up and stuff, because he had a pretty good trading background. He had worked at lots of different brokerages and stuff. So he told me to go and take this class. I took the class. I think you've taken the same class, right? We talked about the guy.
I took that class too, yeah.
Yeah, the same, which is funny. It was like a little ad in the LA Times. Yeah,
it was like a weekend or something, right?
Yeah. Well, I think mine was 5 days. It was a week.
Oh yeah, 5
days.
I'm sorry, it was a week. Yeah, that's right.
Yeah, but whatever. Yeah, it's the same dude. I know. We talked about. Yeah. So I took that class, and then we were trading our own money and stuff. And he tripled. I didn't really have much to do with it. He tripled it in 2 nights. And then by the end of the week, the money was gone, blah, blah, blah. But we had these investors lined up, like the Swedish Bill Gates was a friend of my friend, right? Because he was dating a Swedish girl, and he somehow made this introduction to the Swedish Bill Gates. And so that was the deal, was we were going to trade the Swedish Bill Gates money. We were going to have this big office in Malibu and all this stuff. And then September 11th happened, and the guy lost a bunch of businesses. There was no way he was going to have any play money for currency trading or anything like that, which was good, because we would have lost his money. We dodged a bullet there. That was a really good thing that happened. We weren't ready for that. And so then I started a coffee shop, which was coffee smoothie shop, which was pretty much a disaster. Didn't go very well. And then I just sold everything and moved to Australia, sold all my possessions and packed it up and went down to Australia. Like, I thought of it as like a sabbatical, like in academia, which all my friends in graduate school, they all end up going to academia, right? They're all teaching professors and stuff. I'm like the black sheep of the group. I'm like the one that nobody talks about. I moved to Australia, and I had this sabbatical of like learning as much as I could, getting as many books as I could about trading, all about technical analysis, and they're all stock related and futures related, because there was one book on currencies at the time, and then there was another one, so there's two books on currencies at the time. So I spent a good year and a half just learning it there, and then I had to get a job because in Australia, you know, visas and stuff, so I had to get a job for that. It wasn't anything more than just a job, you know. When I finally could get out of that and still maintain my residency in Australia, that's when I got out of that job as soon as I could, because my trading was going really well at that stage. And so, and I think it does take the pressure off when you have another source of income for your trading. I've talked to a lot of traders about that. So to put it, long story short, I was an absolute failure at business. My business I guess my first business where I didn't have any employees as a magician, I did all right. As a smoothie coffee shop owner, that was a disaster. And I made a lot of mistakes there. You know, the path it's an interesting way because I never really wanted to become a trader. It was only just my friend that got me into it. And I thought it was actually cooler to be a jury consultant than to be a trader. Like I thought, like when you think about when you're at the party and people talk about what you do, like jury consultant's like a cool thing to say because oh, what's that about? You know, where if you say trader, people kind of already have an idea in their head of what that is, or you know what I mean, and it could be negative or positive depending on the person.
Yeah.
So
type stuff, right?
Yeah, exactly. Yeah. So where did you come from? Like, how did you build up to trader status, or how did you end up there?
I mean, in school, I studied biology. And
biology, really?
Yeah.
Wow.
Did absolutely nothing with that. So right out of college, I got a job at a hedge fund. So I was working at the trading desk as a trading assistant.
That's right. I remember that. Yeah. You said that on your website, right?
Yeah.
You talk about that on your website. That's how I read that. I remember. Yeah.
Yeah, so it was a good introduction. I mean, it was a fixed income arbitrage hedge fund, so it wasn't too interesting to me because it was like all math and they were just like playing like regression to the mean basically. But I got a couple of years there. It was a cool experience. And then I went into IT consulting. So that was a little bit more stable. I understood it a little better and it wasn't like this, you know, like an assistant job, right? So did that for a few years and then I tried to do real estate and that failed miserably. I found out that I don't like doing real estate because you have to talk to too many people and everybody's out to get their own little piece of the pie. We did a few deals, but after that, I was like, okay, got to go back to the job and figure this out. So then I've been
wait. Can you talk more about the real estate? I'm just curious.
Yeah.
So were you selling or are you putting deals together or what was your role?
Oh, buying and selling. So like, you know, late nights, no money down type stuff.
Gotcha. Yeah.
So so we did a few deals, like bought a house for $10 and then sold it and made like $30,000 profit or whatever, right? So I mean that was kind of cool in itself, but the whole process of it I just did not like. You know, people are lowering up and they want to sue you for stuff and it was just that kind of fun, right? So I got out of that and the whole time I kind of had trading on the back burner. Then I started the website and the website started generating some money. So that took a little bit of the pressure off. And then once I was able to take the pressure off, then the trading came around. And that's what I'm doing right now, just trading and doing the website. I'm going to start another website soon. So it's a good passive income generator, not passive, but more passive income generator than trading.
What's the new website? What's that going to be?
It's more about this like self-sufficiency, trying to learn these skills that maybe your great grandfathers had, preserving food, you know, like building houses, stuff like that.
Hey man, I want to learn how to pickle garlic. You going to talk about pickling stuff? I'm serious.
Yeah.
Like that's the kind of stuff, right? You're talking about stuff like that, like self-sufficient, like storing your own food and
that's what my wife wants to do. She wants to pickle some food, so I'm going to do some tutorials on that.
Oh, dude, I'm in. I'm totally in. Yeah. So I had a friend, actually the friend that got me into trading. His dad, they were from out of the country, and his dad would have these amazing jars of pickled garlic, and he'd be like, "Hey," and they made it. You know, and they had it like in a garage or whatever. Yeah. And I was like, "Oh, that's amazing." And like I remember when I was a kid, my grandmother came out from the East Coast to California. Where we lived in California, there's lots of strawberries where we grew up. And so my mom and my grandma, they just went to town. They went and bought like punnets and punnets of strawberries, right? My grandma showed my mom how to make strawberry preserves, like jam, you know?
Yeah.
And I'm not kidding you. We had it for breakfast on our pancakes. We had it for lunch on our peanut butter sandwiches, which I don't know if you know now, you can't take peanuts to school now. So my kids don't have peanut butter sandwiches. Yeah, no, you can't take nuts to school. Like it's illegal. That's all this crazy stuff. Yeah. So like I had a peanut butter and strawberry jam sandwich for literally like 8 years going to school. And then we would put it on our ice cream for dessert. We would give it to people for Christmas. Like, hey, Merry Christmas. Here's a jar of preserves. Like we literally had that stuff for 10 years. It was just one spring that my grandma came out and just boom, made all that stuff. But that's cool. I like stuff like that. That sounds like a good idea.
Yeah. We'll see how it goes, but it should be fun. But
that's awesome.
I mean, like, so what did you learn when you failed at? I mean, a lot of people will try a lot of different stuff, right? Like stock trading, future trading, real estate, and all that stuff.
Yeah.
So, like, after you failed at your smoothie shop, and after I failed at the real estate thing, how did you feel, and how did you know where to go next? Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
I always had, like you said, trading in the background. When I was at the smoothie shop, there was a lot of downtime. Okay, in other words, we didn't have a lot of customers.
Yeah.
So I would literally, and I'm not kidding you, I would literally get up, and this is 7 days a week. Okay, and I had people that could work there, but I just couldn't really afford. I'd give them a shift here or there or whatever, but I would get up when it was dark, and I would listen to the Coast to Coast AM radio show. It would be on replay.
Yeah.
I'd get up, it'd be night. It'd be like night. Okay. I get up, I drive. It was about a half hour, 35 minutes to the smoothie shop. It was really more of a smoothie shop than a coffee shop because nobody drank our coffee, right? And very few people drank our smoothies as well, but at least more people did. So I would get up, I'd be listening to Coast to Coast AM rerun, like they reran the one that was on earlier. Like, they have 6 hours of Coast to Coast or whatever. I'd get to the smoothie shop, I'd fire up the coffee machines and all that, blah, 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 right? Get everything ready. People would come a little bit, a little bit before school. Maybe a few people would come for a cup of coffee or whatever. And then after school, it was more of a hangout for kids that were like 11, 12 years old, because we had ice hockey and foosball and billiard tables and, you know what I mean? Couches that they could relax on. And it was like their parents would just drop them off there when they didn't have a babysitter. That's basically what it was. I should have charged like a door fee, We actually had music too at night sometimes, like nice. Crazy music. Like bands that couldn't play anywhere else because they were like death metal or whatever. And they were so thankful. It's probably the only smoothie shop that had death metal bands at night. I can't see what could possibly go wrong. So why did this business take off? Yeah. So what I learned though is I was always looking at the charts.
Yeah.
During the day, because basically from about 9 a.m. to 2 p.m., there was nobody coming in. We'd have a few people coming in at lunchtime. There was a company there that makes guitar preamps in that area. They make guitar preamps. I don't know much about guitars or anything, but apparently that's like a really well-known company. And the founder of the company, like the CEO or the president dude that the company's named after, he came in once, and then the whole, like, all the secretaries started coming in and stuff and having smoothies. So they would come in at lunch, and then that was it. So I had all this time to look at the charts. I was following a signal service in South Africa. So whenever they gave their signals, I would take the trades and stuff. So, that's basically, and I was looking at charts and still trying to learn as much as I could about trading. There was a trader guy that actually came in there, like a broker dude, and we would talk and stuff, and I would, kind of learn things from him and bounce ideas off of him and stuff like that. But other than that, that was, all I really learned from it was, persistence and perseverance. Like what I've seen when I came to Australia and I convinced my one and only friend in Australia to come and live with me, he was like, dude, don't get down on yourself that you had a failed business. And I didn't really care about it. I was like, yeah, I tried it and whatever. But he was like trying to pump me up, even though I didn't need it to be pumped up. And he was like, I'll always bet on the guy with the failed business, man. He learned lessons and stuff like that. I'm like, okay, cool. Well, I'm not looking for any backing or anything, but thank you. Thanks for the vote of confidence and stuff. Like, it's so interesting that you asked this question, because today I was listening to a talk by Malcolm Gladwell. You know who that guy is, who wrote Blink and Tipping Point and Outliers. He was talking more about outliers and how, like, they did this study where they got the 0.1% top IQ people, right? I think it was in California. And this guy in Stanford followed him around for like 50 years. And what he thought he was doing was identifying the movers and shakers of the generation by getting the genius level 0.1% over 140 IQ people. He thought that's who he was identifying, and he was going to follow this cohort every 10 years, right? And you know what he found?
Go ahead.
The IQ didn't predict anything. And I think this really is relatable to trading. I don't think that you can say that if you're smart, you're going to do well at trading. If you understand math, you're going to do well at trading, or anything like that. I think it really comes down to you wanting to make it work, right?
Yeah.
What he found was that those kids that had the higher IQs, there was a small percentage of them, that about 15% of them, that actually did go on to do great things, but 85% of them had very average to below average lives in terms of like achievement or whatever.
Mm-hmm.
And he said that was because of where they grew up. So if they grew up in a household that was loving and encouraged learning and had books and stuff like that around, they did quite well. Basically like a higher class of opportunities. Mm-hmm. And the kids that didn't have that, they didn't. They just had like normal lives and stuff. And I thought that was kind of fascinating, because a lot of people will assume it's ability, right? And so I think for trading, it's not really ability. Like, there are very incredibly simple trading systems that make money.
Yeah.
But there are very few traders that will trade those systems through drawdowns, through the hard times, and learn enough about themselves so that they can kind of put things in place around them so that they continue to trade even when things get rough. And I think that's the same with business. Like, I think today, if I wanted to go out and make a chain of smoothie shops, I could probably do a pretty good job of it, because I learned a lot of things from, having, don't have death metal bands at your smoothie shop. Don't have a space of like, I don't know what it was. It would have been like, 500 square feet when, you could do with 40 square feet. You know what I mean? Like, you don't need a lot of space for those kinds of places where they're kind of like takeaway places. I didn't need to have all that space. So that's why I put the air hockey and the billiards tables in there and stuff, because like, I had all this room, and it was just weird to have this big room with nothing in it. You know what I mean? Like, yeah. So yeah, I mean, I wish I could say I had some really big insights, but I think what I've really learned from talking to traders, from surveying traders, and from thinking about the traders I know who do well, they just know it's going to work. They know it's going to work. They know, like, you can probably relate to this idea of like, you're just not going to stop. Like, you're not going to let anything hold you back and stop you from getting to the point where you're going to start making money. One of the things that Gladwell was talking about was the difference between Asian cultures and like normal Western cultures. In a lot of Asian cultures, they do much better on the math tests. So they have these tests that they go around the world every 4 years. They give them to all countries, right? Mm-hmm. Basically, all countries, they test their kids every 4 years on the TIMSS test. They also have the questionnaire in there that's not math related, and it talks about like, how many hours do you spend studying a day and all this stuff about your life. And what they found was in fact, it was 120 questions. Not all the kids would go through all those other questions that were not math related. They didn't get to the end of it. And one researcher decided to look at the countries that tended to complete those 120 questions about their life versus the math scores. Mm-hmm. And that actually, the kids who did the questionnaire about their life, who went through the end of it, they also did higher on the math. So in other words, and this like in Asian cultures, they teach you that every math problem has a solution. I don't know about you, but in America, what I learned growing up was that some kids would just say, oh, I'm just not good at maths. I'm not going to do this. I can't do this. I'm not good enough at math. But the Asian way of looking at it is very different. The Asian way of looking at it is that every math problem has a solution. It's up to you to find a solution. Huh. And, there's no out. There's no like genetic out. Like, oh, I'm no good at math. I can't do it. Like, that doesn't exist. If you take that idea to trading, like, people can tell you, well, I've never found a trading system that makes money. But there are traders that make money, right? Obviously. Okay. Yeah. So if traders make money, is it possible to make money trading? Yes. Okay. So can you find out what you can do to do more of what the traders who make money do versus following the traders who don't make money? What can you do to duplicate it? If one person can do it, many can do it, right? And you can do it as well. What I've learned from trading is that. And I wish I could say that. I mean, it really comes down to persistence, I think. Persistence and the belief that you can do it.
Well, I think also it sounds like, I mean, in my case, and it sounds like in your case also, that there's also a matter of interest, right? Like, if you're really interested in it and you really want to figure out this puzzle, then I think you'll figure out how to do it. But if you're not interested, then you're just kind of, half-assed and just try to get by and then make the quick buck or whatever, right?
Yeah, absolutely. Yeah, absolutely. And you know what? What's interesting about what you just said is that the turtles, when they did their screening, they were looking for people who were interested in games. Like that was the thing.
Okay.
And actually in the show notes, I will give you guys a link. There's this really cool guy. I don't know if you heard this guy named Naval. Do you know Naval?
I've heard of him, yeah.
He's an angel investor, right? And he had this thread that went viral on Twitter, right, about wealth. And he was talking about I love listening to his interviews too. When he grew up, he was always doing like role-playing games. He was doing games, and he kind of looks at life and business as games and kind of figuring out what are the rules and how do you win this game. And I'm really big with that with my kids. I think like three things I think that are really important to teach kids from me as a father are the art of storytelling. So we make up a story every night, 2 stories every night before we go to bed. We make up stories. The other one is probabilities. So my kids know probabilities, and they're like 5 and 7. You know what I mean? Like they know probabilities. Yeah. And yeah. So probabilities, the art of storytelling, and then and then strategy games. So we play a lot of strategy games, like Naval was talking about, because I think that kind of you can apply that to life. You know what I mean? Like I think back to the time when I was in academia as a graduate student, and there were certain academics that got a lot of attention. Okay, and they kind of dominated their field, like even in a little tiny field of like child abuse and neglect, which I did some sort of ancillary research in at the time, right? And my mentor had a foothold in this area called child abuse and neglect. Okay, very small sliver of psychology. But there were these people that had these like larger than life presences at these conferences. You know what I mean? And they dominated it. And really, when you look at it, they only did they just did a couple of things. And I think you can do the same thing in any field, like real estate or Instagram influencers or whatever. Like, there was this guy, he would just wear these outlandish, garish these flowing sleeves, like he was from the 17th century. He looked like a 17th century magician. Yeah. And his name was Dante, and he would wear these like big kind of like the stuff I used to wear as a magician, to be honest, like really weird costumes. And he would give these talks, ruffles and all that. Yeah. And he would give these talks at the conferences, and no one is ever going to forget Dante. You know what I mean? Because he's like created this persona. It's like he's gamified the whole academic thing, and all of his things get published, and he goes against the norm. You know what I mean? He just rails against the major theory of the time. And it's like just a game. Like everything in life to me is like a game. And so I think and trading is a game, absolutely is a game, right? And that's why the turtles were screened. That's why they knew to screen. They were looking for people who were interested in games of strategy when they got those turtles in there. They weren't just, they say that they could take anyone and teach them how to trade, but really they wanted people that understood games of strategy, because they knew that that's what trading was. It's about learning the rules and learning how to make it work and how to win. So
No, I think that's a good point. I think also that brings up the idea that if you're doing something you really enjoy, then you're going to do it in your own way, right? You're going to make it yours. You're going to figure out how to have fun with it, like this guy dressing up or whatever. So I think it's the same thing in trading. You're going to, some guys like the big R trades, some people like the consistent returns, and you'll just figure out a way to do it for yourself.
And what you just said, there's a neurochemical basis for that too. Like if you're happy, you are going to create neurochemically, you're going to create an atmosphere in your brain that's going to lead to more testosterone, which is going to lead to more effort. So if you're happy at what you're doing, you'll do a better job at it. Because why? Because you'll want to do a better job at it. You'll want to put more effort into it. It's going to come naturally. Whereas if you're slogging around at some job that you really hate, like you're not going to be a winner. Like you're just not. You gotta do what makes you happy. I mean, I know it sounds all new agey and all that. Like, do what makes you happy and do what, but it's true. Like neurochemically, it's absolutely true that will make you try harder. Like in your brain, if you're happy at what you're doing, you will try harder and you'll get better at it. And then now it's going to snowball, right? So
secret to life.
Yeah.
On that note. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
You don't want to encourage that behavior.
No.
Okay? You know what I mean? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, here's an interesting idea, especially during this time. Do you think it's possible to change everyone's mind? Like, to see your perspective, at least?
Well, I guess my question would be, why would you want to, right? Like,
that's the thing, though, right? And a lot of people go around trying to change other people's mind, whether it's trading related or, whatever opinion they have. They try and go and change another person's opinion, and then they get all frustrated and mad, right? But I believe, like you said, why would you want to change anyone's mind?
Yeah, it's tough. Like I've heard this before, people get really upset and say, why is there pain and suffering and sadness in the world? The only way that that there's bad times is if you can contrast it with something better, right? And so if I disagree on the value of something like the euro against the US dollar, I think it's a great thing that somebody else has the exact opposite opinion as me, because that's what makes the market, right? So yeah, I'm probably pretty close to like a free speech absolutist. And I know that's a big deal for a lot of people. Like they think that's really bad. Like you shouldn't. And if you've ever gone to like corners of the internet where it is as close to, it's about free, it's pretty much as close to free speech. You'll see like, that's the thing about the internet that, our society has changed. And so if you think back to like Washington and Abraham Lincoln, like back in the day, it was all about your honor. It was all about your honor, like your word and your honor. Yeah. That was a real big deal. What's happened now, like on the internet, is we've taken your identity away, so it's not you anymore. It's like you're like this ghost. You know what I mean? You're like this online identity. And so as an online identity, you can go out there on the internet and these free speech forums and just say whatever you want with no real consequence, because at the end of the day, you can say all these crazy things and then you walk into the store and nobody knows that was you saying that, and probably nobody in the store even goes on that online forum anyway, right? Yeah, but like that, do you know what I mean? Like it's sort of, we've taken that away. In a way, it's great that we have the internet and we have all this exchange of ideas, even though it's being suppressed now, obviously, in a big way. But in a way, I love the free flow of information and the exchange of ideas. But taking a stand isn't like it used to be. It's because it's cheaper, right? It doesn't cost you so much to go out on a limb and make this claim, right? So if I go out there and I claim that, redheads need to be all rounded up, because if it weren't for redheads, we wouldn't have poverty. If I said something like that, okay. In the olden days, everyone would say, "Hey, Walter said that about redheads," and I'd have a bunch of redheads upset with me and maybe tailing me everywhere I went, right? Yeah. But because online I can be anonymous and say that, no one really knows who I am or where I live, or you know what I mean? They just yell back at me on the internet. So it's kind of like it cheapens. It's hard to take a stand, really, because unless you do it in the light and you say, here, this is me, this is where I live, this is what I'm about, and this is what I believe. Like, like Jordan Peterson, for example. I don't know much about Jordan Peterson, but I know he's controversial, right? And probably Noam Chomsky would be similar. They're both kind of outspoken, controversial figures, right? So that, but what happens on the internet for the average person is we're just anonymous. Nobody knows who we are. And so we can say all these wild things. I think we need divergent opinions for everything, but especially for the markets. And as traders, it's really important to have that. And I use those opinions. Like I like looking at where traders are at in terms of their trades. I use that information for my own trading. So yeah, I really like the idea of and I've learned things from people who have taken the opposite point of view. Like I've always been like, one of the things that you learn in psychology, there are real subtle forms of prejudice in the way that we look at groups. And even though you would say, well, I'm not prejudiced, I give everyone an equal chance or whatever, that still comes out, and that can come out just by calling the group the minority, not by giving them like a color of skin or a sex or whatever, anything like that. You're not even doing that, just by calling the group the minority. But like there are studies in psychology where they say, well, the majority group says this and the minority group says this. What do you think? And so our prejudices actually get applied, even if it's just minority versus majority group. It's crazy, you know, that we're built that way, you know, like we're tribal people. And so, yeah, it's fascinating in some ways. But to me, free speech is really important. I just wish that we all had to do it in a way where we were saying, well, this is me and this is what I'm saying, because then we would think probably more about the consequences of what we're saying. Because like I said, you know, the redhead example, you know, that would have severe consequences for me if I said, hey, I'm Walter, I'm in Australia, redheads are the problem. You know, if I did that, I would have there are a lot of redheads down here in Australia, you know, and I'd have some people upset with me. So that, I think, is the issue with, or one of the issues with free speech, is that it's, you know, it can be done anonymously now.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah.
And I think, well, especially as you know, like in those trading forums, things can devolve pretty quickly when there's a lot of like anonymous tips, right, or whatever. But I mean, do you think it's sometimes worthwhile to engage in those things, as long as the other person's going to have like a reasonable conversation?
Like to try and change the mind, you mean?
Yeah.
I think I'm a big fan of. Do you know how they teach in law school? So they ask questions, right? So I don't know if all law professors do this, but I've been told by people who've gone through law school. And actually, when I did my degree in psychology, my PhD in psychology, I had a lawyer on my committee. So it was all psychology professors, then one lawyer. You know, they ask questions. So like the Socratic method or whatever, like they'll be asking questions of the class. So they assume that you've done the reading that you're supposed to do when you walk in the door.
Yeah.
And so then they'll ask you like, so, okay, Hugh, so what do you think about, you know, the Johnson versus Tennessee case from 1859? Do you think that would apply to today's, you know, big tech questions or whatever? You know what I mean? Like so they're asking you to apply that. And so I think that can be really useful also in anything like with trading or whatever. You say, okay, like for example, one of the traders in my forum now, he's got the system and it looks pretty good to me. And he's like, well, I want to like improve the win rate or whatever, you know what I mean? Mm-hmm. And, you know, and I want to apply this sort of money management system to it and this and that. And I'm like, well, why do you want to improve the win rate? Like, you know, it's already 75%. It's, you know, it's already seems to be pretty good to me. Yeah. Like, and if you run the numbers of the risk management system that you're looking to apply to this, it's going to look really good. So why not just, you know what I mean? Why not just do that? You know, we get stuck into these little things. And I think there's a problem too with trading. We can get emotionally attached to our strategies. We spend so much time working on them. Mm-hmm. It's really hard to throw them away. Whereas if we have like 100 strategies and we see one that's just not working anymore, we can just see you later, you know, goodbye. But if we've only got two and we're emotionally invested, that's tough. That's really tough to be able to put it aside, because you know, what else are you going to do? You got to start from scratch again. So I think it's really important to always be testing and looking at new ideas. For me, anyway, that's important. So yeah, I think the best way to get someone to that point is to ask them questions. You know, like kind of lead them. And women are really good at this. Like, you know, some women will say, "Yeah, you're wrong," but that's more of a guy thing to do, right? Like, "Oh, you're an idiot," you know. I mean, you haven't even looked at it, have you? You know. Whereas women will say, they'll kind of this subtle way, like, I see. That's interesting. So what do you think about this? You know, and they're trying to get you to get there on your own, sort of thing, you know. And I think that's a more useful way than to say you're wrong. You know, just kind of gently get them to come to their own conclusions that perhaps, for example, focusing on win rate is not the be all and end all for your trading, right? Maybe you're already there. Maybe you're okay with a 75% win rate. Maybe that will work for you. And maybe instead you can just now start to look more at your risk rules. Yeah.
Yeah, no, totally. Along the lines of like this whole censorship thing, and you know, some posts getting taken down or whatever from the various platforms. Do you think that's going to lead to like more second guessing in the trading world? I think it will. Like if people aren't free to like fully express what they're thinking about in trading or in any other part of their life, like I think that might start to make them second guess their own opinions, their own beliefs, and maybe not, go forward with a trading system when it obviously works, but they're just second guessing themselves. Do you kind of foresee that happening with all this?
Well, it could be, or they could just go off and break off in like their own little enclaves or whatever, right? Away from the mainstream. It could just fracture the groups. So, for example, there are videos on YouTube, and you can show this clearly, where the numbers have been they've been fudged.
Yeah.
Okay. So there's been videos on YouTube where they've reduced the down votes or the thumbs downs or whatever. You know what I mean? And stuff like that. In some ways, like doing stuff like that is just going to point out to the quote minority that they're, that it's obvious that they're in the majority. You know what I mean? Like that just like at a certain point, like for example, I'll give you an example. Okay. Let's say, where I live, a lot of people have young families. Okay. In Australia, there's a bit of a population boom at the moment, right? Lots of kids everywhere. If you have a daycare, you have a license to print money. Believe me, you will never have, like, at least in the next 10 years, you're going to be full, and you're always going to be full, right? You just need more rooms, right? You need more teachers. Okay. So if you have a daycare center, you are loving it. If you were trying to, like, let's say you had a bookstore, okay? And in your bookstore, you decided that you weren't going to have any books, any children's books, or any books about parenting. Okay, because you just think the world's overpopulated. Like, you don't want to encourage that behavior.
No.
Okay, you know what I mean?
Yeah.
What's going to happen to you if you do that? What's going to happen to you? Well, if you live where I live, where there's a lot of kids and a lot of families, like they're not going to go to your bookstore. Like if word gets out that you're anti-kids and anti-family and anti-population or whatever, they are going to boycott you, right? And I think the same thing could possibly happen with what you're talking about. If we're talking about the same thing, where you have these big spaces on the internet where they're obviously fudging the numbers, pushing people out that they don't that have the wrong ideas or the wrong point of view, and they don't want them in there, and they want to keep people that are, so it's a little tight echo chamber where everyone kind of has the same thoughts and stuff. What's going to happen is that group, whether it's the majority or the minority, they're just going to break off, and they're going to start their own bookstore that's just for families. It's all kids books and all, you know what I mean? I think it's like drugs. What happens when you make drugs illegal? What happens?
Yeah.
Well, the price just goes up, right? I mean, I think so. Making certain thoughts and statements illegal, in a sense, and suppressing them is just going to push them somewhere else. I think it's the prohibition of ideas. There's a big group of Christians in China, right? It's illegal. There are religions in China that are illegal, like Falun Gong. There are these groups that have been made illegal in certain places, and they still exist. There was the Underground Railroad in the United States, right? When slavery, they had the Underground Railroad. So I think that's how I see it. I don't know. Maybe I'm wrong. Maybe people will just second guess themselves and go, "Oh shucks, I was wrong," or whatever. Why was I thinking that? But I think especially in the United States, like the people in the United States are historically have been very independent thinking. It's so funny. I love living overseas because you get this other perspective of the States, and they say, it makes me laugh every time when people say things like people in the States are so simple-minded, or they never travel, they never go anywhere. Like in Australia, people used to travel everywhere, right? I see so many Australians in Europe and stuff.
Yeah.
Every Australian winter, they're up there in Europe. But yeah, so, they would say things like that. And yet then they would like put on their blue jeans, invented in the United States, to be on their iPhone, invented in the United States, watching The Simpsons on TV, laughing that night, The Simpsons, from the United States. You know what I mean? Like reading the New Yorker on the weekend because they're so educated. You know what I mean? Like it was just bizarre to me that there's that disconnect. But I think in the United States, they're very independent. People have this there's this culture of independence, the cowboy, the Lone Ranger sort of thing. And I think that even though there is currently this free speech clamp down and there's a censorship culture going on right now and people are getting canceled all over the place, I think it's going to eventually, it'll kind of restabilize and get to homeostasis where it's, the First Amendment isn't under threat. As funny as that sounds. I think it's going to eventually get there, I think it will. I think it'll eventually get to the point where, kind of balances back, but we'll see.
I hope so. I definitely hope so. I mean,
me too.
Unless you're in California, then you're in law school.
Yes, in California, that's right. California, totally, the People's Republic of California, totally different place.
Exactly. Yeah. All right, cool. Thanks, Walter.
See ya.
Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I like to tell dad jokes at the webinar. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, you do a NFP report podcast. I mean, not podcast, but a webinar every week, right?
Yeah.
And so
every
I just want
month,
to go over the psychology behind that, how you've seen that maybe change over time, and how psychology plays into trading that report.
I'm not the only one that looks at the markets this way, and I'm sure you've done the same. Where we look for surprises. So, for example, as we're recording this, about a week or 2 weeks ago, somewhere between a week and 2 weeks ago, the Reserve Bank of New Zealand said, they're going to try and clamp down on the housing bubble over there in New Zealand. And so the New Zealand dollar just totally tanked, right? Mm-hmm. That's the kind of the same thing with these news trades. What you can do is you can get ready for a trade. I mean, pray and hope that there's a surprise. That's basically it, right?
Yeah.
And so you're right. Like back in the day, 10 years ago, non-farm payroll was kind of like the most important thing. Now it's more about, is there inflation, or who's the first reserve bank to start raising rates? That's kind of the big thing now. Jobs are still obviously very important for the US dollar and on jobs reports for all currencies. And actually, I remember when I first started trading, the jobs report wasn't as important as what Colin Powell would say, because he was talking about whether or not they're going to go and invade Iraq for the second time back around 2001, 2002, in that area. So, it changes. The importance changes. It used to be that the non-farm payroll would pretty much set up the US dollar for the whole month. It's not really the case anymore, but you can still find surprises. The reason why we do it, I think, is because it's fun to get traders together. I like to tell dad jokes at the webinar, and that's kind of what we do in our downtime. And then because I find trading rooms to be absolutely boring.
Yeah.
I've had friends that have done them and try to get me to do them. I just refuse because I don't want to sit there for hours, right? But we usually do sit there for about 45 minutes or an hour to see if it sets up. So yeah, you can do this with any sort of surprise. The Swiss National Bank had the surprise on January 15th, 2015 with Frankengeddon, right? When the Swiss franc totally appreciated so quickly. So they happen all the time. The flash crash, all these, if you had a tsunami or something, like these things will happen. They don't have to be economic news reports. But obviously with an economic news report, you have the advantage of actually knowing when it's going to happen. So you can kind of set it up. That's basically it.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah, for sure. And these things change over time, like you said. Like one report might not be as effective or at finding trades as another one, and then they could also do things like change how they calculate GDP, right? And that can
really you're absolutely right. Yeah. So the consumer price index has been changed in the U.S. and they don't. I think they don't look at fuel and food now as part of your everyday costs. Which I find interesting.
Because nobody's like paying for that, right? So
yeah, no one has to go anywhere or eat anything, right? Yeah. And right now, like if you talk to the people who are deep in the economics world, like the hedge funds and stuff, in the fundamentals, they're going to talk about bonds, which is fascinating, I think, because what we're seeing in a lot of emerging markets like Brazil, you can even look at China and here in Australia, what's happening is there's signs of inflation. And so if it keeps going this way, the reserve banks are going to have to do something, and they're probably going to have to raise rates. Mm-hmm. In Australia, they decided to spend $4 billion in the bond market to try and push it down, and it's not working. A day. $4 billion a day. So it's really a kind of a tricky thing. I believe that we've seen the bottom of the interest rates, like as in December 2020, and I think that like they might be going up for the rest of our lives. So it's interesting times actually, and it'll be really interesting to see who blinks first, which central bank starts to ratchet up rates first, and I think that'll be make for some really good trends in currencies over the next 2 or 3 years. So if things go as I think they will, which I think is, we're going to start to see central banks have to reckon with inflation, which is showing up right now in the bond market. But I mean, that's all fundamental stuff. Doesn't really matter. I can still just look at the charts and trade it. I don't like going into fundamentals, but you kind of have to if you're trading the news, like you said, if you're doing these news reports.
Yeah, sometimes you can get way too deep into it and like get into things that don't matter, right? But yeah, I mean,
exactly.
Same thing in the US. Like the rates can't go any lower, and if they raise rates, then they're going to be paying all this interest, right? So yeah, it's going to be tough. Let's see.
It's a tricky thing. And like the turtles, they never looked at that. They just when they taught those guys how to trade, they didn't like that wasn't part of the deal. They were just supposed to wait for the 55-day breakout. You know what I mean? Like yeah. It's so funny. It's so funny that like and you can watch TV all day, and literally every single person that comes on that business channel, that the CNBC or the Bloombergs of the world, or the what's it called over here, Sky News, like they have Sky News in Europe, in England too, but it's just like every single person that comes on can have a different opinion about what's going to happen. That's the whole fundamental world. Whereas it's great as technical traders, we don't really have to. We can just say no. It's actually made a new high. Like that's the highest price we've seen in the last 20 days. Mm-hmm. Like there's no argument there. You know what I mean? So that's what I like about technicals.
Yeah, the price can't lie. Like if it's going to go up, it's going to go up, right? So
yeah,
cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Yeah, money's never been cheaper. Let's get the bids rolling,
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I know we talk about psychology here a lot, but what do you think is going to be the big investments for the next 5, maybe 10 years? What do you see as things that are going to trend up or trend down or whatever?
That's interesting. I'm going to be contrarian and say that I think the US dollar is going to appreciate from 2021 to 2023.
Okay.
So over the next 3 years, I think the US dollar is going to go up in value, believe it or not. I also think that gold is probably going to go down or stay about where it is, which is also probably contrarian. A lot of people are bullish on gold.
Yeah.
I think that XRP or Ripple will go up because I think that there will be a world financial system based on blockchain, and I think Ripple is the most likely candidate for that. So I think that'll go up in value because there'll be a lot of demand for it. Because right now, like if you send money, a lot of people may not know this from trading world today because it's so easy to fund your account. It used to be back in the day when you funded a trading account, you'd have to go into the bank, you'd fill out this long form, and you would have to wire the money from your account to the broker's bank account, right? And make sure that you had all your numbers correct so they, accredited your account and all that, right? Because your money's like in a pooled account, right, at the brokerage. What I didn't know then, though, is that was basically like an SMS for banks. So they were sending text messages.
That's why it never works the first time, right?
Yeah, exactly. Exactly. It never worked. Yeah. So anyway, so with blockchain, it'll be a lot safer. It'll be instant and all that stuff. You don't have to wait for the text message and all that. So I think it's already headed that way. You can see it. The only real question is where. So I would say if there's three things I would say. Oh, and I should mention the difference between gold in your hand, silver in your hand, and buying paper gold, paper silver. So I think that physical gold and physical silver may actually go up in value, but there's kind of divergent markets now. And I think the physical gold market is different from the, buying it on a chart sort of thing. So that's important too, to note. So I think that gold's going to be choppy. I think that Ripple will probably go up quite a bit in value in the next 5 years. And I think the US dollars is probably going to go up as well. And I know everyone's, called the death of the dollar now, but I think it's probably going to go up between now and 2023. But we'll see. We'll see what happens. Yeah. What about you?
I think they're really printing right now, right? So in the next 1 or 2, 3 years, it's still going to go up along with the stock market, probably.
Yeah, I don't know.
Yeah. Well, for me, I think crypto is a good one, especially Bitcoin. I think it's a network that's really it's almost impossible to hack at this point. So I think a lot of people are going to use that as a store of value. And then I think a really underrated crypto, not underrated, but an underrated asset or a category of crypto is going to be like the privacy coins. So people I think are going to get more into like how to transact privately. Yeah, I agree with you. I think gold and silver are still going to be controlled. So they're just going to go sideways, even though they should be worth more. And then I think commodities are going to be a big one, especially like food stuff. I think those are going to start increasing in price because there's going to be some sort of shortages around the world. So could be something to watch out for. Obviously not advice. We're not giving advice here, but just some opinions.
Yeah. That's interesting. I think you're right about, I think specifically water is a big one. So in those countries like the US and Australia, where you can actually buy rights to water, I think that's big. In fact, I have a friend who trades that. Like that's his job. He trades in the water rights stuff and the water market. And it's very illiquid, in Australia. It's not a very big market, but yeah, I think water is the key. I think water is one of those commodities that's going to be a big deal. I think you're absolutely right about that.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
I know we mentioned the stock market earlier. I do think that the stock market, probably stock markets, many like UK, Germany, Australia, US, I think they're probably, by the end of this year, by the end of 2021, I think they're probably going to start to roll over. That's my belief. And that by 2023, the highs will have been obvious. Like, I think it's going to roll over. So I think there's a little bit of a, like I was saying that the US dollar is going to go up in value. I think with that, the stocks will go down. So right now what we see is US dollar values, the purchasing power of US dollars is down. So the stocks have to go up to stay the same, right? Right. I mean, it's kind of like, so I think the opposite might happen where if the US dollar becomes more valuable, the stock prices might actually go down, even though like relative to the US dollar, you might argue that they're the same or maybe a little bit less in value, but so I don't know. I just think my sense is that it's starting to roll over. And so, yeah, we'll see what happens. But I think the inflation, like the interest rates, are going to be key. I think that's the important thing. And as currency traders, we should always be looking at those anyways. Like interest rates are really one of the most important things for the currencies that you're trading. But certainly, I think that may be kind of the first domino to fall, and then we start to see these sorts of things unravel. We'll see, though. It's going to be kind of fun to see where are the cryptos, where are the stocks, where does the money flow when money starts to get more expensive? Because when you think about it, anyone who's alive today has never seen money this cheap. It is so cheap to get money. In fact, that's what they say here in Australia at the auctions for property. Yeah. The auctioneer will get up there. It's really big. It's really like common for Australian properties to sell by auction. They don't all, but a lot of them do, much more so than in the US or in England, right? And so they'll say things like, money's never been cheaper. Let's get the bids rolling, And so I think so though this money has been so cheap, and so where's it been flowing? It's been flowing into stocks and artwork and cryptos and, classic cars and all these places. And so then when it starts to get more expensive, what happens in property, of course, where does it move from there? Where's it going to start flowing? You remember years ago when we had the obvious carry trade where money was flowing from Japan, where it was cheap, to London, where it was relatively expensive. Yeah. And you always had this idea of money moving to different geographic locations. Well, now it's cheap everywhere. Yeah. So people are just sinking it into what they think is going to be good, which is cryptos, property, shares. I would argue even the artwork and even like trading cards have been inflated in value because of this. You know what I mean?
And those things like NFTs, right?
Yeah, exactly.
Yeah. Well, like when my parents bought their house, I think the interest rates were like 17% or something like that.
Yeah, so exactly. Yeah.
It is super cheap compared to that, right?
Yeah, people don't know. If you're like 30 years old, you have no idea about what happened in the 70s. You have no idea. Yeah. I had mentors who lost everything in the 70s. These are like older, getting up there in years, and they tell me stories about the 70s. Like, it was crazy, man. I lost all my properties. I lost 3 businesses. Like, you know what I mean? It's just. I guess with the virus and everything, I guess we kind of had a taste of that in a way. It's different to like seeing like all these cars lining up to get fuel, and and all the loans you get are like 20%, 19%, and all that stuff. So it's a different sort of a story, and everyone's out of work too. That was the 70s, and people forget about that.
So read up on your history, people.
Yeah.
All right. Thanks,
That's
Walter.
the lesson. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. There's also a lot of value in reviewing what you're doing and finding joy in the process itself.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, everybody has some sort of addiction in some small or big way, I think. And how do we harness that and like turn it in a different direction or a more positive direction instead of like a negative direction? What do you think about that?
Yeah, that's really good. That's a really good point. So you kind of see that with people who are like addicted to eating when they get depressed or sad, and then they end up getting addicted to exercise or something like that. I think what you want to do is think about break down the chemical thing that's happening at a basic level. And this is going to be super basic, right? And I'm not a neuroscientist, but I know just enough to be dangerous. And I'm married to someone who knows a lot about the brain. So let me tell you that. So let's talk about this. You do something that you're addicted to. Okay, what happens in the brain? It doesn't matter if it's like sex or food or danger. Like you like to do dangerous things like skydive or surf big waves or hunt crocodiles or whatever, something that's like really crazy, right? Rock climbing without a rope, whatever that's called, free climbing or something. Yeah, so stuff like that, right? So what happens in the brain is basically you get a flood, or drugs, you get a flood of the happy chemicals, right? That make you really happy. All right. So what happens over time is you kind of get used to that. So you build up a tolerance. Do more drugs, you have to do scarier rock climbs, you have to surf bigger waves to kind of get to that same level. If you know that you want out of that, you could do a 12-step program, right? Those are pretty popular, and you know, they have a pretty good track record, right? But if you don't want to do that, you could shift your focus into something that you want to be really vigilant. So with trading, you could just shift over, let's say you really want to start following your rules of trading. You're like a random gambler, right? You see some tips, you read an article on FX Street or whatever, you see one of your videos and you say, oh, Hugh likes Bitcoin, so I'm going to go in on Bitcoin or whatever, right? Like you're all over the map. So what you can do now is just focus on this specific idea of rewarding yourself, of getting that flood of happy chemicals in your brain when you do the right thing. So what you do is you reward yourself for following your trading rules, right? That's a really good way to shift on, and it works with anything. So like you would reward yourself for sticking to your diet, right? So what do you like to do? Well, you like to eat. Okay, well, what do you want to do? Like, how do you want to reward yourself for sticking to your diet? Well, maybe you go out and buy yourself a new dress or a new set of golf clubs or whatever, right? So you're just you're trying to move the focus away from what you've sort of used as your crutch to what you want, right? To what you want to change to. So like procrastination is a big one. A lot of people procrastinate. What you can do then is you just set up this reward system and go, look, if I don't procrastinate, on this thing that I'm supposed to do every day, 5 days out of the next 7, then I'll buy myself a movie or whatever. Like, I don't even know if you can go to the movies anymore. We can't over here. I don't know if they're open over there or what. Like, I don't know what's going on. But yeah, something like that, or buy myself a book, or a trading course, or take myself to frozen yogurt. If I follow my diet Monday through Saturday, then on Sunday I can go and get a frozen yogurt, right? Or something like that, right? Just treat myself. So you kind of want to make it into a game where you win the game by doing the right thing. And so, because we fall into those habits. The other thing is to have someone to be accountable to. And that's why the 12-step stuff works, because you get people who are like your sponsor or whatever, and they're like, okay, like, you have to fess up to your sponsor and say, no, man, I actually had a drink yesterday or whatever, right? So yeah, having someone that you're accountable to every week that you talk to and you say, okay, this is what I did, this is what I'm working on. So it went well 3 out of 4 days or whatever. So yeah, that's how I look at it. Do you have any ideas on that?
Yeah, I think, that's obviously really important to have a little bit of that dopamine hit, I guess, right? When you do something right. But I think there's also a lot of value in reviewing what you're doing and finding joy in the process itself. So are you maybe trading in a way that's too stressful for you? I find this a lot. Like, people want to day trade. They want to they have this idea of like sexy day trading, right? Like making $2,000 a day or whatever. But in reality, most people would probably do better just swing trading. So I think just reviewing the process, do you find the process fun? Is your filling out your trading journal, could it be easier or could it be more fun? I think that's a really good way to entice yourself to keep on going, because you find the process enjoyable, or you maybe have a trading strategy that, has a small stop loss and a big winner. Some people like that. Some people find that fun, or some people like having consistent winners that are just maybe 1R, and some people enjoy that. So I think there's something to look at there also.
Yeah, and I think you bring up a really good point about the process. And one of the things I learned at the last FX Street conference that they had in Barcelona, I don't remember, 2013 maybe or something. No, it was maybe 2011. It was a while ago. Anyway, one thing I was thinking about there, which really, there's a lot of great traders. There's a really cool conference. I wish they still had it, because it's, a lot of the presenters there, they would come back like in future years, because it's kind of small and it was really good. Anyway, one of the things I was thinking about there was this idea of embracing the unknown. And I was thinking about like how as traders, that's our whole job, and so different to everyone else who they go to work the same road, they walk in the same door, they say hi to the same people, they sit down at the same desk, like they do all this stuff every single day. It's so boring. The same meeting on Monday, whereas traders, it's so cool that we actually have this different thing. Like, I might not take a trade today. Maybe I will take a trade today. Maybe my other trades I took last week are going to be losers today, or maybe they're going to cash out, or, and so we get paid for uncertainty. So whereas some people know they're going to get that paycheck every month or every 2 weeks or whatever it is, we don't know that. Like you're saying, like part of the process, I believe, as traders, is that we get to embrace the uncertainty. We get to say, you know what? I don't know what's going to happen in this trade. I really don't. I know I have about a 46.5% chance that it'll work out, which means, of course, I have a 53% chance it's not going to work out. But it's kind of cool knowing that, I've put it in. It's in the platform. We're going to see what happens now, and I'm either going to get paid for this or I'm not. And a lot of people, they don't want to do that. And that's why, your job is to be a trader. That's why you get this job, because a lot of people don't want to do it. So, so I think that idea of looking at uncertainty as a good thing, and we try so hard to make the uncertain certain, like we'll add a new indicator, or we'll do another back test, or we'll try something to make it so that we feel like we have more control. We won't take this trade, or we will take that signal, and yet it still is just a roll of the dice. You just don't know what's going to happen on any given trade. You really don't. And if anyone doubts that, you can do that in your journal. Write down how likely it is to work out and see if you're right. See if you actually have the ability to tell those trades that are more likely to work out than others. Give it a scale, give it a 1 to 10 rating, and see. That's a really good way, because people trick themselves into thinking that they can tell the best trades, right? You just don't know usually.
And I think that's really the crux of trading, right? Like, if you can find joy in that uncertainty, then I think that's the best place to start, right?
Yeah, absolutely. It's just let it go. It's like when you teach a kid how to ride a bike and you push them for the first time, and they're just like, they don't have their training wheels and they're like kind of wobbly, That's how I feel like every time with the trade. I'm just kind of like pushing it off and just, okay, let's see where this goes. We could skin our knee, or we could have like, I did it. You just don't know. It doesn't, and it still is fun to win. I mean, I always say things like trading is boring.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And that's just because, like, the process of it is boring. The process of fishing out where should I take a trade next and that sort of thing, that's pretty boring and pretty, like, to me, kind of obvious. Like, I don't try and convince myself anymore when I look at the charts, like, oh, well, I probably should take this trade because of this or that. I usually know, like, straight away. I look at the chart and I go, yep, within seconds. Like 2 seconds, I can tell looking at a chart if it's usually really obvious. So in a way, it is boring, right? But it still is exciting, because you don't know the outcome, the uncertainty. That's what you get paid for. And people don't want that. People want certainty. People want a paycheck. And so that's what's cool about trading, is that we get to get paid for taking on risk where other people won't. And so, hey, enjoy it. It's fun.
Yeah, I think it's also a skill that not too many people can master. So when you do have that successful trade, I think it's a confirmation that you're doing the right thing also, right?
Yeah. It's very rewarding, isn't it? I mean, like putting all the time in that you've put in, Hugh, putting all those years, all those back tests, and getting to the point where you can make money is it's like someone can't take that away from you. It's like having a degree or something. It's like, you did the work, you got it, and so now you're there. And it's really kind of fun having that and knowing that you're there. It doesn't mean that you're not going to have a losing streak. It just means that you did it. It's a really nice sense of accomplishment, and most traders don't. They never get there, which is sad. They never get there. They're always looking for something better. They're never really locking into anything, and it's a bit sad, really.
I guess it's kind of like farming, right? You could think of it that way. Like, if you're a farmer, you know how to grow some food. You always have food. You won't go hungry, and it's a similar thing in trading, I think.
Or hunting.
Hunting.
Yeah, exactly. Yeah.
All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice. And I think it's just a matter of what works best for you, right?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I'd be interested to get your opinions on this. Default mode network. It has some implications in terms of our ego, our ingrained personality. And some people say that if you interrupt that default mode network, you can change your personality, or you can, do certain things with your psychology. What do you think about that?
Well, I've never heard that term before. So you're saying like we operate from like the basis where we operate that's kind of our homeostasis or something? Like we're
yeah, that's,
there?
In my personal opinion, the science behind it is a little circumstantial, but the idea I think is sound. But yeah, it's like certain parts of the brain or certain networks are activated when we're not doing something like really cognitively strenuous, and we're just kind of relaxing.
Oh.
And apparently those parts of the brain light up. So they say that that's the parts of the brain that are our true selves or whatever. Right. So have you seen anything like that?
No, but what I'm aware of in terms of like personality, because it sounded like you were touching on that. Like they do say, like we used to think in psychology that they say your personality is formed by the age of 5, and then you're stuck. That's not true. And like you've probably noticed, like I lean towards the there's a guy in Cornell University. He might be dead now, but there was a psychologist, a really famous one in Cornell University in New York, and he talked about how like you are different in different environments. So like you have like you have your wife, right? And you're in a certain way with her. Then you've got your like bigger family, like your mom, your dad, her mom, her dad, maybe your kids or your cousins, and then it kind of widens out to your workspace, to your social friends, to people that you kind of know, acquaintances, maybe when you go and watch a UFC fight or something, or whatever, or like go to a casino, you're different in different environments. And so he talks about like these circles that get bigger and bigger, So I think that makes a lot of sense, because I've noticed personally, anecdotally, so I would say in my life, I've noticed like I've made conscious efforts to be a little bit different. You know what I mean? And the easiest way I know to do that is to move someplace, because nobody knows you. Yeah. You know what I mean?
Yeah.
So I believe that personality is very malleable. I think the research supports that. That sounds like a little bit more, what you're talking about is a little bit more in neuroscience, and they probably do, if they've researching that, like they would be using functional MRIs, so they can see where your brain's lighting up and stuff. So I don't know much about that. Like if, let's say you go to work and you go a certain way every day, you walk down the street a certain way, you catch the bus, a certain bus at a certain time, you get off the bus, you walk a certain way to work or whatever, or maybe you drive your car, you drive your car to work, you drive the same route every day, unless there's a detour or something, you park it in the same general area, you know what I mean? Like, so I always try to mix it up. Like I try not to, where I live, it's really easy to not go anywhere because everything is right here, and it's a really small community, right? It's like living on an island. It's a little tiny peninsula, and there's like, you're surrounded by water, and like you're kind of like stuck, right? Unless you really make an effort to get off the island. Which luckily there's several ways to go. You can go by by car over a bridge, or you can go by boat or whatever. Like it's so easy for me to like walk to the store the same way, walk to my kids' school the same way. Like, you know what I mean? But I think it's good to break it up and do different things so that your brain is somewhat uncomfortable. And that might be kind of what they're talking about. I don't know.
Yeah, I think so. Have you seen like Dr. Michael Parsinger's work on the God helmet? Well,
but I've heard about it. I've seen like a video or something. Tell me more.
Yeah. So he had a similar concept he called the binding factor, and he measured a 8 hertz signal, I think, that went from back to front of your brain. It kind of just cycled, and he found that if you use magnets to interrupt that movement, you can kind of get certain effects. Like some people became a little bit more aware of things. Some people improved their psychic abilities. Some people saw God, right? And like 1% of them. So I think there is something to interrupting that signal, or some signal that's in there, right? And that can be through doing your activities differently, or putting magnets in your brain or whatever it is. But I think there is something to it for sure. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, like to me, the general takeaway would be, that's fascinating, by the way. Thanks for sharing that. Because I heard about the God helmet, and I just saw like a quick video or something about it, or somebody talking about it.
You can actually get it.
You can buy it?
Yeah.
Oh, right.
So.
Oh, cool. Yeah, I'm a sucker for those sorts of things. But I think the general takeaway would be like, break it out, like change your habits. Like, it's so easy as people to just fall in the same habits. You know what I mean? And it's thinking habits too. It's not just like physical things like walking to work or whatever, or, walking to the store or riding your bike to the store or whatever. Like it's also thinking habits too. When you become a parent, it's like you see these patterns in your kids' thinking and you try and show them like there's another way. You don't have to always look at it this way. And I think we forget that we can do that for ourselves too. That's why it's so useful to have like a trading accountability partner, because they can often point out things from a different point of view,
Yeah, totally.
And so, or a mentor or whatever, like somebody that says, well, you don't always have to look at it this way. And just like you don't always have to act a certain way. You don't always have to have this sort of personality. You can have a different personality. Like when I was a kid, I was extremely shy. And the only reason why I was able to somewhat break out of that was because I started doing magic shows at a young age. So I had to learn to suck it up and get in front of a crowd, even though like when I'm 6 years old, it's only a crowd of like 5-year-olds, like 5 kids or whatever, but it's still like, I had to learn that, and we can do that with anything. We can do that with thinking habits. We can do that with physical habits. So yeah, I mean, that makes a lot of sense. It is tricky though. Like what the God helmet gets into, it sounds like, is that, these things are almost like hardwired. So it takes something drastic to kind of like break the connection and force it to go another way. Right.
Yeah.
So that's very interesting to me. I suppose that I would say that there might be other ways, like the nuns that had the brains of, what do you call it when they Alzheimer's.
Yeah.
So they had Alzheimer's brains when they scanned them, but because they did so much reading, meditating, and like just gardening, simple stuff, almost like they were in a Zen monastery, like these nuns, even though their brains look like normal Alzheimer patients, they were normal functioning. So, I think there's ways that your brain can, the whole plasticity of the brain thing where, the connections can go around, because Alzheimer's is basically like plaque in your brain, like black spots where it's like your brain, the connections have to go around, the neurons have to go around for you to function normally. And apparently, if you're very mentally active, that can happen. I think that's the case also with meditation. Like people that are lifelong meditators, I think it's the same sort of deal where, you start making these connections. Perhaps, I'm not read up on the research, but perhaps that's the sort of thing that would maybe give you a similar effect, to what you're talking about. So
yeah, no, I totally agree. I think there's a lot of different ways to get there. Like you could do meditation, you could do whatever, the God helmet, you could do psychedelics, you could do all that kind of stuff. And I think it's just a matter of what works best for you, right?
Yeah, exactly. Yeah. Like so many things. Yeah.
Yeah. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I think from my perspective, one of the really underrated things is lowering your expenses every month.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what's like the most underrated thing that will get you to become a full-time trader that people really don't talk about? I know everybody talks about the trading system, they talk about the psychology, right? But is there something more basic or maybe more advanced that you would say is super important also?
For me, I would say it's probably the way that you approach risk, because risk has been the thing that is probably, like, getting risk wrong has been the thing that probably has led to more traders quitting than anything else. It also has led to more traders getting frustrated more than anything else, I would say, because it takes so long to get a certain, to build your account to a certain size where your goals are, basically. So, for example, everyone always says risk 2% or risk 1%. Some strategies, if you risk 1%, you will go broke. Like that's too much. Some strategies, if you can handle it, you can go more than that. Some traders might be comfortable doing something completely different. Like you take, let's say you have a $100 account, okay? And so in your $100 account, you risk $10 a trade or $15 a trade, something like that. So let's say on a $100 account, you risk $15 a trade. You might be able to build that up to $1,000 rather quickly. It also might blow up the account, right? And if it blows up the account, you say, well, it was just $100, I'll try again, sort of thing, right? And then when it gets to 1,000, maybe you decide that instead of risking 2%, which would be $20, right? You decide, well, I'm going to risk 5%. So you're risking $50 a trade. Again, this is a little bit more than what most people are used to, but it could build your account to 10,000 rather quickly. And then when you get to 10,000, maybe that's when you're looking at 2 or 3% or something like that, right? Where it's closer to sort of the normal accepted level that everyone talks about. So that's a way that you can kind of get some fast traction. And I know a trader that did that. Like he always started with a really small account. And as soon as he got to about 100 grand, he would cash out and start all over again. So even if he only started with 5 grand, he would just work it up to 100. And then once he broke 100, he knew that something in his head would mess him up. So he would have to like cancel it out and do it again. And sometimes you start with that little $2,000 account, or whatever, and it blows up. And you're like, well, that's all right. I made 112 last time around. I'll try another $2,000 account or whatever. So, so that's another thing. Like you can do things like that. You don't have to risk 2% of a $1,000 account. Like things like that. There's a lot of things like in society that you just don't question. We don't question it. It's a fact. And that's one of the things in trading. It's the same thing. It's like everyone sort of just says 2%, 2% or 1%, 1%. But I don't know that for some traders that's too much, depending on their system parameters, and so for other traders that's never going to get them where they want to go. So
True. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. I think from my perspective, one of the really underrated things is lowering your expenses every month. So like, I think, the faster the lower your expenses, the faster you can cover it with your trading. And, maybe you buy a used car and you pay it with cash instead of having a loan or whatever. And same thing with your housing situation. So I think that's a really underrated thing that most people don't look at. And even if you don't want to become a trader later on, or you just want to have a business or something like that, I think that really is beneficial for that also. So something to consider.
Yeah, that's so true. Like that's why there are a lot of traders in places like Thailand and Indonesia and stuff, because well, one, you can live wherever you want. And two, it just naturally, cuts that. And actually, I think those are really good time zones to live in too. Like Bali, Thailand, like over in that part of the world, it's really cool because London session starts like in your afternoon, And so in the evening, you get New York. So it's kind of like the really heavy volume in Forex is for Forex traders, or even if you're trading like New York Stock Exchange, still that's like, you know what I mean? That's kind of like the early evening when that fires up for you. So well, it depends on the time of year, but so like you could easily catch the open of the New York Stock Exchange if you lived in Thailand. So absolutely. And for people in your part of the world, it would be, Mexico or Costa Rica or places like that where there's a lot of expats living there, and it's easy to reduce your expenses. Colombia or whatever, depending on how. I think
Thailand was $500-600 you could get away with a month or something and still live pretty well.
Yeah, I think it depends on
where you live.
Yes, my wife lived there, and I think we went back maybe would have been 7 years ago. We went there, and she was amazed at how much more expensive it was. But we went to like the tourist island Koh Samui, which is really touristy. So I think at the time they were getting a lot of Russian and Chinese they'd had kind of discovered the island, and so prices had gone way up since when she was there. But look, if you're in Bangkok or something, yeah, you could definitely find a cheap or just slightly off the beaten path.
Yeah.
Like I met some Australians over there that were kind of doing that. They're like, yeah, we don't live in Koh Samui anymore. It's too expensive or whatever. But yeah, so what you're saying is definitely doable. Like there's beautiful places around. It's the same with Bali, or Indonesia. Like there's areas of Indonesia. You can spend a lot of money if you want to, or you can just go slightly off and find.
Yeah.
Like I think Bali still has there's tons of places there that are cheap. And if you go off Bali somewhere else, it's definitely cheap,
Yeah. I've seen some guys with those villas, and I don't know what they're paying, but it was kind of ridiculous, like $2,000 a month or something. And
yeah,
it's like
totally.
Yeah.
Yeah, totally. Like we rented a place there, and it was like you had a driver, a chef, a pool. Like it was my family with another family, and it was like, dude, we were in heaven, man. The girls, like the driver takes the girls to go shopping, the driver takes me to go surfing. Like it was amazing. Like it was so cool so I can see where, it could be tempting. It depends on where you're at in your life. If you're in a situation where it's easy for you to pull up stakes and go. But yeah, you're definitely right. That is an overlooked thing for a lot of traders, is thinking that you have to make a certain amount of money to go full-time trader. So obviously you want to have some money saved and set aside and all that. But the other part of that is you also want to look at, can I reduce my expenses so that it's easier for me to get to that full-time level. Yeah. Mm-hmm. I would always say have 6 months at least, though. Like if I was working a job and trying to work trading and trying to trade on the side, and I wanted the trading to take over my job income, I would definitely want to have 6 months just in case I have expenses that come up or a nasty drawdown for a couple months or whatever, just so I don't, you need that little cushion, I think.
Yeah. It never goes as well as you think, right?
Yeah. It's never as good as Forex Tester.
Yeah, exactly. Yeah. All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
So the bank sent him Forex signals. He would take the bank signals, but he would disregard their profits. And he would just hold for 3 to 1.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So I had a trader write in, and he was talking about, he had this issue where he was comfortable with his trading system, he's comfortable with his risk, all that was good, but he had the problem of not holding his trades to the point of taking to the take profit point. So what would you say to that? Like if someone came to you and said, look, everything's good, it's just I keep pulling the trigger and dumping my trades too quickly, and I'm not going to the full where I wanted to take profit at the beginning of the trade.
Yeah, that's a tough one, right? I mean, you have to put something in place that's going to almost force you to stay in the trade, right? Either have an accountability partner, or you have a protocol where you just shut off the computer or something, or just consciously force yourself to, stay in the trade and not create a policy, write something down that says, I'm going to stay in the trade. I'm going to stay in the trade until the stop loss get hit or the take profit gets hit, right? Or something like that. But yeah, I mean, it's really a matter of discipline, I think, but it's tough to institute for sure. What do you think?
Yeah, no, I agree. Like, I would recommend reading, if you can, get your hands on the Nick Raj book, Everyday Traders, Scott Barlow chapter. He's the only Forex trader in there, but the other guys are all basically systematic stock traders, which is what Nick teaches. Nick's a great guy, by the way. I've met him. He's a really cool guy. That interview with Scott really changed my whole thinking on that, because the guy was talking about this exact thing. He's like, look, it's up to me to make sure that my system has the right risk to reward, right? And his was 3 to 1. So he always, no matter what, did 3 to 1, held to 3 to 1. I tried to interview him, but he doesn't want to be interviewed. But yeah, so yeah, and he was interesting because he actually offloaded the signals to a bank. So the bank sent him Forex signals. He would take the bank signals, but he would disregard their profits and he would just hold for 3 to 1. So it's really, really interesting guy. So yeah, I think that you need a trading accountability partner helps. You could also just say, hey, look, if on Monday I take a trade and I say that I'm going to wait for it to go 2-to-1 and I don't, then I can't trade for the rest of the week. Right. So you have to like, you know, set up this, like you're saying, like sort of reward system. Where it's like, if I do what I'm supposed to do, then I can take another trade this week. Right.
Yeah.
Or this day or whatever it is. I mean, it depends on the time frame. But yeah, so you're basically forcing yourself to get to a point where you are doing what you said you would do in your trading plan. And if you're not, you start to lose your trading privileges, right? Like you're saying, trading accountability partner can really help with that. So yeah,
I think there's a tendency to like want to rely on like an app or like a special system or something like that to, you know, solve these issues. But I think at the end of the day, you really have to face yourself and say, hey, buddy, you're not doing what you said you would do. So I think that's what it comes down to, right? Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah. And I have a like a chart, like a spreadsheet, and it shows like when your risk reward shifts and you just shift a little bit over, how much more likely you are to have a terrible drawdown, you know, or blow up your account. And it's fascinating to see how close most of us, we trade right on the edge, right? So if we start moving our 2-to-1 system, it starts becoming a 1.75 to 1 or 1.65 to 1 instead of a 2-to-1 because we're so antsy to take profits. It's bad news. Like it's amazing how quickly you can fall off the cliff if you're not on the right side. So that's another thing that can like, you know, impact your logical thinking. Like, okay, if I don't stick to my 2-to-1 exits here, I'm probably I've literally tripled the likelihood that I'm going to blow up my account. This is bad news, right? So yeah,
maybe post it on your wall or something in front of you.
Yeah, exactly. Yeah, that sounds like a great idea. Yeah.
Okay, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
So Richard Dennis, the most famous trader in the world, who took whatever it was, $400 from his dad, and he went to the Chicago Mercantile Exchange, I believe, and took it up to whatever it was, 10 million or whatever.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you think about edges? How long do they last? Do you think they last forever? And maybe let's talk about the different types of edges also.
Yeah, you know, my thinking has actually changed on this. It'd be interesting to hear what you think. So, okay, so I still do think that the simpler the edge, the more likely it is to maintain over into the future, like to be robust. But I think there's kind of two things going on here. And as traders, we confuse the two. Thing number one is, did your system stop working because, you know, it ran its course? The markets are now changing. There's high frequency computerized trading or whatever, and whatever people blame it on. It's usually the computers, though. they usually blame it. I mean, if you look back, they were blaming it on the computers in like the 80s, you know, and they're still blaming it on the computers. I think it's funny. But so there's that. And I think that's real, especially if you have a lot of variables in your strategy, like, you know, 5 indicators, and then you have all these multiple settings that you can choose for all the indicators and all that. Like that's probably true. That's why I try and go as simple as possible. However, the other side of it that I don't hear a lot of people talk about is whether or not you, as a trader, have you decided that the experience of this drawdown you're in is to such an extent that you've decided, no, it doesn't work anymore. That's a different question, right? Like, let's say someone hurts their leg. So my daughter, she sprained her ankle the other day, and, you know, she couldn't walk. She was on a trampoline. She sprained her ankle, and she couldn't walk, couldn't do this and that. And it's kind of like a pain threshold. If you think of it in trading, there's like, we all have this internal pain threshold for drawdowns. And once it gets to a certain point, it's like, nah, I can't do this anymore. It's broken. I got to scrap it. I got to change it. I got to do something. I can't keep going down this path. And it's the same, I think. It's sort of like a pain threshold. At a certain point, someone will just say, I can't walk anymore. Or, I can't move, I can't raise my arm, or whatever, whatever the pain issue is, wherever that pain is. And so that's a separate question. So but that's under your control, right? Like you can map out your risk using Monte Carlo spreadsheets and all kinds of even formula to determine, the likelihood of certain drawdowns given your risk parameters. So that's totally under your control. It's the other side that you're talking about that we usually blame it on, which I think that's real. I think it does happen. I think the best thing you can do is make your strategies as simple as possible. And so in statistics, we talk about degrees of freedom. How many degrees of freedom do you have? That's basically how many different parts of your strategy do you have. So the simpler, the better. And one thing I think that humans have an advantage over systems and computers is generalized pattern recognition. I'm sure that it's possible to program it, and that with AI and all that stuff, neural nets and everything, you can do it. But I think that's not within the realm of most retail traders to have that ability to get some sort of program that even approximates what you can do as a human, just looking at the charts and going, okay, I see this is, basically a bullish trend, but it's a severe pullback or whatever, I think those things are kind of hard to program in. So I think you do have an advantage, I do believe, as a retail trader if you use that, which is sort of the big picture, That's what I think. I think that there's two things to think about. And I've seen strategies that I thought were good across the board. I've seen them not work on certain pairs and things like that. Yeah. So I've come around to that. So like the classic is, if you're trading a reversion to a mean strategy, the CAD Swiss is a really good pair to use. If you're trading a trend trading strategy, the Euro Yen is a very good pair to trade. And so there's certain, certain pairs have different sort of profiles. And so that's something and Aussie CAD is another one. Aussie CAD is really good with reversion to the mean strategies, not so good. I mean, it obviously trends, but it's not as good as, say, the pound yen, the Euro Yen, the pound New Zealand, the Euro New Zealand, things like that. So I do believe there is something to it in terms of like systems that break or systems that like certain markets. That's any programmer can tell you that. I've moved a little bit more toward that side, whereas before I used to say, no, they work on everything. But I've seen like my daily kangaroo tails don't seem to work very good on the US dollar yet Japanese yen. I mean, it's just not. The data since I wrote my book I think bears that out. Maybe it'll flip and start going good again, but from what I've seen, it's not there. So that's what I think. What are your thoughts on
Yeah,
this?
quick question before I talk about it though. Like, have you seen strategies that work for a very long time?
Well, yes. The classic would be the turtle trading system, right? Yeah. And what happened though is that in the 90s, I think in the mid to late 90s, it just had a really bad stretch of like 6 years or whatever. And so, people stopped trading it, right? But it actually, number one, it worked on the lower time frames, but everyone was doing daily back then. And so, that's the classic. I've seen articles on that where people actually look at it and go, okay, wait a minute. So this was working 70s, 80s, early 90s, and it kind of really went bad. I don't know exactly when it was, around 93, 92, something like that, 94. And then it kind of kicked in again, like in the early 2000s. So it might've been like a 5 to 10 year, 8-year range where most traders would give up. And in fact, if you look back at Richard Dennis, so people forget Richard Dennis was he was like the Warren Buffett of the 80s. Okay. He was the most famous dude. Not that I was a kid, right? But he was a famous guy. He was being interviewed like Buffett is today and Charlie Munger, right? Now they're investors, whereas Richard Dennis was more of a trend trader. And so everyone kind of piled in on his style of trading and his students, of course, and then his students taught other people, it kind of spread. And so the argument was that just too many people were trend following, it wasn't going to work anymore, right? That was the argument. In reality, trend trading still works. And I think those rules still work as well. Maybe they have 5-6 years of downtime, and he quit his fund. So Richard Dennis, the most famous trader in the world, who took whatever it was, $400 from his dad, and he went to the Chicago Mercantile Exchange, I believe, and took it up to whatever it was, 10 million or whatever, from $400. He quit his fund. A lot of his clients withdrew their money, and he lost a big chunk, like 50-60% of his money that was in his fund. And then he was like left with like, what do I do now? And he started looking at different time frames and stuff like that. So even he had that point that he wasn't really aware of until he got to it, and then it kind of, it kind of collapsed. And that's I guess my main point here is to think of that. What is your point? Mm-hmm. Is it 20%? Is it 25? Is it 30? Is it 10? Where is that level where you're going to go, oh, this isn't working anymore? Because then you can work around that and backwards engineer around that so that you don't hit it, or you're unlikely to hit it. Not that you don't hit it, but that you're very unlikely to hit it.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, that's a good example, because I think from my impression of the trend trading method that he used, it's a very long-term. You have to look long-term, and you have to be able to stomach those big losses, right? Like there was going to be those big losses. So yeah, I could see where that still works. And I know somebody who still trend trades, and he has a fund and everything. So yeah, I think that's a really good example. But
and you can. I'll put the rules. The rules used to be freely available online. If people are interested in the turtle trading rules, we'll link them up in the show notes for you guys. You can download the PDF. One of the turtles put it out there because another one of the turtles was like selling not the exact rules but similar rules, and so he thought that was ridiculous because apparently that was the one turtle that did make money.
That's right.
So he was like, I think that confidentiality agreement like expired or whatever. Yeah. So he put them out for free, and then somehow they disappeared again off the internet. So I'm sure you can find them, but I'll link them up in the show notes so you guys can download them if you're curious.
Yeah, cool. Well, I agree with you totally. And I think maybe I'll refine your idea a little bit more. I think when I was thinking about it, there's probably 3 different types of edges, right? There's the system, which you talk a lot about. There's the conceptual edge. So maybe like you're the type of person who likes to trend trade, like we're talking about. And maybe this one trading thing isn't working, but you can tweak it a little bit because you know how the system works and how the market's changing. And then you can conceptually stay with trend trading, but you have a different system, maybe. And then the third thing is, like you talked about, the personality edge. Some people, they no matter how hard you beat them down, they always come back. And I think that is a huge edge in itself. We talked about persistence in the past, and if you can come back from losses, and I think, or knowing when to quit also, like you said, is a good one. So I think those 3 types of edges, like I think the personality edge will last forever as long as you stay with that personality. But if you, I don't know how long a system edge will last. I think that is the most likely to break. But the conceptual edge is, I think, kind of in the middle where, it could break, it might not break, but it's more likely to stay than just the system itself, I think.
And really, your view of the markets really must match your system. So that's why it's so hard to take a system out of the box that someone else teaches you. And it's better for you to kind of modify it and sort of mold it into, something that is like, almost feels like you built it, even though, we all pull from other ideas and stuff like that. I think I mentioned before, I used to look at the new moons, like, and all this stuff. And then, so I was looking at new moon. This was like 2003, 2002.
Like
and I was sorry?
Sort of like astrology, kind of.
Yeah, kind of like that. So it was like it would mark these points where it was a new moon, and the euro was meant to have a reversal there. And I was like, wow, this is amazing, because I was kind of into GAN back then and stuff. And then after I wrote my book, I did a talk down in Melbourne, down in Victoria in Australia. And afterwards, they these talks, they have a dinner or whatever. And so I was at dinner with like 10 traders. And one of the guys there, he's like, hey, I'd really like for you to look at my book. And I'm like, oh, your trading book? He goes, yeah. I go, what's it about? He's like, it's like financial astrology. And I'm like, dude, I'm like, I'm sorry, man. I'm the last guy you want, to look at that. I'm really sorry, but, so, I mean, I can see why people get into that. Cause like I said, I was totally into it, but that's not something I could trade today. It's just not, right? I think it's really critical, and it's understated in a lot of cases because people tell you, hey, buy this strategy, take it and make money. It doesn't work that way. You really need to know, like the turtle strategy. You could take the turtle strategy and ruin it by risking too much. And the turtles didn't risk a whole lot. Some of the best rules in that turtle strategy that you guys can download in the show notes are the rules around risk and how to avoid terrible drawdowns. And they talk about being fully loaded and have a maximum number of trades, which actually maps on pretty well to Forex traders now because of our reduced leverage. So before it wasn't really much of an issue because you were getting, 1,000 to 1, 500 to 1. And now that's changed. Even down here in Australia, we've now swapped over to what the States had for years and what Europe has had over the last couple of years. And then now we've got it as of 2 months ago here. So our leverage has really been reduced. So it means rules like that make a lot of sense. Like getting to the point where you're like fully loaded, you have the maximum number of trades on, you can't go any further. So I think I would encourage people to check those out. But yeah, it's absolutely true that you are the edge in a way. I think that's kind of your point, right? Like, and so how do you maintain that? Well, that's a lot of what we're talking about here in this podcast, right? It's the psychology stuff. How do you maintain the edge? Like, how do you keep convincing yourself? Because that's the thing about trading. Like, I'm almost convinced that it's not really the traders that have the gangbuster strategies so much as it's the traders who are super resilient and able to keep with it even in the darkest hours. Like that almost to me is like the thing that, pulls people along and keeps them in. Because like I know plenty of traders that now they're away from trading and now they're doing multi-level marketing or real estate or whatever, but like 5 years ago, they were fully into trading and reading every trading book they could get, but they hit a certain point and they had to give up. And so I think that resilience is so critical. So I think it's exactly what you're talking about. It's like you are the edge in a way. And the way that you interact with your drawdowns, the way you interact with your strategy. I like to for example, I like trading trend trading strategies, but I also like trading strategies where the market's consolidating and bouncing off like a consolidation box. Like those are my two favorite ways to trade right now. And so my biggest question, and they both make sense to me, right? Like it's not like I go, trend trading is the only way to go. No, sometimes the markets don't trend. So you got to get to that point as a trader. You have enough strategies in your tool belt, so to speak, that you can whip them out when the time is right, and that you're not going to push it so hard that you have that terrible drawdown that makes you rethink whether or not it's still working. So it's really an important point that you made.
Yeah, that's true. And I think sometimes we're afraid to step out of the box, right? We have to conform to these like trading systems that you see on the internet or you see on these courses or whatever. And going back to your point on astrology, like I totally blew that off also until maybe like a year ago. And then I had one of those like birth chart readings, and not that I would trade astrology necessarily, but it opened my mind more to it, because when I saw that birth chart and the woman told me the reading and everything, I was like, wow, this is actually kind of a science, right? It's not as out there as I thought it was. So, that's something that you look at, and some people actually trade stocks like that because they look at the chart of the stock, the birth of the company and stuff like that. So I don't know, something I might look into, but don't be afraid to try something different and something that resonates with you.
Yeah, and that openness that you have, that some psychologists call openness, the openness to new ideas and new inputs, that I think is something that plays into your ability to trade uncorrelated strategies. Like if you're not very open and you're just locked in the idea that you must trade the trend, right? Or that you must risk 2% or whatever it is, I think it's going to be a little bit more difficult for you as a trader to have a diversified suite of trading strategies, right? Yeah. Because it's not enough to trade different markets. That's not going to work. It will not work. They're too correlated. They move in concert. It's not a good way to go. You feel free to try that, and go down 10 years down that path and get back to me and see what you think. But it really doesn't work. I can tell you that. And the correlations are there. So I would say, having that ability to be open to new ideas is great. And it is interesting to me, like astrology is one of those things that is so old. Like a lot of you think of Western medicine. Western medicine has changed so much. Like we don't do bloodletting anymore. You don't go into the hospital and they go, oh, what you need to do is let that blood out. Let's crack your skull. Yeah. Yeah. Whereas astrology, it's kind of been the same thing for a long time, and it's kind of like covered up and poo-pooed in science and whatever. And so I think it's something that you should definitely look into. If it's something that strikes you should definitely take a look at it, because there's a lot in the trading world related to it as well. And we've had presidents. Apparently, Ronald Reagan, his wife was so into it and convinced him that he would only have certain meetings with the Russians when the stars were aligned and all this stuff. Like he had certain dates for his speeches and all that. Like it was all basically on Nancy Reagan's astrologer. So I don't know if people know that. So it's Reagan's not that long ago,
Yeah.
Yeah.
And
so yes,
it's been around for what, centuries or thousands of years, maybe, right? So
yeah.
somebody has to use it and it has to work for somebody. Otherwise, it wouldn't stay around. So
You would think so. Yeah.
Yeah.
Yeah. Exactly. Yeah.
all right, cool. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
No, I think it can be really easy to get infatuated with like a 1 hour pattern or something that you're looking at.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what are some trading psychology rules that you never break?
The biggest one that I have is to allow, like when I take a trade, I need to allow myself to have a loss. So when I take a trade and I'm calculating out what the risk is on the different accounts, I always know, okay, this is money that could be gone. Like, you know what I mean? Like I didn't always do this because I used to like keep moving. One of my biggest things when I was early in my trading was I would move the stop over and over. So if my stop was at 121.00 and I saw it coming down, I would move it to like, okay, 120.80. Okay, 120.65. Like I'd keep moving it and I'd stay up all night watching it, like hoping that it would reverse, during the New York session or whatever. So when I go into a trade, my mindset, in fact, I'll calculate the risk as such. Like, for example, if I have an open trade and then I have a new signal, I will calculate the risk of the open trade as a loss, so that the new trade is calculated on that balance, not on, what the equity, where it is now or whatever, right?
Yeah.
So I mark it as a loss. Open trades are marked as a loss before I do my new trade. So that's the biggest one, is that I count risk capital as goodbye. Now I hope for the best. I don't think the worst. I try to be as positive as possible. I try and envision scenarios where if I'm a drawdown, it'll go in my way and stuff like that. So that's definitely true. But I consider that like goodbye money. Okay. And then it's a pleasant surprise if it goes the other way. The other one is that revenge trading was the other big one for me. So like I would like go, oh man, that bloody Euro yen took me out again. So I'm going to get back at the Euro yen and I'll double down or whatever, like martingale style trading or whatever. I used to do that sort of stuff. Not as bad as the moving the stop loss. It was there. It was definitely there. It was almost like I thought of each currency as like a person and I want to get back at it. I don't know if you've had that. So yeah, so those are the biggest ones. The other thing is really important for me is I don't want to trade drunk. And I don't want to, because I made that mistake too. Like, coming home late on Thursday night. I used to actually drink quite a bit, like in my 10 years ago or whatever, or 15 years ago. I hardly ever drink now. But so there was a problem where I would come home and I'd be like bored. I didn't have a TV or anything. So I just fire up the trading station and have a look and go, hey,
that looks good.
Yeah, that looks good. So that was terrible too. So don't trade under the influence. I don't move my stop losses. So related to the trading under the influence is to be in the right mindset. So you can use like meditation, hypnosis. You can use different devices. Like we talked about the neurophone. You can use binaural beats, to get yourself into alpha or theta, so that when you're watching your charts, you're in a good mindset. I really don't like to be upset. If I just got in an argument with somebody or, the kids are just driving me nuts or whatever, I don't want to sit down and start, locking in trades into my platform at that stage. I really like to have more of a pattern of relaxing, going through my meditation, and then sitting down. And it's good because where I live, I don't really have to look at the charts until about 10:30 in the morning, really. I mean, it's just the Asian session, not much is going on, interbank market's over. So I kind of set my trades up in the morning by around noon, maybe, depending on the time of year, the clocks change in Europe and the US. But basically, early to late morning, like mid to late morning, so I have time, I know it's not the case. Like some traders, if you live, for example, in California, or Washington State or whatever, you might wake up and go, like I got to go see where my trade is because New York is raging, right? Even if you get up at like 5:30 in the morning, New York is on, and you got to go and see. And so I understand, like might not necessarily have that luxury. It's really hard. Some traders, what they'll do is they'll just have a quick look and then they'll go through like their meditation or whatever. So that could possibly work as well. But so those are the big 3 rules. I'm curious to hear what yours are though.
Yeah, it's funny you bring up the trading drunk thing too. I had that a couple of times, and yeah, that's one of mine. And it's more about the mindset that you're in, right? Not necessarily drunk, but at least good mindset, a little bit of meditation, using the Inner Balance app or whatever. Second one is like a 2 strikes rule. So I allow myself 2 strikes on one trading idea. If that blows up, then I stop doing that. And then the third one is... Can we dig into that real quick? Can I just ask, so when you say 2 strikes for a trading idea, is that like as simple as I'm going long the Swiss yen, and so I went long yesterday and I got stopped out, so I can go long today again on another... Is it like the same signal, or is it, I guess what I'm asking, is it different signals or the same, you know what I mean? Like how does that work? Yeah, I guess it depends on the strategy, but it's more of like, the same direction on the same pair.
Oh, okay. Yeah. Okay. Got it. Yep.
Yeah. And then the third one would be just taking a break when I feel burnt out.
That's a big one. That's a big one, man. Like people were listening. That's a really big one. I don't have that problem like I used to, but I did have that problem. And the biggest thing that got me was when like the smartphones came out. And yeah, man, I had this little, like, it was almost like a square phone. And it had like early MetaTrader on it. And like I would be out to dinner with my wife and I would be looking at the phone, like checking my trades going. And then I would micromanage them. And it was a big one. And now it's even worse now. You have even more abilities to take trades and manage trades than back then. Back then it was actually kind of a pain to do it. I'm talking about
all that stuff. Right?
Yeah, exactly. Yeah, like back in 2007. Yeah, like back in that area, 2006, 7, I think is when. So now it's even worse, obviously. But yeah, and you're like, what happens when you lose your stylus and all that stuff? Yeah, like that's crazy. Yeah, totally. Yeah, that's a big one.
Yeah, and sometimes I might take a break for like 2 weeks, a month, sometimes. But whatever it takes, right?
I have a question. Do you find that like if you're away, let's say you take a long weekend, well, actually, where you live, the markets close Friday morning, right? Or Friday afternoon. Yeah. Friday afternoon, they're closed, right?
Yeah.
So 5 p.m. New York time, basically. So do you find, let's say that you had a long weekend and you're traveling and you don't see the charts. Let's say you leave Thursday, right? So you don't really see Friday, what London or New York did. And then you get back, say Tuesday. So you don't see Sunday or Monday. So you're kind of missing like 2.5 days. What do you find when you get back and look at the charts on that Tuesday? Like if you have like a break, if you've had a break that long, or you just didn't get a chance to see the charts, what do you find?
Either I'm in tune with it from last week, or I'm like totally out of tune. And then in that case, I might not trade for the whole week. Right. But it just depends.
Yeah, I find that the fresh eyes is a good thing. I just feel like you kind of get it's like you get these theories in your head about certain pairs where they're going and stuff, and then when you watch it, you can almost make it fit. Like you go, like, oh, I think the euro's on a tear. It's going to keep going higher. And then like I wake up in the morning, oh, it's gone down. Well, that's just a pullback, right? Whereas like if I come back like 2 days, like a long weekend is the classic. Long weekend, come back, don't even check or anything. And then I look and I go, oh, that wasn't a pullback. That was a double top or whatever. You know what I mean? Like I just find that the fresh eyes, it's almost like the less time I have in front of the screen, the more obvious it becomes what the market's doing. And I don't know if other people have that or what. It's just really easy, I find, to get into that thing where you're using the evidence of the chart to fit your theory of what you think is happening.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So I think it's good to have multiple theories. Like, well, it could be a pullback, but it could be a double top if it does this. Well, it could be going up, but it could have just actually reversed if it did that, or it could be consolidating and it could be bouncing off the top of the box, but actually it could also be breaking out right now. So I don't know. I was just curious how you had, like, what that had done for you, because it really is obvious to me. If I spend time away from the charts, boy, it is such an advantage because I'm not stuck. I'm no longer stuck in the, in those ideas that I was a slave to before. So
yeah, no, I think it can be really easy to get infatuated with like a 1 hour pattern or something that you're looking at, and when you're really trading the daily chart, but you get stuck on that and you're like, oh, it has to go because this and this and this on the 1 hour, and then you step away and you come back and you're like, oh no, that's just noise. And
yeah.
So
it's true, man. It's so true. Yeah.
Cool. All right. Thanks, Walter.
See ya.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Are you taking responsibility for yourself and your trading, or are you trying to shove it off on somebody else, or are you trying to get the quick answer, like that kid who copies off of you in class or whatever in elementary school?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so I had this question from a trader. He's saying, hey, Walter, where do you think the euro is headed? And so, sometimes people will ask this, and it's kind of funny to me because, and I understand, I used to be there. I used to actually, after work, call my buddy up on Skype, and we would look at the same charts on Ninja Trader. We look at the pound yen, and we would look at the 3-minute charts, and we would sit down and we would literally say, okay, are we buying or selling? Like, it was just, we knew that we were going to take a trade. Like, we just didn't know which direction, right? And like, I get it. And it's funny to you and it's funny to me because you can speak for yourself, but I'm pretty sure you don't look at trading like that anymore. It's more about sitting around waiting for the opportunity to present itself than it is to sit down and have to know, well, I'm a trader. Where's the market going? Like, that's not, you know what I mean? That's not your job. That's not necessarily your job. So it's one of the things I try to impress on traders is that you don't have to know where the market is going at any given time. In fact, I usually have no clue. It's only once in a while that I look at it and I say, I see what's going on here. This possibly could set up a really nice trade if it does A, or if it does B, but if it does C, then no, right? So it's almost like you're thinking of probabilities. Like, let's say, it's not like when you're driving. If you're driving and you see a car and he looked like he stopped and it looks like he's going to turn across your lane, but he doesn't have his blinker on, so he doesn't have a signal on, so you don't really know if he's going to turn or not. You gotta like kind of anticipate. Go, well, he looks like he's slowing down, like he's going to turn, right? And it seems like he thinks he has enough space because I'm farther back, so he's just going to turn in front of me. So I got to kind of like pull back a bit and make sure that I don't slam into this guy, right?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And that's kind of the way I look at trading. It's like, I look at the charts, I go, no idea. Oh, okay, this one. Maybe if it does this or this, possibly a trade. But if it does that, then definitely no trade. Like, do you know what I mean? So it's kind of, you got to think of probabilistic thinking. And the false duality error strikes traders just as much as it strikes everyone else, which is this idea that if it didn't do this, then it must be this, right? So if I'm an NFL general manager and we draft a quarterback in the first round and that quarterback doesn't win a bunch of games in his first year, then we got to kick him to the curb or trade him or whatever. He's no good to us. You know what I mean? But it might not be that. It might be that your team sucks, right? It might be that your coach sucks. It could be that the quarterback sucks, and maybe he's athletically gifted, but mentally, you know, he doesn't have that resilience that you need as a quarterback, because the world comes crashing down when you keep losing, right? So there's a lot of things there. It's not just, that's why you have, like, here's a famous example, and I know I'm getting into the NFL world here, so a lot of people are going to tune out, but Steve Young was a quarterback. He played for the USFL, which was a rival league to the NFL for a few years, and then it folded. And then he went and played for the Tampa Bay Buccaneers, which at the time was one of the worst teams in the history of the league. Okay. And the San Francisco 49ers had Joe Montana, mostly considered probably the best quarterback or one of the top 3 quarterbacks of all time at the time. And they traded for Steve Young on this terrible team. And literally everyone except the coach, whose name's Bill Walsh, everyone thought he was loony. Everyone thought it was a waste to trade for this terrible quarterback. But Joe Walsh saw a really good quarterback just in a bad team, right? And I feel like, you know, as traders, that's something we got to do too. You know what I mean? Like, we got to look at it, and it's not just an either or. It's not just, you know, this guy, Steve Young, sucks or he's great. It's not that. There's other influences. So when we look at the charts, it's not just like we're going to buy or we're going to sell. It's more about, does it look like there's going to be a signal here, or possibly a signal very soon? If there is, okay, I'm going to get on the edge of my seat and keep an eye on it. And that's all I am. So I'm just an opportunity seeker in the markets. I am not a person who will know whether the NASDAQ is going up, or the S&P 500, or the euro. Like, I don't know. I only know if it fits a certain pattern. Yeah. So what are your thoughts?
Yeah, no, totally. I mean, to unpack that a little bit more also, like, I think it shows that this person doesn't want to take responsibility sometimes. I mean, it's good to ask questions, obviously. You should do that if you're a beginner. And yeah, that's a beginner question. And this might not be the case for this guy or this person. But I think it also shows they don't want to take responsibility for their results, right? They kind of want to ask somebody, oh, what's the stock tip? What's the Forex tip? Which direction is the NASDAQ going, right? And then they want to take a trade based on that. At least that's the way I read it when I get these emails. Yeah. So if that's the case, then I'll just hit delete, because they're just looking for a simple answer. But if they ask, hey, how can I, learn a certain pattern? How can I backtest something? Then I'll answer them and say, oh, this is how you do it. This is how you get started, or whatever. But I think that's a big part of it. It's like, are you taking responsibility for yourself and your trading, or are you trying to shove it off on somebody else, or are you trying to get the quick answer, like that kid who copies off of you in class or whatever in elementary school. So I think that's a big part of it also to consider. Yeah,
and to your point, the way trading is set up now, you can just copy other. Like, if that's what you're doing, there's plenty of platforms out there like eToro or whatever, where you can just link up your account to the other traders, and when they take the trades, you will. So you don't have to worry about it. It's like signals on steroids, where you don't. So if that's your thing, you can go ahead and do that. That's fine. But if you want to learn how to trade, I think one of the big aha moments is when you get to that point where you're like, I don't have to take a trade, right? Yeah. Even traders who specialize in one market. I'll tell you a quick story. So there was this guy in Africa, best trader I've ever seen in my life. Amazing, right? And every year he would sit down and go, which pair am I going to trade? And he traded the pound yen for the whole year. And that's all he would do, is either buy or sell the pound yen all year long. So he was a market specialist. He made so much money that his country didn't want to let him out. They wanted to take his money and tax him and all this stuff, because, he could have been a significant contributor to the economy, and he wanted to get out of Africa and go up to Europe and take his family. So they were playing games with him, not allowing visas for his family and stuff. It was a big mess. But yeah, so that's, and so even him, my point is, circle back around. My point is, even this dude who just traded the pound yen still had days where he sat down, fired up his computer, he looked at it, and he said, I don't know. I don't know. It's okay to say that. It's totally cool. You don't have to know. You don't have to know as a trader where it's going to go. It's totally cool to, in fact, that is my most common response when I look at the charts is, don't know. I just don't know. So that's cool. That's totally cool, man. So yeah. Yeah.
Quick question on that. How did he determine which pair he wanted to trade?
I don't know. Like he would just like, I don't know if he was reading the news or he just had a feeling like, I think the pound yen's going to kind of, skyrocket this year.
Yeah.
He was a guy I met through Colin. Do you remember Colin Jessup?
Yeah.
Who sadly passed.
Yeah.
Awesome Canadian trader. Really cool guy. Traded for 3 hedge funds. Amazing dude. He was like, I met this dude in Africa through Colin. So it wasn't really, you know what I mean? And he was like totally legit, totally kind human, all that stuff. And they had worked out that they were trying to get, I think, from Africa, instead of going straight to Europe, they're going to go to Dubai or something to try and get out of town. But it was like I said, like the government was like holding back family members and stuff and making it really tough on him because they wanted a piece of the pie. They saw what was coming through his account, which is crazy. Which is crazy when you think about it. But I mean, it just points out like you don't have to be a trader that trades 35 markets like I do. You can just trade one. You can be a market specialist. It's totally cool, man. Mm-hmm. Totally cool to do that if that's your thing. Yeah.
Yeah. I mean, there's a wide range of ways to be successful. So find yours. All right. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I need to grow my account faster. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, how's it going?
Hey, good.
Pretty good. Yeah. So I had a question from a trader, and he was working on his back testing, and he was like, how many trades should I get in a certain amount of time? Right. Because he was doing daily trades. And so one of the things I think, like, I know I get a lot of people, like when I post videos on YouTube and stuff, people will say things like, oh, yeah, but you only had one trade in the last 6 months. I'm like, yeah, well, it was like one pair. You know what I mean? And that's something that I feel like is misunderstood. The relationship between how frequently you trade and the trading system, it really depends on how many markets you're following. But more than that, you have to actually have the data for those. So I'll give you an example. Like I used to trade a lot of reversals back, before I wrote the Naked Forex book. I was mostly doing reversals, right? Mm-hmm. And I was trading a lot of dailies, a lot of daily charts before I moved to 8-hour and 12-hour and stuff. One of the things I realized was that I thought in my mind that these are simple strategies. They work across the board. And to some degree, that's true. But actually, things like daily kangaroo tails, reversal kangaroo tails on the yen didn't work. And the big shadow, my friend Colin, he texted me or emailed me or whatever years ago, and he was like, dude, I've been trading the Canadian dollar and the big shadows have been wiping me out this year. You know what I mean? Mm-hmm. I think that was just kind of like a yearly, like an aberration, like, over the year. I just want to talk a little bit about the relationship between the number of trades, how the frequency of trading a system, and your back testing. Because sometimes people will go, well, I back tested these kangaroo tails on the Euro daily, so I'm going to trade it on the Euro pound, the pound yen,
yeah.
The New Zealand CAD and so forth. And you really need to get the data from the other markets, don't you? Like you really do need that data. And you also need to realize that you can easily bump up the number of trades you take simply by adding more markets, provided that it works on those markets, right? Yeah. So is there anything that you can, add to that or your experience in terms of back testing versus number of trades per week, per month or whatever?
Yeah, I mean, you know a lot more than I do, but just from personal experience, it's like I just backtest until I feel that I'm confident that the strategy works, and it doesn't necessarily have to hit a certain number. Because if you do like a daily chart or a weekly chart, it's going to be way less trades than like a 1 hour chart, right? So for me, that's just what it is. But you obviously know more about this. So what do you say about like minimum number of trades?
Well, see, the underlying question really is it's a veiled question, isn't it? What they're saying is I'm not getting enough trades. What they're really saying is I need to grow my account faster. You know what I mean? Like that's okay. Do you know what I'm saying? Like that's how I read that. Like when people say Like that's not enough trades. So like when these people come in and they say things like, hey, that's really great that you have these kangaroo tails, but dude, you only have, a certain number per week or per month or whatever, that's not going to work for me. You need to trade the 1 hour charts or whatever. What they're really saying is I need to increase my returns. That's what they're saying. They're not really like, they want action. And I understand that. I was the same way when I first started trading. Like I used to sit down and think, where's the market going? Instead of sitting down to look at and asking the question, is the market offering a trade? Like now when I look at the charts, I just think, is there a trade or not? And usually the answer is no. But what I used to think was, well, I'm a trader. I have to sit down and I have to know where the market is going, right? So I think there's a mind shift there as you get more experience. But I also think that you might want to look at other ways of increasing your returns if that's what you're really asking, which I think is mostly the case. Not always, but a lot of times that's what traders are saying. They're saying, I need to grow my account faster. This is going to take too long. What's going on here? I don't like this sort of thing. So money management is a way to do that. Changing your exits is a way to do that. So looking at risk and exits and how those interact with your equity curve is probably a much more fruitful area than trying to multiply the number of trades you take by, trading the 5-minute charts or whatever. Yeah. Like to me, that's, what I mean? Like
it rarely works.
To lower. Yeah, exactly. I mean, there's a lot of things working against you. We've talked about that in other podcasts, but yeah, so those are kind of my thoughts,
Yeah, no, totally. I mean, some people could think also about like pyramiding, right? I used to trade this one thing where if it got close to the target, then I would have like 3 orders. And then I'd have the alert on my phone and I'd wake up in the middle of the night, which was not good. But, it did multiply the account. It's just that I couldn't handle the swings. But if you did that in a more measured way, then that's another way that you could make more money out of each trade, right?
I used to do that too, and I wrote articles about that because it's the opposite of what most people do. Yeah. Most people take more trades when the market goes against them because they think, oh, it's an even better deal now, right? Like stock traders are famous for that, averaging down or dollar cost averaging, I think is what they call it. But where you just keep buying no matter what, assuming it's going to go up. It's kind of similar to the idea of, you're buying the euro, you think it's going to go up 300 pips and it falls 100 pips, so you buy some more, right? But most traders don't do the opposite, where you keep stacking orders as it gets closer to your target. That's a great way to do that. You can automate that too. I used to do the same thing, get up in the middle of the night and have to manage it because it's scary when you have, let's say you have 3 lots on, and then once it gets halfway to your target, and then you've added 2 more, and then it gets a little bit more, you get 2 more, and then 2 more, and then before you know it, you got 9 lots on a trade where it was 3 lots, and then it's like, so it can get a bit scary like that, but it can work too, and you can automate it, and there's lots of tools out there for that sort of thing.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
But I think overall, this idea of I don't have enough trades could be related to where you're at as a trader, in your development. It could be really a veiled question of how do I increase my account size faster? And again, there are other ways to do that other than taking more trades. But I would definitely, if I were a new trader, I would definitely want to stay away from trading the lower time frames. To me, that is the tricky thing to do. To try and add, more trades by trading the lower, like the 15-minute charts or whatever, to me there's a lot working against you there. So I would definitely steer clear from that.
Yeah, I mean, there's so many things like the rollover and, just the spread can vary so much, all that kind of stuff, right?
Yep. Yeah, exactly. Yeah.
Okay,
News, cool. All the commissions, all that stuff. Yeah.
Yeah, exactly.
Yeah. All right.
Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
If we look at the success rate of traders, there's a lot of places say like 90% of them fail, right?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, this might be kind of a weird one for most people, but I got to thinking about a person's sense of identity and how that relates to trading. So do you think that a strong sense of identity, personal identity, makes a better trader?
It depends. Like most thing in life, I would say like a lot of times you'll see these gurus and they're like really strong personality, especially if they come from the institutional background. Like a lot of the guys that were on the floor, they're physically imposing people. Yeah. Like they're used to being kind of dominating, and like in the floor, that was important, right? Because you had to, like, you wouldn't be heard, you wouldn't get your orders filled if you didn't catch someone's attention, right? So some of those guys can be, and then also just when you trade a lot of money, there's a lot of ego involved. There's a guy actually right around the corner from me, and he had a big, huge fund. And I don't know if you heard about it, but there was somebody in January of 2020 that was putting in a lot of orders, a lot of short orders. He went short the CAD yen, like short the indices and stuff like that, like put on huge orders, a lot of options and stuff, assuming that the market was going to tank. This was in January 2020, where most of these orders, and people were like, who is it? Who is, like, there's a lot of noise, like, who's putting in this mystery trader or whatever. Well, it turns out it's like my neighbor, not my neighbor, but he's around the block. He's literally like a block away, right? Yeah. And a much nicer house. And anyway, he and his wife both run hedge funds, and apparently he had he bought a bunch of mask companies too. Did all this in January 2020, assuming that that we were going to have the big crash, right, from the virus. And so I found that fascinating, right? That he was like, he basically went all in, with his fund, and he was like, and it cashed out, and he made like 2,400% or something like that. It was extraordinary, right? Because obviously the market did fall in February and March in 2020. So after all the news came out and the markets finally kind of panicked. So that kind of thing, and George Soros is famous for that, taking these really strong positions against. So when you do that, that's an ego feed. You know what I mean? Like that can really mess with you. And what that means is later on, you might get to a position where you're just completely convinced that that's the right side, and maybe you're not on the right side, and maybe you go full bore like Soros and Andrew Barry, I think that's his name, the guy from The Big Short, and my neighbor guy. Like these people can get really, that I think that can be a problem when the ego gets involved. I'm not saying that those people have that. I'm just saying that's definitely potential, right? That's definitely a potential for that when you have these big, huge wins. It's like the old adage, they say the worst thing that ever happened to me when I was a trader is the first trade I took, or the first week, or the first month, or whatever, the first time period, I made a bunch of money. That was the worst thing that could have happened to me, right? Because then I think it's easy. I think I know what I'm doing, and blah, 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 and it was all downhill from there. Like you hear stories about traders where that sort of thing happened. It kind of happened to me, where it wasn't really me. It was my friend who tripled our account the first night or the second night that we were trading. But then we lost it on by Fridays, by the end of the week. But that kind of thing is true. But what I think, the other thing that I think you might be getting at, I'm not sure. So there's that ego part of it, but there's also a sense of confidence that's needed, right? You can be overconfident and you can really go for it because you think what's going on and other people don't, right? Like you're the mind that understands the markets and all that stuff, especially if you're into fundamentals. Like fundamentals get really into that. People that are into fundamentals, I think, can get really into that. But the other side of it is having the confidence that you need as a trader to pull out of those terrible drawdowns. And that to me is discretionary, systematic traders. That's a real big deal, because that's when you're at your weakest. So you and I both know that when we're in drawdowns, that's when you're at your weakest. That's when you are most susceptible to making the big mistake. The big mistake could be doubling down, taking a big, huge position to make back those last 7 losers. It could be trading changing your strategy and modifying it and saying, oh, well, if I had done this instead, I would have lost, would have avoided all those losers. Or it could be that, thinking that the markets have changed, all these algorithms and robotic traders and institutions have changed the market, so my system doesn't work anymore. Like all of those things that creep up in the moment of doubt, you need to be able to have the ability to squash those. It's true that those things could be true, but in most cases, it's not. In most cases, it's just the demons that are creeping up and scaring you. That's how I see it. So I think you do need that confidence. You do need that ability to rebound from poor periods of trading. But you don't want to swing so far that you think you are like Mr. Market and you know exactly where things are going to go. So that's my take on it, is that resilience and confidence is really important. So that aspect of your personality is key. But also, being open to new ideas is good too. Like being open to, like, for example, if you just trade trend following strategies and you never take reversion to the mean strategies, that's a missed opportunity to diversify. So being open to new ideas and stuff like that, and build strategies that are complementary, that can also be like a personality fault too. But yeah, so those are sorts of things that I think about when I'm thinking of that. What about you? What are your thoughts?
Oh, yeah, no, I was talking more about like having the confidence to come back. And I think if we look at the success rate of traders, there's a lot of places say like 90% of them fail, right? I think that's really indicative of how people think in the general public. Like you see a lot of people following whatever's on the news, or they're following this guru, or they like to follow this guy or whatever, right? And they don't really develop that sense of their own personality. And I think that's really important to having that confidence to go forward in trading, especially when most people don't know anything about trading, right? So that's kind of more what I was getting at. But you have a good point there. You can really get overboard, and you can start to think you're the man, and you're gonna just make all this money.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, you'll see it with these guys that are veterans, especially in the institutional world, like in the reason why I say this, because I hear people talk about it. They go to like trader groups, because they have these trader groups in Australia. It's called the Australian Technical Analysis Association, ATAA. Okay. And so they'll have these talks, and I've done a few of them or whatever, but like people will come to me that had gone to the talks, and they're like, dude, that guy's crazy, man. He's got so much ego and stuff. And they tell me, you know what I mean? Yeah. But now I think what's happened is some of these chapters, not all of them, the Melbourne one's really good and stuff, but some of these chapters, what happens is they have like, I don't even know if they meet anymore, but when they did, they had free drinks. So people would go there, and that like a lot of alcoholic traders would show up. Because of the free drinks. It totally went downhill from there. But yeah, so you'll hear things about, oh yeah, so and so came, like a famous trader, and they'll be like, dude, that guy's so much ego, and stuff like that. So it's interesting. Yeah, it really is interesting. And I think what you were saying about the 85% or 90% of traders that fail, what's interesting about that is, like, I think of other markets. Like, people say that about like what you and I do, trading markets, but there are other markets that people just assume that like everyone makes money. For example, like real estate. Yeah, everyone just assumes that if you get into real estate, like it's always going to go up. Like, to me, that's so funny, because I look back at my life and like what happened with my parents. Every time they sold the house, it was at the bottom, and every time they bought, it was when they were getting really expensive. Like it was like, it's like magic. Like it really is amazing to me. And I don't think that's a unique thing. I think there are a lot of people that pile in when there's a frenzy right before the top, and a lot of people that go, oh my gosh, this neighborhood or this city or whatever, it's done now, and they sell literally at the bottom. And I saw that close up. I mean, looking back now, I see what happened. I didn't kind of realize it at the time as a kid, when we were moving around, because I moved around quite a bit as a kid. But yeah, it is interesting to me that like everyone says that the markets are so hard to trade, but then some markets like real estate apparently is just like everyone has the golden touch, whatever. I don't know. It's crazy to me.
Yeah, no, I saw this news story about houses in East Bay, San Francisco, Berkeley, Oakland, and all that. And some people are offering like $1 million over the asking price. And that just like blew my mind. Yeah. But that's a perfect example of like, people think it's going to go up forever, and it probably won't.
Yeah. It's so true, man. It's so true. Well, we have over here in Australia, we have interesting. They have off market, so you can buy a house that's off market. And so I always ask the agents, I'm like, how is it that they're selling it and it gets sold, but it's not on the market? Does that mean that it was on the market? And so I guess what it is, it's like people that are like, they're going to sell their house at a certain time, because over here in Australia, everyone wants to sell their house in the spring, because in the spring is when everything's nice, and apparently the prices go up every spring. I don't know. That's the theory, right? You don't want to sell in the winter, which as we're recording this, we're going right into winter right now. So everyone wants to wait until springtime to sell their house. So you have these off-market places that are not for sale. No one knows that they're for sale. But if you go to an agent and the agent knows someone, and they know the owner or whatever, then you could actually buy it. But the thing is, you have to pay the price,
spring price,
for the spring price, the October price, the September October price, which is spring over here in Australia. You can't pay the winter price. It's so funny. The whole thing is funny to me. I just think it's hilarious. But yeah, whatever. Yeah, it's the way things are, right?
Yeah. All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
This is Dave Thomas from Utah, reading Chapter 1 of The Count of Monte Cristo. And then it's like, then you get Anastasia from, Russia. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, how did you optimize your sleep, or do you even optimize your sleep? And has that helped you in trading?
I did, and then I had kids. No, so yeah, actually, I'm thinking a lot about it. So these are the things I'll do. I'll give you guys quick. So yeah, so what I used to do before kids is I had a really good schedule where I would just wake up naturally, check the charts, because the New York candles close between 7 a.m. and 9 a.m. over here in Sydney, depending on the time of year. So here in winter, the New York candles close at 7 a.m. and then in summer it's like 9 a.m. right? And then there's like a month where it's actually 8 a.m. when there's between time changes in the States and in Australia. But anyway, so what I used to do is just wake up, I would check the charts, make sure everything's good, like there isn't anything that needs to be managed, like move to break even or whatever, and then I would go for a run and then come home, eat, and then maybe go for a surf in the afternoon or something like that, right? And then at night is when I would put my orders in, because around 6 o'clock or so is when, 5 to 6, 7, that's when the markets open over in London. And that's where I wanted my orders get triggered, like London or New York. Well, and so, and then I would just go to sleep, and the next morning again, check, make sure, did I get stopped out? Did I not get stopped out? Should I move to break even, whatever. So it's pretty simple. It was pretty good. Not having an alarm clock is awesome, right? Not having to get up at a certain time. Well, so then you have kids and they're up in the middle of the night, blah, 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 and all that stuff happens. So now what I've learned to do is supplements and watch the diet. So the couple of things. What I like to do is I don't eat late at night. So after about 7, 8 o'clock is when I stop eating for sure. Like I don't want to be eating at 10 o'clock or whatever, right? The other thing I do is I take magnesium. It's actually magnesium and calcium and vitamin D mix, but I mix it up and it's like in a liquid thing, and you drink, it's a powder, it makes it like liquid and drink it. What I found is that having the magnesium before you go to sleep, about 30 minutes or so before you go to sleep, is amazing. It makes it so much easier to sleep. The other thing that's really good, especially for traders, is you can get these blue light filters like on your phone, like these apps and stuff. I don't know if it works for Apple. I heard that it might not work for iPhone. I'm not sure. But what these things do, and they have the downloads too. And actually, we'll put some links in the show notes for people who are interested. So what that does is it cuts down the blue light. So the reality is, I went and saw a talk the other day, psychologist, and she was talking about how if you have blue light within an hour of the time that you go to sleep, which for most traders is going to be the case, actually. I mean, let's face it, you're probably going to check the charts right before you go to bed, right? Yeah. especially at where I am, because it's New York or in London. Like, the markets are raging, right? So she said the blue light from the screen, if you do that within an hour of going to bed, it actually impacts your REM sleep. The REM sleep is the deep sleep. It's the most important sleep of the night, right? It's what you get less and less of as you get older. When you're a baby, you almost go straight into REM sleep, which is the deep regenerative sleep. Your brain, it's good for everything, right? It's good for your body, your brain's connections, everything. So what she said was, if you have blue light within an hour of going to bed, that will drastically reduce your REM sleep. So I was like, well, how do I get around this? Well, blue light filter. So you can use these blue light filters that change your laptop or your monitor screen, definitely for your phone, and that sort of thing, so that you're not getting that blue light right before you go to sleep. The other thing you can do is, if you get good at guided imagery, you can listen to some guided imagery stuff about, relaxing your whole body, or it's kind of like self-hypnosis. It's very similar. If you listen to those for a while, then you get really good at kind of relaxing your body. So when you're lying in bed and you can't go to sleep, just getting good at relaxing, from the toes up to the head, slowly, kind of each part of your body, you're putting it, to sleep, right? So that's another thing. So those are things I would say. You can look at supplements. Obviously, you don't want to have caffeine, right? Like, I'm off the caffeine, and definitely not before. Like, if you're going to go to bed, let's say you go to bed at 11 p.m., you don't want to have caffeine, at 6. Like, if you can not have it between 6 and 11, that's ideal, right? Within 5 hours. So if you go to bed at 9, you don't want to have it, at 4 or whatever. Like, it's really, that's a killer too, right?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And vigorous exercise is good, but you don't necessarily want to do it right before bed either, right?
Yeah.
So, like, vigorous exercise is really good in the morning or in the afternoons, but not so much, around the evening time. So those are the biggies that I've learned over time. What about you? What have you got going on?
Probably 3 or 4 things. Like, I found, I used to have an Aura ring, so it measures your heart rate and all that stuff while you're sleeping. So I tried that out for a while, and it basically said I need about 10 hours of sleep to really get a good night's sleep. So
can you tell me a bit about, well, is that like connected to an app or something? Is that how that works?
Yeah. It's Bluetooth. It connects to your phone, and then it gives you like a sleep score at the end of the night. So.
I thought it was like a mood ring. Like you said, Aura ring. I was thinking it was something you picked up from a hippie, but this is like technology, right? This is like a technology. Yeah, gotcha. Okay. Yeah.
It's actually pretty well built.
I believe it. Yeah.
But yeah, I mean, it's at 10 hours. So I kind of use that as my gauge. Like, if I get 10 hours, I know I had a good night's sleep and I feel good. If I can't get 10 hours, then I know I kind of have to push through it. Another thing is, like you mentioned, the blue light stuff. I wear these blue light blocking glasses.
Yeah.
So these help
gaming goggles. Yeah. You can get gaming glasses. Yeah. Those are good too.
Yeah, definitely. And then we tried recently this thing called NED. It's like marijuana droplets. It's got marijuana and CBD in it. And then that helps me sleep if I can't sleep.
Right.
And then basically just earplugs and an eye mask has been huge for me. That's probably the biggest thing. And I just sleep all night when I do that.
Yeah, really interesting.
So that's about it.
Yeah. You could also, I just thought something, you could also use like a routine where you listen to subliminals. And so the sound of the ocean on the subliminals, like the inner talk subliminals, I'll link those up too in the show notes. That works. Like, routines are really good with kids. Like, they do a certain routine so they know, okay, now it's time for me to go to sleep, right?
Yeah.
But yeah, you can do that too. What was the other thing I was thinking? Oh, the other day, your Aura ring reminded me of this. The other day, I probably because they know I'm a sucker for this, I saw some ads because I love these sorts of things, kind of like the Aura ring stuff,
Yeah.
I saw some ads where they said it's like a breathing analysis. You blow into a thing, okay?
Yeah.
and then it tells you like what your last, have you heard of it? Like you've seen it, right? It tells you like what so you blow, like it's like a breathalyzer, I think, similar to like what the cops have, but you blow into it and it'll tell you your last meal had too many carbs and this and that, and here's where your body metabolism, that like it basically gives you all this printout of information about your body based on just breathing into the thing. And I thought, whoa, that is insane. So, because that's the kind of, I mean, it kind of reminded me of the Aura Ring, like kind of give you some feedback on where you're at and what you should be doing. I don't know if it tells you if you're sleep deprived or anything like that, or if, you know, like you need more sleep or this or that, but it was really fascinating. It sounded like it was more kind of like along the lines of diet. So, you know, like it kind of is kind of gauging, you know, where you're at now versus what you ate recently. It's telling you, you know, yeah, you probably shouldn't have ate, you know, that many calories, or you probably had too many carbs, or you probably, you know, needed more fat, or, you know, something like that. Like it sounded like that's kind of was the thing, but there might've been other stuff involved as well. I hope I see another ad for it because I want to check it out. I didn't really have time to check it out at the time, but I wanted to learn more about it. Yeah.
That sounds cool. That's super cool. I see.
Yeah.
I was going to try it out, right? Yeah.
Yeah, I know. Yeah, I know. I was like, wow, I've never like, you know, like all these things like that you and I are both kind of into, like Muse and the Aura Ring and the what's the thing with the two neurophone and, yeah, all those things, you know, subliminals and stuff. Yeah, so I just thought it was pretty cool, and I wanted to mention that to you because I know, you know, you're like me, you know, you kind of like things like that.
Cool. Yeah,
it sounds really cool.
I'll check it out.
I'll look into it. Yeah. I'll see if
and one last thing on the when you're talking about music before going to sleep, I found that listening to audiobooks is probably one of the best ways to fall asleep. But then I always lose my place on the book, so it doesn't really work too well. Puts you to sleep.
Yeah, it's so true. It is true too, especially if they're monotonous. Like, have you ever heard of? Just as an aside, have you ever heard of LibriVox? So there's this free. I'll put a link down there, but LibriVox basically is free Audible, like Audible, the Amazon one. It's like Audible, but you go there and you download these MP3s of books, and they're like a lot of classics and stuff. So like one time we were on this massive road trip, we listened to The Count of Monte Cristo, right? This long book. But here's the problem with LibriVox. Problem is you can volunteer, anyone can volunteer to read a chapter of a book. So what ends up happening, you're listening to The Count of Monte Cristo, right? And what ends up happening is you'll get like chapter 1 will have Dave from Utah reading the book, right? And sometimes they'll even say like, this is Dave Thomas from Utah reading chapter 1 of The Count of Monte Cristo. And then it's like, then you get Anastasia from, you know, Russia reading the next one. And like, it's kind of like a disconnect, you know what I mean? Like each chapter is and sometimes we were listening to it like on our road trip, my wife and I were like, and then it would be like, oh no, not Tim again. He's awful. You know what I mean? Like, cause sometimes people are really good. Like they give characters and stuff. There'll be like a little bit of like, you know, they'll kind of use a different voice or something for different characters. And then sometimes people are just like so monotonous. They just read the book like he busted down the door. And then he, you know, you're just like, but it's really good for putting yourself to sleep. So tip, if you like listening to books that you don't care about losing your place, you could download some really boring LibriVox chapters.
That sounds great.
That could work. Yeah, that could work. Just need to find a nice boring one.
I'm just picturing the Russian accent versus the, you know, the Southern drawl, and then like all in the same book.
yeah, it's terrible, man. It's so bad. It's like literally, it's like Russian roulette when you're listening to it, because it's like every chapter you don't know what you're gonna get. You're like, oh, chapter 13 is Dave again. No, you know, it's just crazy, and you just keep wishing that. If you have a good reader on a chapter, you keep wishing, please do the next one. Please do the next chapter. It is kind of funny. Yeah. But that's LibriVox.
Awesome.
Yeah, LibriVox. Yeah.
All right. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Number one, knowing your personality. And then number two, what's the goal for your trading? Is it to build this huge account, or is it to have steady gains, right?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So I got a question from a trader this morning, actually. And he was talking about backtesting. And he said, what can I do? Like, I know that backtesting is really important. I spend a lot of time in Forex Test and all that sort of thing. But where should I be focusing on? That was his main question. And so we were just chatting a minute ago, right before this call. And I recommended that he spend a lot of time. And I'm curious to see how you do this. So I asked him to, really dig deep into exits. The reason why this is important is because that's where I found a lot of sort of the easiest ways to improve trading systems. So for example, let's just assume that you have a signal that's pretty good, like your entry rules are pretty good at identifying whatever type of move that you're trying to capture, whether it's an end of a trend or a reversal or a, trend continuation or a breakout or whatever sort of thing you're trying to catch. But you're not happy with it for whatever reason, like the bottom line is it's not making enough or whatever. Typically, what I've found is that by tweaking the exit, it makes a drastic difference. So, for example, there are some exits that kind of follow price along and are really tight. Those exits are really good at allowing you to. Well, first of all, this is a psychology podcast, right? Yeah. So, you got to think about what kind of trader you are, right? Like, are you okay having a trade go 200 pips in your favor? And then you have to give back 75 pips so that you only end up with 125, right? Are you okay with that? Is that okay? Or are you the kind of trader that is happy if you have a trade where you make 125 pips and you get out, you're done, and then you watch and it goes another 75 pips. It goes a total of 200 pips in your favor if you had just held on.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Right? Those are two different kinds of scenarios. It's the same result, but of course, there's two different kinds of scenarios for different types of people. One of those is going to be more stressful, more difficult to deal with. And so, you got to kind of have to know that. So what I was talking about with exits, you have different types where you have some that are really tight. Those are really good at increasing your win rate. Those are really good at getting you out of bad trades. Those are really good at making you feel like a winner because it's so easy for you to capture a little bit of profit if it would have been otherwise like a loss, for example, right? Like those really tight exits that hug price as it moves are good at that. However, they're typically terrible at capturing the large move. Yeah. And the reason why is every little sort of retracement move against your expected direction, whether it be up or down, those little jigs are more likely to pop you out of the trade with those really tight trailing exits. Now, the looser, the wider exits, those are bad in terms of keeping your win rate up because they will reduce your win rate. Historically, we've seen this. And then they'll also, trades that go a little bit in your favor, they often don't make any money at all, and they end up as a full loss or a partial loss. They're really good at capturing the lion moves, the big moves, the moves that make your year sort of thing. So those are two different types of traders that would be better with those types of exits. So the trader that's okay with the move that goes 200 pips, right? And then it retraces and goes 75 pips against you and you get out 125 pips. The trader that's okay with that is going to be the kind of trader that's okay with the looser exit, the one that's kind of trying to make that, bag that 600, 700, 800 pip move. And then the trader who's more comfortable taking the 125 pip profit and then later on seeing the market go another 75 pips in your favor, that trader is probably more suited to the tighter exit. So that's kind of the thing I was explaining to this guy. And he's a really good trader. He just kind of, he's at that stage now where he's getting comfortable with his strategies. He just wants to improve his is bottom line. And so exits, for me, exits is a really good spot for that. But again, you gotta kind of map what you believe, what you're comfortable with, what you like to deal with in trading versus those things that are going to be really stressful for you.
Yeah, no, totally. I agree. And I think you really have to go in with a goal in mind, right? Like, number one, knowing your personality. And then number two, what's the goal for your trading? Is it to build this huge account, or is it to have steady gains, right? And I think also there's a tendency to try to optimize the entry also at the same time, which usually leads to disaster. So a lot of people try to tighten up the entry, try to tighten up the stop loss. But I think in general, it's just a better idea, like you said, to try and tweak the exit. And then maybe you could get some gains in the entry, but generally the exit is going to be the thing that really makes or breaks the trade, at least from what I've seen.
Yeah, absolutely. So exits, stop placement, and your risk rules, those are the big ones, I would say. Entry, as long as you know it works, like as long as you know it identifies the type of market you're trying to get in. And it's funny because that's where I spend all my time. And most traders, actually, we spend all of our time on entries, especially when you first get into trading. Like you try, like, I don't know what was like for you, but like I would find a system or create a system, kind of read a book. Like there was a book by, I don't know if his name was Carter or something. Anyway, it had all these entries and stuff in it. And there was another book by The Complete Trader by Jake Bernstein. There's all these books that I was reading, right? Yeah. And I started getting these ideas. And so I would try the system. And then I did point and figure charts where I wrote them out on graph paper.
Yeah.
All that stuff. And then I would just go, oh, this sucks. This doesn't work. And I'd throw it away. And in hindsight, what I really should have been doing is keeping that front end part of it and just tweak the back end. And that probably would have given me more systems that I would have, enjoyed trading and probably could have stuck with. But, it's like anything, wisdom is great. It's like right when you figure out life, then you die. You know what I mean? It's sort of that sort of thing, isn't it? Same with trading. Like right as soon as you figure out trading, it's like, oh man, I don't have many more years to trade. So yeah.
I can't even imagine how many great systems have been thrown away just because, you didn't tweak the exit for your personality, right?
Yeah, it's so true. Yeah, it's so true. Yeah.
Cool.
So so we agree on that. So exits is definitely a spot to check out. Yeah.
Yeah. All right. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Whereas now yoga is no different than like, a triathlon or whatever. And it's like half men, half women, like everyone's doing it. You know what I mean?
Yeah.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, how do you use meditation in your trading, and how have you seen other traders use it?
So I like to use meditation, or what I call self-hypnosis. I like to use that in a couple of different ways. One is before I look at the charts, I like to get into a nice mindset. So where I live, that's a morning time thing. So what usually happens around our house is it's a frantic morning, getting the kids ready for school. And then as soon as the kids and everyone leaves the house and I have the place to myself, then it's like, then I can kind of relax. I can plug into hypnosis. Actually, I'll give you guys a link. If you're interested in a Forex hypnosis, I worked with a company called Hypnosis Downloads, and we created one for Forex traders, because the one that they had for traders was pretty crap. But you guys can, it's really cheap, and you can check that out, the link down there if you guys want it. So that's one way to do it. You can listen to binaural, what is it called? Hemisync or whatever? What are the ones that you use? Hemisync or binaural beats or whatever. They're quite similar. Also, that's another way to get you in the right mindset. What I'm trying to do with that is to use the meditative state so that when I look at the charts, I don't have baggage, right? Like I want to see it as clearly as possible.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
The other way to do that, of course, is just to go away from the charts and don't look at them for several days. That's another way to see them really clearly, right? Go on holiday. But so that's how I use it. The other way I use it is for solutions. So let's say that, for example, you're trying to come up with, and it doesn't have to be even trading related. It can be anything in your life where you're like, you have this issue and you know that you can figure it out, but you don't know what to do. You can do this, get into like a meditative state as you're falling asleep. It's called the hypnagogic state. And like one way to do this is make a tight fist. And as you're falling asleep, what you want to do is you're telling yourself that you're going to find the solution. So what you're trying to do, it's almost like a mantra as you're falling asleep. So you make this tight fist, you're in bed, you're falling asleep. It could even be just falling asleep for a nap. It doesn't have to be like, nighttime or whatever when you go to sleep normally. And you're telling yourself that when you wake, you're going to have the solution to whatever the issue is. Mm-hmm. I'm going to come up with a solution tonight and I'll have it in the morning. I'll come up with a solution tonight, I'll have it in the morning, right? And as you're falling asleep, what will happen is your fist will relax a bit, right? And that's when you know that you're in that hypnagogic state, right? Mm-hmm. And this is the spot where historically, a lot of inventors like Benjamin Franklin, a lot of people that have been really good with the creative side of life, they've used this hypnagogic state to come up with solutions. Sometimes what will happen is as your fist is relaxing, you will get the solution right then and there, right? You've probably had the experience, Hugh, where in the morning, you're kind of waking up, but kind of falling asleep sort of thing, I mean, it's kind of the same, but it's when you're falling asleep. And sometimes, I don't know, like I keep a notepad next to my bed because when I'm falling asleep and I'm going in hypnagogic, sometimes I get my best ideas for training during that time. So I want to be able to record them. But if you're trying to come up with a solution, you can definitely bag it then or possibly in the morning when you wake up and you're in that hypnopompic state as you're waking up and you can write it down. So it's kind of like seating your subconscious while you're in a meditative state to work on something, and it kind of does it in the background for you. So that's something that I would definitely recommend if you haven't used that before. And like I said, I think Benjamin Franklin did a similar thing where he would kind of fall asleep with a bowling ball or a cannonball in his hand. So he would tilt his chair back. So he's kind of like bouncing on his chair on 2 legs. And he'd hold this cannonball, and when he dropped it, then he knew he was falling asleep. And then he dropped the cannonball, and that would wake him up. And then he would like write down whatever he was, whatever the solution was he was working on, right? That sort of thing. So so that's one. Those are the 2 main areas. It's sort of problem solving / goal setting and getting into the right mindset for my charts. I know other people have used it for other things, like if you have anxiety about pulling the trigger or those sorts of things, like if you have like trading related mechanical issues, that's another thing where it can help, especially something like the hypnosis download that I'll put in the show notes for you guys. But those sorts of things would be what I use it for. What about you? How do you approach it? How do you you obviously use meditation, right?
Yeah. I mean, it's kind of similar. Like you said, number 1, to calm myself down before trading or making any decisions. And then number 2, to help solve problems or to, just come up with creative ideas. And the thing that works best for me is just to get into that meditative state and then set an intention and say you want to, like you said, figure out this problem or whatever. So you set the intention and then you just let your mind go blank. And then you don't think about the idea or the solution you want to see, and you just like listen to what comes in. And many times you can start to get ideas. You'll get like situations in the past that will help you figure out what's going on now. If you have a problem that you're trying to fix, a lot of times you'll find this little like cord that goes back to the source, and you can kind of trace it there, and then you can figure out what the solution is based on where it came from. So I think that's another way to figure these things out and to get some creative ideas. So
how do you do that? How do you do that? Like, how do you pull the cord or whatever, as you say? Like, how does that work? Like for you or?
Yeah, that's kind of, it's hard to explain if you don't do it. But like one thing I've done is like this thing called CAP. It's like a Kundalini awakening process or something, right? So you basically lie on the ground and they play this really loud music, and it's all different types of music. And that's just to distract your conscious mind. So that allows you to let go and let everything else come in that wants to come in, right? So it's kind of the same thing. You just want to like put your conscious mind aside, and then all these ideas and things will start coming in based on the intention that you set in the beginning. So it's not really like pulling at it, but it'll just kind of start to float into your consciousness, and then you can kind of process it there.
Interesting. Wow, that's fascinating. And where did you learn? Where did you hear about this or whatever? I've never heard of it.
It's kind of just like trial and error. Like,
yeah.
You know, I realized that all these things like meditation and breath work and these, you know, plant medicines like mushrooms and ayahuasca, they're all kind of the same thing. They just get you to that state. And then from there, you can start to do some work and you get these ideas and things coming in.
Right.
As long as you set that intention in the beginning.
Yeah. It's interesting because I can imagine some people listening to this or watching on YouTube, whatever, they might be thinking that like some of the things you like when you start talking about like mushrooms or yoga or whatever, some of these things are like emotionally, they can be charged. You know what I mean? Like we're bringing like our experience into the equation, right?
Yeah.
There are certain words or things like I remember, you know, when I was a kid, I was a magician and I did magic tricks and magic shows and stuff. That's what I did every weekend. I was always working at some kid's birthday, even when I was a kid. You know, I was like 7-year-old magician going around doing, you know, 6-year-old birthdays or whatever. Like it was crazy, man. It was wild. But all the way until I was like 19, I did that. So anyway, there was a kid that came over, right? When I was, you know, probably 12. Mm-hmm. And he was like, you know, I wanted to show him some magic tricks. He was asking about it. And then he said his parent, I think he was a Seventh-day Adventist, right? And his parents said that he came over one day and he's like, I can't play with you anymore. I'm like, what do you mean? He goes, my parents said I can't play with you anymore. I go, why? He said, because you do magic. I said, dude, these are like tricks. They're illusions, bro. I'm not doing like black magic or anything. You know what I mean? But it was like in their sort of culture that they grew up, magic meant something. You know what I mean? Mm-hmm. And really, it was better to be called sleight of hand or you know what I mean, or whatever. Yeah, illusions. Like it wasn't really magic. You know, that was all just like the stuff that you talk about to make it look cool. You know. So it blew me away really, but it's the same thing with like yoga. Mm-hmm. Like I remember when I first took yoga class in like the early 90s or whatever, it was like all women, right? And it was almost like for some people it was like there's like this spiritual attachment to it. Whereas now yoga is no different than like, you know, a triathlon or whatever. And it's like half men, half women, like everyone's doing it. You know what I mean?
Yeah.
It's just, so I think when you say meditation or you say hypnosis or you say mushrooms or you say, you know, Kundalini or source or thing, sometimes those things get a little bit charged.
Yeah.
And so what I want to just make sure that people understand from my point of view, meditation and self-hypnosis is the same thing, right? Mm-hmm. I just think that sometimes we can close doors to things that might help us out just because of the emotional charged words that we use to describe them. So sometimes you can just, you know, describe them in a different way. You know what I mean?
Yeah.
Especially if you're sharing it with somebody else.
Yeah. So it's more palatable, right? We really do bring in our past, like programming, our past culture, our past whatever from our parents, from our friends. So it's really important to be aware of that. And same thing goes in trading, right? Like I hear a lot of people writing off a trading system before they even like test it or try it. And like, dude, really? I mean, like at least give it a try and see if it's going to work or not. And it might work. So it's the same thing.
Yeah. Yeah, it's exactly the same thing. Like the people say, well, you can only make money if you trade the trend, or did you notice that the only traders that make money are the ones that have gone through this course, or you know, like all these things.
Trade for a bank or trade like a bank, right?
Yeah. Oh, that is so funny. Yeah, it's true. It's true. Yeah, there's a lot to that. Yeah.
Cool. All right. Thanks, Walter.
Okay. Thanks.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Even if you have a 60% win rate, that's really good still. You just have to either get more trades or just, you know, wait for the right setups or whatever it is. But
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So we have a question from a trader, and this trader is wondering, I'm working on becoming more consistently profitable, and I'm putting all of my time into this. How do I become more consistent? And so my thoughts are, if this is what you're looking at, I'm going to read between the lines here and say that this could be, well, it's hard to say. This could be a break-even trader, or it could be a trader that's actually making money. So one thing that I would say is you probably need to widen your scope. So when people say, I want to be more consistent, that usually, it could mean that like Monday I make money, Tuesday I lose money, Wednesday and Thursday I make money, and then Friday I lose a lot. Like that sort of thing where it's kind of in and out. Mm-hmm. And so my thoughts on that are that you probably want to set up your goals so that you're looking at more of a wider scope. So instead of looking at making money every day, if you're trading the 4-hour charts, you're probably not going to make money every day. If you're trading the 5-minute charts, you're still probably not going to make money every day, but maybe it's possible to have more, many more profitable days than not. So the idea here is that you want to put a measuring stick at the spot where it's easily achieved, but also you can probably improve on it a little bit. So for example, the goal of making money every single day with a 60% win rate strategy isn't going to work, right? Mm-hmm. It's just not going to work.
Yeah.
If that's what I'm reading here in terms of like, this is my goal to be more consistent, it's like, I want to cut out all my losers, because if I cut out all my losers, then I'll be profitable, or I'll be more profitable. That's not really what you want to do here. Is get to a point where the risk that you're taking, you're okay losing that, and that the rewards that you're pulling from the markets are in terms of like a weekly or a monthly goal rather than a daily or an hourly goal, right? So just stretch it out a bit further. That's what I would recommend this trader do. Again, I'm not sure if you're actually making money or not. If you're not making money, like you're kind of in that break-even stage, then I would look to, we've done other podcasts about, how do you use risk? How do you tweak your exits? Those sorts of things. But that's more down that path, most likely for you if you're break-even. But if you're at the point where you're making money, but it's just kind of not enough, then it's probably going to be more along the lines of changing what your goals are. And once you change those goals and you go, okay, I want to make a certain percentage every week or every month, that makes it easier for you to then adjust your risk to a point where those losing periods don't hurt as much, right? Mm-hmm. So you kind of need to know where you want to go. And then from there you can, and I'll put the risk calculator in the show notes for you guys can check that out and use that to kind of fine tune that. But really, I think it sounds like what is happening with this trader, it's really common too, by the way, that your losing streaks are so painful that you feel like you need to change something to get to a point where you're more comfortable with your trading. And it's probably just adjusting that risk based on the parameters of your strategy, and your goals are going to be a little bit further off than they are right now. That was the best guess. What are your thoughts on that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, no, I totally agree. I think it's just a matter of either zooming out, like you said, zooming out to a weekly or a monthly, usually a monthly for most traders, I think. Or just, having this expectation. I think there's a lot of marketing in the Forex education world about scalping or whatever, and you're going to make money every day just by doing this one thing at 5 o'clock or whatever. And I think that leads to people thinking that they need to be perfect, like they need to have like a 99% win rate or something like that, or 90% win rate, when in reality you don't, obviously, right? So I think there's that like perfection bias with a lot of people, and I think if you can overcome that and just understand, okay, even if you have a 60% win rate, that's really good still. You just have to either get more trades or just wait for the right setups or whatever it is. But it's not necessarily about improving consistency. It's being comfortable with what you're trading, I guess.
Yeah. Yeah, totally. Yeah. And you're right about the marketing thing. Like that's so true. Like, like people trying to, like there was a trader yesterday and he was contacting me about, I need to qualify for some, LTS or whatever. And I'm like, I don't even know what that is, dude. And I said, the forum is not for you. I told him, I said, I'm sorry, but it's not like, cause he was like, I really need someone to help me qualify. But and it sounded like it was one of those things where like they, like they have to, make so much money and they can't hold positions over the weekend, all that kind of stuff. Like, I don't know, but it's what it sounded like. I never heard of whatever he was talking about, but I just said, look, that style of trading it's possible, but it's for the vast majority of traders, especially new traders, trading those lower time frames and trying to make the, like you say, like the 80% win rate or whatever, that is going to be so frustrating for so many traders to try and go down that path. It is so much easier to go the other way and start at the dailies and work your way down. And it's like, like in sports where they say like focus on the fundamentals, like on volleyball or whatever, I guess they would focus on serving and digging or whatever. And, and then gridiron, they focus on tackling, and soccer, they focus on, kicking, passing. And
have you read the John Wooden book?
No, but I've heard about it. It's so funny that you said that. I heard about it this week. What's it, the coach? You mean the coach from UCLA, right?
Yeah. I mean, he was like national champion for 10 years in a row.
10 years in a row, yeah.
Amazing. Yeah. And I read the book, and he said, like what you're saying, the first thing he taught all his players was how to tie their shoelaces. And then really? The kids walked in there like, what the heck is this guy talking about? Tie your shoelaces, right? But he's like, no, if your socks are not on correctly, you'll be uncomfortable and you can't play. If your shoelaces keep coming off, your mind's going to be off the ball and on your shoelaces. So you got to learn how to do these two things first. And I think that's exactly what you're talking about, right?
That's awesome. Yeah, that's someone just was talking about that book. Actually, my friend in high school who was really good at a good friend. He's excellent at basketball. Mm-hmm. He actually played basketball in college. He went to the John Wooden camp when he was a kid, and he had a picture with him. I'm like, dude, that's John Wooden. Like, no way, man. He's a legend. Because he like coached Kareem Abdul-Jabbar, right? I think he was, all those guys, like they won like 10 years in a row or 11 years in a row. They won the championship. Yeah.
Yeah, it's amazing.
But it's so true, isn't it? It's like when you talk to these really good coaches, like in the athletics world, it's just focus on the fundamentals. And it's the same in trading. It's exactly the same in trading. Focus on the fundamentals. Yeah. Focus on, the biggest thing you can do as a trader to get better is to have eyes on how well you're doing right now in terms of execution, which means a journal of your execution. Like that's the best thing, and have somebody else's eyes on your execution. Because if you have a strategy that works and you're not making money, then either the strategy stopped working, the market stopped, changed somehow, or most likely, it's your execution of that really good strategy. So it's so true. It just comes down to fundamentals, entries, risk management, exits. It's all rinse, wash, repeat, or whatever they say. It's just keep doing it over again. Yeah.
It's actually usually quite mundane, right? The things that make you successful. And I have this one thing that always blows my mind, but like I was at the golf driving range, and I was terrible, still terrible nowadays. But this one guy was in the stall next to me, this older guy, and I guess he was a coach. So like he said, I am in pain watching you hit that ball, so I'm going to help you out. So he coached me for about half an hour, and he went through these very simple steps, right? And at the end of that, I was hitting the ball like straight and up in the air instead of hitting it on the ground and killing all the worms. And
worm burner.
To this day, I can still hit the ball decently, like better than most people. But like, I was just amazed that those fundamentals in that half an hour got me to where I couldn't get to in like 2 years before that, right? So it really is about the mundane fundamentals.
Yeah, it's so true. Yeah, it's so true.
All right, cool. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Most of what we do is on autopilot.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what are some trading psychology affirmations or things you can tell yourself or ways that you can implant those affirmations in your mind that can help you improve your trading?
Right. So there's sort of, the way I look at it is there's sort of two levels. There's subconscious and there's conscious. So subconscious would be putting those in without your awareness. So subconscious is by definition something that is outside of your awareness. So that could be as simple as having subliminal recordings going on in the background, like in your office or whatever, or while you're sleeping. We've talked about those before. You can also get into a state of meditation or hypnosis and then have those sort of programs, seeded into your mind, those suggestions. They call them suggestions in hypnotherapy. You can also do it. We've talked about this before. Like you can do it where you have like some things that you want to accomplish and you kind of seed those as you're falling asleep in the hypnagogic state, right? Then there's the other side of it, which is interesting. Like one of my friends in high school, his dad wrote a book about this, which is weird. I never knew that his dad was even into that. But I did find one time I went to his house and they had these little sticky notes everywhere, and it had all these positive messages like everywhere in the kitchen and everything. And I was like, dude, what's going on with this? He goes, oh, my dad wrote a book about, positive affirmations. So that's a different thing. Like there's a book, actually, we'll put the link in the show notes. I think it's by T. Harv Eker, and I think it's called Secrets of the Millionaire Mind or something like that. Anyway, and he has like these 1 or 2 day events that you can go to, and I went to those and stuff like that. And what that is that's more a conscious seeding, right? So there's a whole, like if you go into like the coaches in the coaching realm, like coaching is this huge thing now, right? Mm-hmm. And a lot of coaches, one of the main messages that a lot of coaches have is this idea of congruency. So like, in psychology, they talk about cognitive dissonance, where you believe something, but then, you do something else. And it's kind of weird. Like why, if I'm not racist, why do I keep using these rude terms every time I see someone who doesn't look different to me, or what, what I mean? Or what, those sorts of things. In the coaching world, they talk about, you say things like, I am a profitable trader. Mm-hmm. I make money trading every month. You say things like that. And so the idea is that if it doesn't fit, then there's friction there and you do whatever it takes to kind of get to that point. Right. So that's a different sort of a thing to what I think those things, while they may work, I think the evidence is pretty clear. Most of what we do is on autopilot. Mm-hmm. And so where does that come from? Well, the best research we have today is that autopilot is your subconscious. And so I think that's where the main program is, and that's where we should really be focusing our energies on. So that's basically my take. What are your thoughts on that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, no, totally agree. And one thing I would add to that is the actual saying of some sort of affirmation before you start trading or something. Like you said, I am a profitable trader, or I make money every month. And I think sometimes the act of saying that is more powerful than some woman's voice in your earbuds, like saying, oh, I'm a profitable trader. I think it depends on the person, obviously, but I think that your subconscious is more likely to believe that as opposed to maybe another voice. But it varies by person, obviously. But
yeah, that's right. Yeah. And it's interesting you say that, because sometimes, in the Harv Eker book, he talks about saying things like that in the mirror and looking at yourself, and then touching and doing all these things, and it's kind of like emotional freedom therapy, or
the freedom technique.
Yeah, that one, right? The engineer came up with. So it kind of reminds me of that, some of the stuff in the T. Harv Eker book. But yeah, so what you're saying is, that's exactly right. That's one of the arguments for that approach, is that it's you, and especially if you look at yourself in the mirror and say it,
Yeah.
Did you know
put
that
some emotion behind it, right?
Yes.
Just say, oh, I'm a profitable trader.
Yeah. You have to be T. Harv Eker talks a lot about just going overboard, so that if someone walked in the door, they go, this guy's nuts, getting to that point. Yeah.
But did you hear? And it's interesting. I always think about this when, like, I read something about what T. Harv Eker wrote. I always think of the research that you probably heard this too. A lot of when it's funny, I always get pegged as a shoplifter. Like just yesterday, I went to the mall.
Okay.
Right? It's so weird. Like people look at me, think I'm dodgy or something. And like I went to the mall, and I swear, like I can tell because I actually had a friend in high school, and when I was in high school, my mom's friend was a undercover shopper. Okay, at a place. I don't even know if it exists anymore in the States, but it was called J.C. Penney. Like this is stores that they had.
Around.
Yeah, I don't think they're around anymore. But anyway, so she was a J.C. Penney fake shopper, and she went to work and she acted like she shopped all day long. That was her job. And what she was doing is she was looking for dodgy characters that were stealing stuff out of the store, right? And so, because back then they only put those big white tags on like only the real expensive stuff, right? So, yeah. Anyway, so that was her job. Anyway, I know a couple of things about shoplifting because I worked at a place called Marshall's when I was in high school. It's like where they have seconds clothes, like all these really cheap clothes. Anyway, it's kind of like Ross. Ross is kind of the same thing nowadays, I guess. But they taught us all this stuff about how to identify shoplifters. And they say, like, you always greet them and look them in the eye. Yeah. See, how are you doing today? Is there anything I can help you with? Like, that's the first thing. Because shoplifters, a lot of times, if they have intent to steal, they won't look you directly in the eye. So every time I go into these stores, because I know what they're doing, I walk in and I look them in the eye and go, oh, I'm fine. And, everything's cool. How about you? How was your weekend? Because then I try and throw them off their thing because they think that I'm dodgy. But the other thing they do is they put mirrors up. Apparently, if you have a mirror in an area like where you're going to steal or do something bad, you're less likely to do it because you have to like consider yourself.
Look yourself in the face.
Look yourself in the face as you start stealing money out of the cash register or whatever, or stealing clothes out of the shop or whatever. So those are the two things, like the mirror and looking someone in the eye. And that's kind of what we're saying with these positive affirmations. You kind of look yourself in the eye in the mirror, and it's like you're saying this is true. You don't want to be lying to yourself. Like that's so incongruous with what most of us think. We think of ourselves as being consistent. That's one of our biases. We think we're always the same, even though we totally change over our ideas and everything over life. But that's the thing, is to look yourself in the mirror and say that. So I just find that fascinating that that's kind of an element of this, and that it also kind of relates to being honest in a retail setting. Yeah, I just find that.
Yeah, no, it makes a lot of sense. Yeah. All right, thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
That's what I saw on YouTube today.
Yeah.
The people were saying, I'm going to buy a bunch at 25. Maybe that's where they got it from. Maybe they got it from Kiyosaki.
Maybe.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, Walter. So every market has its own separate psychology, I guess you could say, in order to trade it. So what do you think the psychology behind the crypto market is in order to trade that market successfully?
Trade it successfully?
Yeah.
Well, one thing I would definitely want to look at is leverage. Like if I was trading cryptos, I don't know what it is now, but when 5 years ago or whatever, when I was, back in 2016 or whatever, when I was looking at it, because there were enough brokers that had it, but the leverage was all messed up, or like it wasn't really like it was hard. Low. Yeah, it was super low, and it was kind of like, why would I trade this? I mean, on one end, I think it's just like the stock traders. I really do. Like to me, the guys who trade shares like Apple and Tesla and whatever the darling stock of the time, Amazon or whatever, like those traders who trade those and they just buy and then when it goes down, they buy some more. To me, that's kind of the mindset, is it's always going to go up, that like I've actually seen these guys on Twitter, and they say things like, rule number 1, buy. Rule number 2, if it goes down, buy more. Rule number 3, see rules 1 and 2. So they're just in perpetual uptrend, right? Which has served people well. There was a big crash, I think, when cryptos hit Bitcoin hit 19,000.
And then I believe this was the second leg. So if you look at things through the Elliott wave theory, right, which I don't necessarily look at, right, but I am aware of it and I find it interesting. I would argue that just look at Bitcoin against the US dollar, that first wave that we had up to 19,000, just under 20,000, I believe, that was the first leg. So that was wave one. Then you have the retrace, right? A, B, C. And then you had the third leg, which I think we've probably just completed, which is usually like one of the longest ones and takes a long time. And then I think we're in the ABC retracement there. And then you have the fifth one, which is the really, it goes super sharp, right? And then it collapses from there and then has to, eventually restart another trend, right? Like another move. That's what I think we're at. I think we just went off of wave 3. That's like long term. That's what I think. And I think that the people that trade cryptos are kind of like stock traders in that you just assume it's always going to go up. And that usually works, in a bull market. But in a market like this, like I just saw today, some people posting on YouTube, like, I'm going to buy some more Bitcoin when it hits 25 grand and stuff like that. And that's cool. But like, you just have to remember that, like, I think it would be really hard to be a trader. Like if, let's say you're 22 years old and everything you've seen in your whole life basically has been the markets go up. Because when 2008 happened, you were 8 years old, right? So you didn't really see that. So your whole life, all you've seen is basically free money, and every market has gone to the moon. So I think that's a difficult, and I was kind of like that too. Like as a child of the 80s, I had that same perspective. The only thing is different that I was aware of the 1987 crash. That was a big deal back then. So I was aware of that. But again, all my friends said when we were kids, like, I would just be buying right now, man, blah, blah, blah. It's just, and so, and it would have worked out, right? So same thing in buying at 2008. Warren Buffett basically bought Goldman Sachs in 2008. He said, it's on sale. I'm going to buy it. These are good people. This is a good business with excellent people. So I think the mindset of most crypto traders. Now, again, there are going to be some technical traders out there that buy and sell, right, and do it on lower time frame. But most of them have almost like an investor mindset where they're just kind of buying on the breakouts, buying on the pullbacks. That's what I've seen most of. So that's my thought on that. But I could be wrong, but that seems to be like, you don't find a whole lot of people saying, cryptos are going to go into the bin. The people that say that are usually the older ones who don't think crypto is like a real asset,
like Peter Schiff,
Peter Schiff, like Peter Schiff, people like that. Yeah, exactly. Yeah.
Okay, cool. Yeah, no, I totally agree. I think it has a lot of potential, and it's a very young market. So I think it's going to go up in the long term. You just kind of gotta like buy and hold. A lot of them are like penny stocks, also, right? Like these people are kind of gambling on the pop, right? But the bigger ones like Bitcoin and Ethereum or whatever are like you say, the stocks. You just hold them. You look for the fundamentals. Is it a good project? Is it a good technology? And then you just kind of buy in and then average up, right? Yeah, no, I totally agree. And I think that to be successful, you really have to have a strong stomach. I think be willing to weather the drawdowns and just understand the long-term potential of the cryptos, right?
Yeah, I mean, exactly. And like with any new technology. I remember when they had these little robot vacuums that came out, and we got like the first one, right? Because we were like, oh, we don't want a vacuum or anything, and we had a little kid and stuff, but the thing is, like, the next generation that came out was just like, same with iPhones or whatever. Like the next generation that comes out is so much better. It's the same with internet browsers. The best internet browser was Netscape, and that was the darling stock in the 90s. And actually, Gateway 2000. People don't remember Gateway 2000 was basically Dell. That was Dell computers before Dell, before Michael Dell. So, the first thing. So Bitcoin was like the first thing. That doesn't necessarily mean it's going to be the best one long term. It could be something like Ether that ends up being the backbone of everything. Because like we had. I wasn't on them, but they had AOL message boards or whatever, right?
Yeah.
And so now you have things like Instagram and Facebook and YouTube, and it's all kind of like fractured. It's like, and there's really like, you used to go on like AOL message boards and you could find any sort of topic that you're into, if you're into dogs or stocks or whatever. And then now the internet's so fractured, it's like you have to kind of really dig down and go into the
the forum that's about Doberman pinchers or whatever. You know what I mean? Do you know what I mean? It's so like specialized now and so deep. So to me, I find it really fascinating that, when people say things like Bitcoin is going to, because when we talked about it before, I said, I think, Bitcoin probably will go to 40,000. But I think in 2017, we talked about it. I said, I think Bitcoin will go to 40,000, but it has to go back down first, right? And that was when we had that first wave up to 19,000. And people just forget that there are ebbs and flows to it. And as a trader, like if you trade the 4-hour charts, you understand that. If you trade currencies, you understand that. It's one of the advantages we have over stock traders, where the majority of them are only just buying. They're not thinking of the downside. I mean, they do think of the downside, but they don't ride the downside. Whereas we can ride both sides of it. So that is, in some ways, an advantage for us. In other ways, it's a disadvantage, because all they have to ever consider is, when should I buy? And when should I sell, right? Whereas we have to think, should I buy or should I sell? Or, it's
the number of opportunities to shoot yourself in the foot, right?
Exactly. Yeah. We have way more opportunities. So it's tricky.
I'd be interested to hear your thoughts on Bitcoin. Do you think it's like a outdated, I think it's going to go up still, but do you think it's an outdated technology or?
It's a great question. I don't know enough about it. I know just enough to be dangerous. And what I would say is, it seems like the people who are smart are pointing out that it's a bit clunky. It seems like it takes a lot to manage it and all that. Like in terms of like accepting it. Like if I was an online store and I accepted Bitcoin, it seems like it's not the best version of blockchain technology.
Yes, it's not for
and
that.
And maybe something like Ether is. But the other side of that is people say, well, you can store it. It's value because there are not unlimited. There's only 20 million of them, and a lot of them have been lost or whatever. So there isn't really ever going to be 20 million once they mine it all out. And so, the other side of it is it could be a store of value. So I don't know. I think it will go up. I think it needs to go down again, like the first leg. I think this third leg needs to go down probably a bit further than it is now. I don't even know what it is now. Do you know what it's at? Is it like 30 grand or
30,000 or something like that?
30,000. Yeah, I think it's around 30,000 as we record this. Yeah. So my guess is it'll probably fall to 20 or something like that, 22 or whatever. But before we see that fifth leg kick in.
Interesting. Yeah, I never thought about that. I think Kiyosaki's mentioning like 25 is his buying point. So
yes, that's what I saw on YouTube today. Yeah. So people were saying, I'm going to buy a bunch at 25. Maybe that's where they got it from. Maybe they got it from Kiyosaki.
Maybe.
Yeah. But like, if you follow the if it's true, like what I say about the Elliott wave, it shouldn't go lower than the first leg's high. Do you know what I mean? And actually, if you look back at the first leg where it went up to 19 grand, and then it came back down, I was thinking it would go down to like 1,100 or something like that, or 1,000, which was kind of like the first breakout on the micro scale, but it never did. I think it only went down to like 3,000 or something.
Yeah.
So it didn't take out that previous high at 1,000 or 1,100 or whatever you want to call it. If you look at the first birth of it, in theory, if I'm right about this being the third leg, I think the rules of Elliott wave would say, at least as written by Robert Prechter in the famous book, is that it shouldn't take out that 19,000 high that it made before. I think it made a high at 19,700, 800, somewhere around there, right? Like right below 20 grand, I think, if I remember correctly. So it shouldn't really take that out. It should bottom out above that. So 25 would fit if that were true,
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah. If that were the case. And then, of course, it would take out the high that it made, I don't know, was it at 60 or 65? Yeah. It would take that out on the fifth leg and really it would just be acceleration, like unbelievable. Like everyone would go, oh, it's over. We're going to 200 grand, And then of course it would collapse again.
I think this dip during this summer is maybe like a good time for the institutions to get in. They're kind of bringing the price down, get the institutions in, and boom, right? So
we'll see.
We'll see. Yeah. All right. Thanks, Walter.
Cool. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I used to get nervous, like when I was younger, talking to people. And at a certain point, I just discovered, just ask about them.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what do you know about game theory and how it applies to trading?
Okay, so this is really interesting. Actually, I'll put a link in the show notes to some people who want to see this, because there's a good example of this. I think you can play along with it. So I won't go down that rabbit hole. I'll let you guys click on the show notes and go down that one. But the way I think of it is, because I've read some books on it that are really complex, and I kind of think of game theory maybe differently to most in two ways. I think of it as in probabilities, so in terms of probabilistic thinking, which is really good for traders, obviously. And then the other side of it is like perception, right? And awareness of what other people are thinking. So kind of like if you're in a situation, Hugh, where you're at a party and you're talking to some people, and you'll notice some people aren't very perceptive of what other people are thinking, and that maybe they just go on and keep talking about themselves, and everyone else is just sitting there going, "Oh my God," like, you know what I mean? But the person doesn't realize that they're like turning everyone off by sitting there and just rabbiting on about themselves. That's a person that has like low interpersonal intelligence, we would say, right? And so with game theory, I think part of it is being aware of what the other participants in the game are doing. So poker is a great example of this, where like if you bluff, or you think someone else might be bluffing, you're trying to figure out what's going on, right? That's one element of game theory, which is sort of almost like psychology and interpersonal relations and understanding that. In trading, it could be looking at where all the orders are. So you can look on websites, and brokers will show you where all the buy orders, where all the sell orders are, right? Same thing with open position ratio. You can see, what is the crowd doing? Are most traders buying or selling, or what's going on? So that's one element, as I see it, of game theory. And I really love the open position ratios. If you guys are interested in that, I've got plenty of videos on YouTube all about that stuff, and I can put those in the link down there if you guys want to go down that rabbit hole. I don't want to get into that right now, but that's part of it. Understanding what are the other participants doing. So orders, where the order placements are, and where the open positions ratios are at is really important in that sense. But the other side of it is probabilities. And it's really fascinating to me that a lot of traders don't understand it, right? So probabilities come into a lot of places. Like probabilities come in when you're trying to decide, is my trading system in a drawdown that is normal or not normal? And another one is my reward to risk ratio sufficient to make profit given my win rate? That's another thing, right? So all of these elements of probabilities are very important. And so, like, for example, let's say you like to trade trendy kangaroo tails, which is just a pullback after the market's been going up, right? And it pulls, let's say it's good or down, either way, it goes up after the market's been going up. And it's a signal that says, okay, the pullback's over, right? Now, let's say you like trading those, you've back tested them, you get a certain win percentage, it's 58% or whatever. But you find that if you add another element to that, which is understanding where the orders are placed on the charts to your kangaroo tails, trendy kangaroo tails, you actually really improve that strategy. And that probably would be the case. Like if you saw a whole lot of people who had their orders were basically on the other side of your kangaroo tail, right? Then that means that you would know that there's a lot of people thinking that it's going to break out and it's going to go the other way, right? Or if there's a lot of orders down where your order is going to be, right? Or if there's a lot of orders where you take profit is going to be, that'll be like a magnet, and the market will, if it gets close, it'll really want to get there, right? So all of those things I think to me are really important in terms of game theory. So to me, game theory is thinking about what are the probabilities, right? That this is going to go this way or that way. And so what should I do for, my overall, I'm trying to make profit here. And the other thing is, what are the other people doing? And trading is so different because it's not like a closed system like a poker game where you only have 5 people, and there are a limited number of possibilities, although there are many, with all the different hands and everything. It still is limited. Whereas with trading, it's kind of like an open system, and these things can come in and impact the markets in really drastic ways that
sometimes we're not even aware of. But I think just understanding what your other market participants are doing and what they're thinking, and understanding where the probabilities lie, is probably the most important thing in terms of thinking of trading like a game. What are your thoughts about this?
I actually don't have too much input on this one. I haven't really looked into game theory that much, so I just wanted to get your ideas on this one.
Well, yeah, the thing is, like, if you get in some of these books, they're like super mathematical, right? And they don't. And really, a lot of game theory is just thinking, what is my opponent or what are the other participants doing? And if I do this, what are they going to do? It's really just that. Like, and so I think you can really simplify. I'm a big fan of the 80-20 thing, right? Where you just cut it down and go, just do this much to get maximum. You know what I mean? And that's sort of. I like that approach, and some people won't. They'll want to get deep into it and whatever, and that's fine. But I think just thinking in terms of what are the other people doing, that's a big part of game theory.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
You can map it out and make charts and everything and choice charts and all that stuff, but it really comes down to thinking about, where do the best probabilities lie, what is likely to happen versus unlikely. Which is not always the way we think. Like, a lot of times we think that what's likely to happen is what happened last time, And that's not true. That's not necessarily true at all. So we're not really set up to think mathematically. We're more emotional creatures in general, and reactionary. So I think if people just start, just a real simple task would be, if you have a trade and you go, okay, I'm going to buy here. What are the people thinking that are going to sell? In the exact same situation, what do they see? Just trying to break out of your filter and the way you see the market. That's a really big part of it, I think. Just
a lot of crowd psychology, you think?
Yeah. And just going, okay, I look at, sometimes what will happen is a kangaroo tail will print and I don't take it. And I explain in my videos, the reason I'm not taking it, because let's say there's a resistance level right here, right? And the kangaroo tail goes through it like this. Okay, so you have a big kangaroo tail. Well, there's a big difference between having a kangaroo tail that starts here and goes across that level, that resistance level, versus one that's kind of on top of it and sitting on top of it. Because the one that's on top of it is a breakthrough and a bounce, and it's going to go higher. But the one that's sitting below it just penetrates it and it's going to go lower. You know what I mean? And it's sometimes hard to see the difference, but understanding that the people that see that kangaroo tail on top of the support resistance, they think it's a reversal. And then I'm the guy that thinks it's a trend continuation pattern. You know what I mean? Thinking in terms of that and knowing the difference between the two is, I think, really important, because it just helps you out in life. Just thinking about other perspectives. You'll be a better conversationalist. You know what I mean? If you can get in the head of somebody else. The people like it when you ask questions about themselves, as you've noticed, they do, they really do. It's a great way for people to go, oh, I really like that Hugh, he's a good guy. Oh, really? What'd you like about him? Well, he just seems like a real friendly guy, Well, what does Hugh do? Oh, we didn't really talk about that. Yeah, because the whole time Hugh was letting you talk about yourself, and that sort of thing. You know what I mean? That's
I used to get nervous, when I was younger, talking to people. And at a certain point, I just discovered, just ask about them, and then they'll do all the talking, and it's all good.
Yeah.
So
I was the same. I was the same. I would always deflect off into, they would say something. Oh yeah, blah blah. What about you? I would always do that. And now I'm so old. I'm just whatever. I don't even I can see. When people start doing that to me, I can see it a mile away, and I'm like, yeah, okay, man. Yeah, all right. I'm just whatever. Yeah, I don't even care. But when I was younger, I was really aware of it, like you say, and I would always just kind of shift it back because I didn't want the spotlight on me,
Yeah. All right, cool. Thanks, Walter.
Thanks. See you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Experiment with different things and figure out what works for you.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, people talk a lot about like the flow state and how that contributes to success in a lot of different areas, especially trading. How do you get into the flow state? What do you think about how people should get into the flow state? And I just wanted to hear your experience with that.
For traders, I think it's probably that analogous situation, like with like an athlete getting ready to run the 100 meters. So I used to do that in high school, and I always did a lot of work on getting in the right state of mind, to get the right start, and stuff like that. So like basketball players, anyone who's done athletics like that, even at like the high school or college level, you would have some thoughts definitely around there, probably at least a routine to do. And so you can certainly do that when you're looking at the charts. If you're like a longer term chart trader like me, you would just want to be in that state of mind when you look at the charts. However, I think it more applies to like the lower time frame sort of in and out scalping type traders, where they really need to be on point in terms of what they would say is a flow state, I think. However, having said that, I think that when it comes to trading, there are some things that come up that you probably don't think about when you first get into trading. I'll give you an example. The fear of pulling the trigger. So if you're trading a system that has a lower win rate, let's say it's a 39% win rate, and you're going to have a lot of losing streaks. And so you might get into a state of thinking, gosh, I've had 9 losers in a row. I don't want to have a 10th loser sort of thing. I don't really want to take my next trade. Of course, you don't take it, and then that's the big winner, right, for the month or whatever. So yeah, that's the typical. So I think one way to kind of get into the right mindset for trading, it doesn't really matter what style of trading you have. Essentially, there's a really good story about this guy who wrote a book about risk. He hung around traders and professional poker players and stuff like that. And there's some really good insights from that. And what he was saying was that the traders, or actually the gamblers, it's funny that I would mix that up, but the gamblers were saying they kind of look at themselves as having like an infinite lifespan. If you think about it, what happens when you do that is you would see the world differently. If you knew that you were going to live, 1,000, 2,000 years, you would make different decisions in your life. And that's what he said about these people. The way they saw risk is they'd have these little tiny edges, but of course they saw that and that they were so valuable over the long term. And so any one individual trade, you can just kind of throw it out. Who cares, right? In fact, 10, 20, 30 trades, who cares? Because it's the long-term gains. And as Einstein said, right, I don't know if he actually said it, but people say that he said it. It's attributed to him. It says that compounding is the 8th wonder of the world. Well, that's really true when you look at risk from like a long-term point of view. So I think probably one of the easiest ways to get into a pro trading mindset is for any trader to think of yourself as living a long, long time. And what would that mean for you and your trading system if that were the case? What would you do? Because you would not take giant risks, would you? Right? You would not put 10% of your account on any given trade if you knew that you had an edge, and then the edge was going to play out over thousands and thousands and thousands of trades. So I think that's a really valuable way to look at trading. Is almost like you just live forever, and that you want to be around, you want to have your trading account around to live through those good times. Right. So that's kind of, and I know it's not exactly what you're talking about, because flow state is more kind of like in the now sort of thing, like, feeling the market and understanding where it's going to go and stuff. That's kind of sort of like the shorter term traders world or whatever. How do you see that when you're looking at flow state?
Yeah, no, first of all, I think it's really important that you have some sort of a routine, I guess, like you said. Like in high school, I didn't understand why we did the same exercises over and over before a game. And that's all it is, getting you in the right mindset, right? And so I think if you could do some sort of meditation, or you have an app that can calm you down, I think that's a good start. But yeah, what you're saying makes a lot of sense. And I guess I never really thought of it that way.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
In that, if you know that you have this edge, even if you aren't in the flow state in that one session, like it really won't matter, right? Because you're like, okay, I'm factoring in a bad day into my system, into my numbers, and I'll just learn from this and go on to the next one. So that makes a lot of sense to me. And I think you're right in that the flow state really is more important in like day trading or whatever, instead of like if you're swing trading, then it's not so much, in my opinion. But yeah, I think you have to just kind of experiment with different things and figure out what works for you. And it might be meditation for some people. Some people might need to take a nap before or something like that. So just try a bunch of different things and see what works.
Yeah, and you really want to be in a situation where it's like it's hard to shake your confidence, right? Yeah. And so that's preparation. Preparation is the key there. Yeah. We talked about that before, but yeah, that's critical. So what's the app that you use? Because you were saying, I know you use Muse, right? That device that links up to like the app. Is there anything else that you use in terms of that meditation stuff? Because I know you're big into the meditation.
Yeah, it was the let's see, Inner Balance by HeartMath.
Inner Balance, right?
So that little thing where you stick it in your ear and then you do the breathing, and then if you're in a certain zone in terms of heart rate variability, once you're in that zone for a little bit, then I consider that calm and collected, and then I'll take it off and then go into trading or whatever.
Right, that makes sense. Yeah, I keep getting these ads for because I think they know that I'm into this stuff. I keep getting these ads for an app called Headspace. I don't know if you've seen that one, but that's
that's pretty popular. Yeah, Headspace.
Yeah, I keep getting that ad, like this week especially. So they must know. You know how they follow you around? They know what's going on. Like yeah.
All right, cool. Yeah. Thanks, Walter.
Okay, see you.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
My neighbors keep putting their rubbish in my rubbish bin. I keep looking out the window and go, why are you putting your rubbish in my rubbish bin?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I'd be interested to hear your experience with hypnosis and hypnotic therapy.
Mm-hmm. Yeah, sure. So, when I was a freshman in college, first year of college, I decided that I was going to learn about stuff that I was interested in. So my textbooks, spent a little bit of time on those. But what I really did is I went to the library and I read about a lot of interesting things that I was interested in. And then I ordered some books, and one of the books was on hypnosis. And so then I became known, and I lived in the dorms, right, at college, and I was kind of known as the hypnosis guy. So people would come and ask me to hypnotize them. Like, it's totally not, like, this is not cool, right? Like, but I didn't know what I was doing, but I just knew enough to be dangerous, and I knew I would get a candle, and I'd light the candle, and then I'd have the person stare at the candle, and their eye would get tired, their optic nerve would get tired. I knew that was one way to get someone to relax and stuff. And so I did that. And a lot of times, like, girls would be like, oh, I want to eat vegetables, or whatever. So I would hypnotize them and to put these suggestions in, for them to eat more vegetables or whatever. So that was kind of my introduction to it. And then, I did it for myself too, for different things. Like I wanted to improve my surfing, or I wanted whatever, whatever I wanted, whatever sort of thing I was working on. And then when I came to Australia, I found a hypnotherapist too. And I wanted her to help me with my surfing too. And it was interesting because she asked me, have I had experience with hypnosis? And I said, yes, I've hypnotized people. She said, oh, really? What did you do? And I told her the story I just told you, right? Well, then she goes, oh, there's much more efficient ways than looking at a candle or whatever. I'm like, oh, this is going to be good,
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So then she recorded this session and she gave me like a CD of her voice, and so that you could use it, you know what I mean, for any goals. You would just think of the goal and then listen to the hypnosis thing. And I thought that was really fascinating. And I used it quite a bit. And then I got into the more tailored ones for like trading, and I got one of those, and it was pretty bad because it didn't really apply to Forex traders. So then I wrote the guy, actually we had a mutual friend, and I said, can you please like make one for Forex traders, because your one for traders sucks for Forex traders. It's like, it's no good, you know. It's just the way that the suggestions aren't quite right for Forex. And he goes, okay, well, do you want to write it? And I go, yeah. So I helped him write it out, and that one's at Hypnosis Download. So it's Hypnosis for Currency Traders, I think is the name of it. I'll put a link. You guys can get it through, you know, it's cheaper if you get it through us or whatever. But anyway, the point is, that's another good one too, right? That's a way for you to encourage the habits and the approach that you want in your trading. So I think hypnosis is pretty cool. And what's interesting about it to me is that they talk about like hypnosis and meditation as if it's different, but really I think it's pretty similar. Like in meditation, you have a mantra. One of my mentors was really into it, and he got into it in the 70s, and he was saying that he would have this mantra that he would use. And that's kind of like, you can kind of do a similar thing with hypnosis, where you're in a meditative state and your mantra is kind of like the goal that you're working on, right? So to me, they're really similar. And if you look at the brain during them, they should be similar too, especially if someone's a little bit practiced in it and they're not a newbie and they don't know what they're doing. They would get into a similar brain state. So I think it's really good for using it to get into a nice state of mind for doing some work that you want to do, whether it's writing or looking at charts or whatever. And it's also really good if you want to work on an outcome, right? So for example, my thing when I first started trading was moving stop losses when I shouldn't. I should just leave them, let the market hit it or not. And so that would have been a good candidate for hypnosis, just for me to consider that and think about that. If you have problems pulling the trigger, that's a really good candidate for hypnosis. If you're trading like a lower win rate strategy, or you trade too often, like you're really compulsive, that's another good one. You know, that's a good candidate for hypnosis. All those sorts of things would work really well. I mean, hypnosis works really well with things like overeating and smoking and, you know, breaking habits and things like that. So it certainly does work well with trading habits as well. So that's kind of how I see it. I put it kind of in the category of like fixing your issues, you know. Sorry, the reason why I keep getting distracted looking outside is because my neighbors keep putting their rubbish in my rubbish bin. I keep looking out the window and go, why are you putting your rubbish in my rubbish bin? Like, you know what I mean? It's like today was rubbish day, you know what I mean? In the morning the trucks come and everything. And so we've got a nice empty rubbish bin out there, and I just watched 3 people walk by, and I think sometimes they're just like walking random by people. Yeah, but one of them's the neighbor for sure. I was like, what's going on? Yeah, sorry. So if I keep looking over, it's because I'm thinking, what are you doing? Yeah. Anyway,
for people who are new to hypnosis, like some people think it's like an office space thing, right? Like you do one session and then now you're totally different. So maybe you can walk people through like how gradual that is, and you know how it's not like a one-shot deal, right?
Yeah, in fact, you know, when I was in the dorms as a kid, as this 18-year-old kid or whatever in college, they had one of those hypnosis shows come, you know, where they do
the shows,
you're a chicken, and I was one of the guys. Like he got me up there, and I remember him saying, he said it will last 30 days or whatever, like, or you know what I mean? Like you kind of have to, it kind of wears off or whatever. But and one of the first hypnosis CDs that I bought, they would say you got to listen to it every day for like 30 to 60 days. It's kind of like, it's sort of like, you know, when you're a kid and you keep hearing money doesn't grow on trees, money doesn't grow on trees, money doesn't grow. Your parents say that, that's repeated over and over again. Then you get that in your head. It's kind of the same thing with hypnosis, where you get these suggestions. It doesn't just, you can't just say to someone, oh, it's rare. It's rare that you would meet someone one time, they would say something to you, Hugh, and you would remember it for your life. It does happen, but it's pretty rare, right? The things that you usually remember are the things that are kind of repeated over and over, and those become like, you know, committed to memory.
and you rely on it. It's your programming. It's your programming basically. So yeah.
It'd
So
actually be a little
hypnosis is
scary, right? If somebody told you to do something once and then you start doing it.
Imagine that, yeah. Imagine if that were the case. We would be a mess, right? We would be a mess. Literally every time we went to like the DMV or to like a restaurant or whatever, you know, someone says, "Go sit in the corner," you know, and you're like, oh, then every time you go into, you go sit in the corner or whatever, you know what I mean? Like, imagine if that kind of thing happened. It would be a mess. So yeah, so it's good that we don't take direction well. Yeah.
Okay, cool. Thanks, Walter.
Thank you.
All right.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
You're not going to get shot. You're not going to be attacked by a lion or whatever it is, right? You're just going to lose some money. So,
hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So I was talking to a trader today, just before we got on. He was asking about fear and how do you deal with fear? If you've got a lot of fear in your trading, what do you do about it? And I guess kind of the question was, where does it come from? So I kind of equated it to one thing, but I'd like to hear about what you think about fear. Like, what does fear mean in trading? How do you deal with it? What are some techniques to wrap yourself around the fear of taking trades and trading in general? So I'm interested.
Yeah, sure. Well, in reality, there's nothing to be afraid of in trading, right? You're just going to lose some money. You're not going to get shot. You're not going to be attacked by a lion or whatever it is, right? You're just going to lose some money. So any type of fear is irrational. So you have to ask yourself, okay, where does that come from? Is it fear of losing all your money? Or is it fear of being wrong? Or is it fear of your ego being bruised? Those are kind of the biggest ones that I think a lot of traders run into. Once you can identify that, then you can start working on it. But then if you're still afraid, then you have to figure out what the source is. Otherwise, you're kind of just like going to be afraid all the time. And once you identify it, then you can start to work on it. That's what I think, at least. What do you think?
Yeah, I agree. Yeah, so I think about like these coaches in the NFL, right? These gridiron coaches, right? So that what they do is they have these stories, and they wear the stories like a patch on their sleeve. Oh, I slept in the office. I get up every day at 3:30 in the morning and go and watch film. And they have these big, this is their thing, right? Well, thinking about it, why do they do that? Why do they spend so much time watching film of their opponent? The reason why is preparation. Because when come game day, if they feel like they've prepared their team to the point of where they can kind of expect anything and they know what to do in any situation, they've prepared the other coaches so they know what to deal with it, and they have a plan for what's likely to unfold, all that preparation reduces the anxiety. The more prepared you are, and it's the same with trading, right? The more prepared you are, the more you've seen your system through different types of markets, through your back testing or demo trading or whatever, or live trading, if you've been trading for decades, then the more likely you are to be able to sit through it and be able to feel like, I can do this. Like, I've got it. Now, here's the thing. So fear comes from uncertainty. So I had this experience where I was surfing back home in California in December. I think it was the day before Christmas. Might have been Christmas Eve, right? And it was, rainy. The water was brown from all the dirt rush, in the rivers rushing into and I was surfing this reef, and it was pretty big. The waves were pretty big. Got held down onto the reef, kelp everywhere, right? This thick Northern California nasty kelp. Oh, yeah. Held down onto the reef. It's black down there, and I couldn't get up, and the next wave came and held me down. Okay, so it's the dreaded 2-wave hold down, right? Mm-hmm. You don't want to have like multiple wave hold down because you start running out of air, you start panicking. And so finally I came up, and then I let the waves wash me in, and I was kind of shaken. And I was sitting on the beach, and I was thinking, I really should go back out there, because if I let this fear kind of fester for a while, then I'm going to have that in the back of my head when I go surfing, especially if I go surfing at this place again, right? Mm-hmm. So I forced myself to go back out there and paddle back out there and at least get one wave and then come in, you know what I mean? So I could say that that I did it. And really, I think that's where it comes from. I think the fear of the uncertainty, not knowing what's going to happen. But as you said, you're absolutely right. What's going to happen in trading? You're going to lose some money. You're going to make some money, or ain't nothing going to happen, and you ain't going to lose money or make money. That's it. That's it. Now, might you get gapped? Might the market move fast and get you out beyond where your stop loss was, and you lose a little bit more than you're expecting? Absolutely. But the same thing, if you use like a trailing exit or something, the same thing can happen. You get more than you expected if you allow that for yourself at the other end. So to me, I think this idea of being fearful, it can come from a lack of preparation or a misunderstanding of the unknown. I mean, in a lot of ways, the unknown is what makes life so exciting. Imagine, Hugh, if you got up and every single day you knew what was going to happen. It was Groundhog Day, right? Like that Groundhog Day movie with Bill Murray. So every day you have the same thing for breakfast. The people say the same things. You go to work, the same things happen. That would be so boring. So being alive means embracing uncertainty. And being a trader means getting paid for embracing uncertainty. You don't go and exchange your 10 hours in the day for a pile of money at the end of the month like most people do. What you do is you exchange the risk that you're taking in face of uncertainty for a potential payoff, right? So it's a totally different world for traders, and that's why you were made to be a trader, because you see the world a little bit differently. And so that's what I would say to everyone listening. That's really part of what makes trading so great, is that we get paid for uncertainty. We get paid for doing that. And I think it's great. If, however, that really scares you and you don't like the uncertainty, then maybe trading's not for you. Maybe you need to exchange time for money, or find out, or sell widgets, or whatever you can do to make money, because that's really the heart of what trading is. Yeah,
it's totally not for everybody. And I think you bring up a good point about facing your fear again, because I actually have the opposite experience that you had. So I went to the North Shore after being on the mainland for a while, and you have to get used to those waves, right? And I got drilled like right in the middle of my back, came out like throwing up, all this kind of stuff. So I never went back there. But like you said, in reality, I probably should have gone maybe like the next week and then just face that again, so that I, didn't have that issue. But I think it's the same thing in trading, right? You maybe have a bad week or whatever, then you just get back up on the horse. Maybe you do a demo account or something, but just get back in there and not be afraid just because of that one experience.
Yeah. I mean, I agree. I mean, you just don't want it to control you, right? You don't want it to dictate your life. And in trading, that's really important. Like, I don't really think of it this way anymore, but sometimes traders will get like, they want to get back at a currency pair. Like, the USD CAD really got me last week, so I'm gonna get my, fill or whatever. I guess I used to actually think that way. I don't even remember where the last loss was from anymore. I don't even care. I just think of it as a roll of the dice, right? But I used to think that way, and I used to be, all right, Looney, I'm going to get you, let's see what we can do to the Looney today, because the Looney stole a bunch of money from me last week. So it's revenge trading, isn't it? I mean, that's not very productive.
Yeah, or the bigger issue is like, I won't not trade the US yen just because I lost a bunch of money. And I think that's going to hurt you like in the long run.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, it's like saying I'm never going to talk to a girl with blonde hair because the last girl with blonde hair slapped me or whatever. You know what I mean? Like, what? Like that's not, doesn't make sense. Yeah, exactly. Yeah. Cool.
Cool. Thanks, Walter.
See ya.
Technically, brilliant people are notoriously bad at explaining how something works.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, from a psychological standpoint, do you think that traders should start with a demo account?
Yeah, I think so. I mean, I actually think you should start with a simulator first, because you can get more trades and you can get more data. So my preference would be to start with a simulator like Forex Tester or something similar. There's lots of them out there now. And that way what you can do is you get your data first,
the demo helps. Demo, I think, is a good next stage, like because then you see the trades kind of unfold in like real time as they would in a real account. I don't think you can get the experience as fast in a demo account, right? So the advantage of a demo account is that it teaches you the patience that you need in real life, right? Waiting for the setup to unfold and all that, and then waiting for it to come to a resolution, good or bad. And then also it feels more real, I guess, when you have, even when you have a demo account, it feels like it's, so I always say, like, you do a simulator, then you do the demo, then you do a small money account, and then you can graduate to a larger account and stuff like that. But yeah, I mean, there are the disadvantages of a simulator is that sometimes you're just not trading as you would with a demo or a real account. The advantages are you get a lot of trades under your belt. So what you have to do is kind of time parse, like make sure that you're not dumping like all of this data into your simulator account, over 2 hours. You gotta break it up and be more vigilant with the way that you approach it. That's my opinion. What about you? What do you think about that?
Yeah, I think a demo account is definitely useful, but I think a lot of people have the tendency to not take a demo account too seriously. So I think it's probably actually more beneficial to throw like $100 into a nano lot account and then just trade that for like a penny a pip or whatever. But I think the demo account is necessary because you should understand the mechanics of it, how to enter, exit trades, how to place pending orders and stuff like that. But I think at that point, it's really up to you. Yeah. Is your personality such where you can take the demo account seriously, or do you need at least a little bit of money on the line?
Yeah, no, it's true. It makes a big difference, doesn't it? When you even if it's like $5, on the trade or whatever. I feel like a lot of traders just don't see the value in the bulk trade data that you get from a simulator. You know what I mean? Like it's kind of like they think demo or they think demo or live. They think that's the question. And I don't think that's the starting place. You know what I mean? The other thing that happens, I think, is that you get really excited about a system when you first demo it or first run it through Forex Tester, and you kind of need a cooling off period, I think. To sort of put it aside and then come back to it. There's lots of issues when you get into that. So for example, like if I said to Hugh, here's a system, what do you think? And you go, wow, I really like that one. And you started demoing it. If you're trading on the 4 hours, I don't know how long it would take you to get 300 trades or 400 trades. I don't know. I mean, it depends on how many markets you're trading and all that. But, if you're trading a system like that on the 4 hour charts, it might take you 9 months to get the same amount of data that you could get in 2 or 3 weeks if you were using a simulator. So, but again, like we said, it's a very different experience, live versus demo versus simulator. So,
Oh, another thing to consider is also if you're doing like automated EAs or whatever, then I think a demo account is absolutely necessary. Like, because there's a little bit of psychology, like we talked about before, where you have to turn the thing on and off. But I think that the demo account really gives you like a live, real-time assessment of how well that EA works. Whereas if you just jump straight into live trading, there could be issues with like the spread and certain things with the broker. And I have a buddy who blew out like a big portion of his retirement account because he just jumped in with the EAs and he didn't realize that there are all these things that you had to check out. So I think that's one case where a demo account is absolutely necessary for sure. And back testing also, right? You want to run that through the simulator and see what kind of numbers you get.
Yeah, definitely. Yeah. And there's a reason why when you connect to a server, like in MetaTrader, for example, it will say like you're connecting to the live server versus the demo server. That's a very different experience. If anyone's ever seen that, like my friends and I, we were running a strategy where it was like a grid system where you were taking profit every 3 pips. Like on demo, that was great. That was awesome. And then it was only about 3.5, 4 weeks into it on live account when everything fell apart and we started getting slipped like crazy. And if you're taking 3 pips profit and you get slipped a pip, then you're losing a third of your profit, right? So it's unsustainable. Yeah. But anyway, it was just really interesting, seeing that. And a lot of traders have seen that, right? You see the different experience on live versus demo. So
it's tricky. But yeah, for EAs, you need to know exactly how it works. And a lot of times I think people, like, they'll get an EA and they think they know how it works, and then they don't actually test it on, like, they think they know the settings or whatever. Like, if you have someone code it for you and they explain it to you, you go, yeah. But, or if someone gives it to you or whatever, and then you just don't know. Like, I always say, why not just put it on a 1 minute chart and test it out and see if you know what it does? You know what I mean? Like, it's ridiculous. On a demo, 1 minute, that's all you have to do. Like, it doesn't matter if you're going to trade it on the daily. Put it on a 1 minute demo account and see what it does, and if it does what you think it's going to do. So, yeah.
Yeah,
no, that's
totally.
a big
Like,
one,
I think
sure.
Technically brilliant people are notoriously bad at explaining how something works. So I think, you really have to not take their instructions for granted and just, like you said, test it out and see if it really works the way you think it does.
Yeah, that's right. That's right. It's very rare to find someone who knows a lot and can explain it very well. And that there's actually a thing that, and it's not their fault really. It's more, it's not like their verbal skills are lacking. It's that their unconscious competence is so high. And that's something that for you as a trader, you can talk it out. You can literally talk it out. Like when you can record, now it's so easy. I used to print it out and scroll and write on my charts that I printed out when I took trades. But you can actually talk it out now. You can just record it on your computer or whatever and talk about why you're taking a trade, and then why later on why you get out, or why you manage move to break even, or whatever you do. That can really help, because that brings out what's happening in the background in your head. That brings it out. And that's why I find it really useful for me to talk about charts, to an audience, because things that I'm thinking about, I don't realize that I'm thinking about them unless I actually say it out loud. You know what I mean? They go, oh, that's what I'm, do you know what I mean? It's really weird. It's so bizarre, but they have, like, that's a known thing in cognitive psychology. It's a known thing where they say, like, the best teachers are those people that are not quite at expert level. So they're not novice. They're kind of in that intermediate area where they kind of they learned it, but they've only learned it recently, and they're pretty, they're good at what they do, but they're not at unconscious expertise level, because then it's just almost like automatic. And same thing with driving. Think about it. Think about how hard it was for you to drive when you were younger, because everything was conscious. So, okay, I got to look at my mirror, I got to do this and that, turn on the signal and do this and that, all that. And then, but now, if you try to teach someone how to drive, you'd really have a trouble, because you'd have to think about what you're doing all the time,
Yeah.
It's tough. It's really tough to think about all the calculations, like, okay, that's an idiot over there, I got to slow down because he might, you know what I mean? Like, you're like all these hazards and stuff going on in your head, and it's just like totally, like, you're almost unaware of it, really. It's just happening. So anyway, I find it in trading, I think, is similar, like all skills, really. Yeah,
totally. I mean, when I learned to drive, I think it was my mom who said, line that side of the car up with the line. So the whole time I was like concentrating on that side of the car, lining it up with the center line, and then I wasn't like paying attention to other stuff. So, but now you can do it just, without looking, right? So
yeah, exactly. Exactly. Yeah.
All right, cool. Thanks, Walter.
See ya.
See ya.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
The obvious answer is you jump in late and you try and catch the end of it, right? No, I'm just joking.
That's funny. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so here's a question. How do you deal with missing out on a really excellent opportunity? So you knew it was coming, it shows up, and then you miss it, right? So I've had a few of these the last couple of weeks, actually, more than a few, where, like I was going to sell the USD Swissy. I was sitting in front of the chart waiting for it to happen, and it didn't retrace quite enough to where I wanted it to go. And then it just went, you know what I mean? Just like, and that happened like 3 days in a row, right? Where that happened. And it's kind of really frustrating. So what do you do when, because it's like, there's no moral victories in trading, right? Like, it's like you missed the trade. Okay. Doesn't matter if you knew what was going to happen. Doesn't matter if you were ready, you missed it. Okay. So how do you deal with that? What do you do?
Well, the obvious answer is you jump in late and you try and catch the end of it, right? No, I'm just joking.
That's funny.
Well, I mean, like that's what we tend to do, and that's what I've done in the past. We've all done that in the past, right? So,
yeah.
But yeah, I think it's just not getting too down on yourself. I think number one, I think once you start beating yourself up, that's really the slippery slope that leads to other like over trading and stuff like that. Number two, just realizing that there are other opportunities coming up, so just be aware of those. And then number three, I would say review why you missed it. You know, were you distracted? Were you doing other things? Maybe you should keep your chart up on a separate screen or something so that you can watch it. And those are the three things that I would say. How about you?
Yeah, I mean, journaling, like writing out your emotions and stuff can really help. Obviously, we all have things that we need to work on, like you said, like chasing a trade or revenge trading or failing to pull the trigger. Like there's certain things that we all need to work on as traders. And one of the things that happens with the fear of missing out is a big one, right? Yeah, that's a huge one. And that actually is, I think, if you look at it, that's a big driver in the markets themselves. Like if you look at the big macro picture, a big reason why you have things like blow off tops, right? That's what we would call it in a charting sense, a blow off top, where the market just kind of makes this parabolic move. I'll draw it the other way. So parabolic move like this, and then it keeps getting steeper, and then it just collapses. The reason why you get those sorts of things is because the last group of people who are getting in on that trade, who are buying that asset or whatever it is, that stock, or getting in on that trade in currencies or what have you, those people are the ones that have the fear of missing out. And this is universal. This is like a psychological cycle that you can see in any market, where it gets really, I mean, Bitcoin is probably one of the easiest ones to see this at, just because it's so pervasive in our culture. Like it's always kind of in the news sort of thing. Well, I guess you do overseas. If you're in the States, it may not be as obvious, but when you're in other countries, like they're always talking about the exchange rate, the pound versus the dollar, the Aussie dollar versus the US dollar. So that this is kind of part of the nightly news or whatever. You know what I mean? It's always out there. Whereas I don't remember. I mean, it's been a long time since I lived in the US, but I don't remember that being a major thing, even in the financial papers. Like it was maybe buried somewhere, but it wasn't like a prominent thing. So, so the reason I want to bring this up, to make the point, the reason I want to bring this up is that you don't see like in the news, like in the States, usually when they have that financial segment of the news, what they'll say is they go, oh, the biggest movers and the biggest losers or something in the stock market. Or they might not even have that and just say the Dow was up today, or the S&P was up, or the NASDAQ was up, or whatever, 2% or whatever. And that's it. That's all you get, right? They don't say like, oh, Facebook went up. They rarely would, like if it's an IPO or something, they say, oh, Facebook had their IPO today and it went up, 300% or whatever. But they don't usually talk about individual stocks. Whereas Bitcoin is kind of one of those things that's always kind of, seems to me anyway, it's always kind of in the news. And I think I think that's reflective of everyone's kind of interested in it. Even if they don't buy it or sell it or trade it, they're aware of it. You know what I mean? It's like this kind of like this new thing or whatever.
Yeah, it's a new thing.
And that's exactly right. And that's like, those are the type of markets that are most susceptible to the crowd and the fear of missing out, right? You don't have a whole lot of traders, a whole lot of people have this fear of missing out of some, stock in Hungary, right? Or whatever, or like, like some like IPO in New Zealand or whatever. Like that's not a thing, right? This is like a global thing. And, I hear people tell me things like, oh, well, Elon Musk said that, 6 months ago, or whatever, that Tesla Motors is going to start taking Bitcoin payments. So Bitcoin's, spiked up or whatever. It's just like always in the. So I think the fear of missing out, which we're talking about in an individual trade level, that's also in the big macro level. And you'll see that repeatedly in the markets play out. And it's most pervasive in those markets that everyone knows about, right? So the more people that know about a market, the more likely you are to get those blow off tops. So things like real estate, cryptos, anything that's really in the news and everyone knows about. I'm trying to think of another example. What would be another thing like, gold, like metals don't even really qualify. Like, well, actually, do you remember, I don't know if you remember this, but like there used to be these things called Beanie Babies.
Oh yeah.
Did you ever hear about that?
Yeah.
Yeah. So there's things called Beanie Babies that were like became super collectible. When I was really young, there was a thing called Cabbage Patch Kids, and we actually stood in line outside of a department store overnight, camped there to save our place in line, so that we could go into the store in the morning and go and buy, one Cabbage Patch Kid per kid or whatever. That was the deal, right?
Yeah.
Do you know what I mean? And it was like this crazy thing. And then later on there was Beanie Babies, where there's like these really expensive things. And I'll never forget, there was this fundraiser where this girl, like, she was like 10 or whatever, and she had all these Beanie Babies, and she was donating them to the fundraiser. Okay. And then this football player guy, right? This big husky, he went and bought, like, he bid on the Beanie Babies basket of this 10-year-old girls. He bought them all for the fundraiser, and then he gave it back to her. You know what I mean? And that and it was like thousands of dollars, right, for these Beanie Babies, because they were so collectible.
Yeah.
But that's another example, right? Beanie Babies is one thing that kind of, Cabbage Patch Kids was another one that kind of like the whole culture just, and there's this crazy fear of missing out. I think Tickle Me Elmo was also one of those things like a while ago. It's with these weird things that like everyone just has to have, and they have the fear of missing out, so they just do whatever they can to get it. So
the big one right now, I think, is NFTs, right? Or
yes,
recently, it's the NFTs.
Yeah, and I think you're right. I think you're an early adopter. I think it hasn't quite. Yeah, I think you're right. Like, dude, I was just. Well, when we used to be able to go to dinner, we're no longer able to go out for dinner. But when I went to dinner with my kids a couple months ago, there was a friend of ours and his daughter, and his daughter's friends with my daughter. And I didn't realize they were at the restaurant next to the restaurant we were at, right? It was right next door. And we both saw each other at the ice cream shop. And I'm like, what are you doing, man? Like, what's going on? Because he's like a programmer and stuff. And he's kind of like in between, like figuring out what he's going to do. And he's like, oh, I'm doing NFTs now. I'm like, really? Yeah. And he's like got this artist on there and everything. And he's selling these, he's got NFT brokerage and all that. And I think you're right. I think it's one of those things where like people are just going to go all in on this. And it's because everyone's learning about it. Right. So they're like, okay, I don't want to miss out on this. Like I missed out on Bitcoin or whatever. So yeah, I think you're right. I think this is the next thing for sure.
Yeah, no, that's a good point on the Bitcoin and all that stuff. Also, because like in cryptocurrencies, even if you miss that big run, like you can always get in at a better price, right? And I try to scale in, scale out, and I always don't get the best price because it just keeps going down and down and down, and then you're like, okay, that's a base, and it's going to go back up. But I mean, that's one thing to think about when you're suffering from FOMO. Also, is like there's probably going to be a better price at some point, so just hang on. And you don't have to worry about like getting in right now, right?
Yeah, and that's one of my big things. One of my big rules is exactly what you said. If you feel like you're going to miss out, remember, you can always wait one more candle, one more day, one more hour, one more. Do you know what I mean? Like you get a little bit of extra information with that extra candle, and it's often the case. And because of the cycles, like in the markets, we kind of have these cycles where certain times of the day, there's a lot of volume and then it kind of tails off and that. So you can kind of like, if you like, let's say, for example, you were trading the pound and you saw the pound ramp up during the London Open and you felt like, darn, I really wanted to get in on this reversal, but now it's blasted up again and I missed it. You can always wait for the next cycle. You know what I mean? Like if it's a bullish trend, if it's really strong, you're going to see it eventually do those pullbacks, like you say. And so that's, and you're always better off, I think, waiting for those pullbacks. I mean, you can trade the breakouts, like if it's basing up or whatever, you can trade the breakouts and stuff like that. A lot of trend followers will do that, and there's nothing wrong with that. But if you're trying to, have a tight stop and all that sort of thing, you got to wait for the pullback. And if it's already gone, like that happened to me last night. Last night for 24 hours, I had been waiting for these trades to happen. Right?
Yeah. On
the pound Swissy, the Aussie Swissy, all these trades, totally wait. I'm like, okay, tomorrow, London session. Early, I'm going to go in. I'm going to find these are going to peak up after they're going to retrace during Asia, and then they're going to go. And all of them did that. However, all of them did that an hour before Frankfurt. So Frankfurt opens an hour before London, and they actually did it like at the open of Frankfurt. They made their highs, and so I was a little bit late. Basically, I was 2 hours too late. So I came in, and all the charts had gone. I'm like, well, there's nothing I can do. Yeah. Like I'm not going to get in now. Because it's going to retrace now, and it did. It did retrace. It retraced all during the New York session, all of those. So yeah, you just have to wait. So that's like, okay, well, I'll just wait for the next. There's always another opportunity. That's the great thing about the markets. There's always going to be another opportunity. And that's something I think we should tell ourselves when we're worried about missing out, for sure.
Yeah, no, totally. Well, on that note, that's a great place to end. So thanks, Walter. See you next time.
All right. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
That's not necessarily the best way to make money. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, this is the classic question, but how do you know when to take profits?
Well, it's probably not when you think you want to take them, right?
Exactly. Yeah.
Definitely not. There's a guy in the Market Wizards book. I don't know if his name is Larry Hite, but one of the guys in the Market Wizards books, he says, theoretically, I would have made much more money throughout my trading career, but I just couldn't help but, and I'm paraphrasing, but I just couldn't help but to hear the cash register ring. So he would just keep cashing out of these trades, even though he knew if he had waited a bit longer, right? And in the Reminiscences of a Stock Operator, which is the biography of Jesse Livermore says there's plenty of, and again I'm paraphrasing, there's plenty of traders out there who have been, bullish at the exact perfect time and been bearish at the exact perfect time. They've timed the market perfectly, but it's very rare to find the trader who has the patience to hold on to those positions. And that is so true. Mm-hmm. It is so true. The thing that we beat ourselves up with as traders is either like we have the fear of missing out on a big profit by taking profit too early, right? So we made $1,000 on a trade, but we could have made $6,000 if we had waited. Or it's that thing where you had $6,000 on your trade, right? But you waited so long to get out that it kept going against you, and you kept waiting for it to go back, and it never went, and then you ended up with $1,000. And so as traders, I think you need to decide which of those is more painful. Having $6,000 literally in your equity as just as an example, right? Just pulling a number out of there, and then watching that go all the way down to say, let's say 3,000. Okay, so you had 6,000 in the bag, you never got out, it went down to 3, or you have 3,000, you cash out because that's where your profit target was, and then you watch it go another 3,000 in your favor without you, and you're like, in both cases it's the same thing, right? In both cases you've lost 3,000, you've quote lost $3,000, but which one is more painful for you? Because that will determine how you should exit. If you are okay taking 3,000 and saying that, more okay with losing out on that extra 3,000 after you've cashed out 3, then that's fine. Then you use targets. You're a target trader. If, however, you think that it's more painful for you to, or it's better for you to, you're okay with having 6,000 and then watching the market retrace against you and finally getting out at 3,000, then you can use trailing exits, right? And loose trailing exits at that. But yeah, so it's really, you can do both too. You can do both. I like to do both. You can have a target and you can have a trailing exit. That way you kind of feel like you're always right. But that's not necessarily the best way to make money. It's not necessarily going to make, and that's where we get tripped up. We think, we need to figure out the best way, the most profitable way. No, you need to figure out the way that you're going to stick with. You need to figure out the thing that you can do, right? Mm-hmm. Not the thing that's going to make you the most money, because the thing that's going to make you the most money may not jive with your psychology. So yeah, so that's my take on that, is that you can do both. This is really simplified, right? There are lots of ways to go. You can use timed exits, right? You can use exits based on the time, like lunchtime. They're all going to lunch in New York, so we're going to get out now because the volume's going to, or get out at the end of the day, or get out after X number of days, or get out if the market hasn't gone after X number of days. So there's lots of timed exit you can use too, which I think is a really cool thing. But at a basic sense, it usually comes down to letting the market go as far as it wants to, some sort of trailing exit, or letting the market cash you out at a predetermined level, which is your targets. So how do you see that?
Yeah, no, I totally agree. I think it's you have to specialize, right? You have to understand what your edge is, And it's kind of like trying to be a doctor and a lawyer at the same time. That's not going to work. So you got to pick one. So you're going to be the short target guy, you're going to be the long target guy, or you're going to have something in between. But I think one of the biggest issues with traders is that they try to do all of the things at the same time, and they lose out on one trade because they missed a bunch of profit, and they say, oh, I'm going to switch back to the other thing, and then the other thing doesn't work, and then they take a small profit again, and then they say, oh, I missed out on this profit again, so I'm going to switch back to that. And that's where you get into that, that cycle of losing and switching and losing and switching.
And also, I think they fix the last trade. So you have a trade that you take, and then something happens. You watch the market go, and you're like, oh, wow, I only took 2R on that trade, and it went 6R. So next time I'm going to use a trailing exit. Of course, what happens next time? Well, the trailing exit loses you 0.2R, 0.2R, whatever. You know what I mean?
Yeah.
So that's the problem I think we have as traders is we're always trying to fix the last thing, and that's not the way to do it. We need to take groups of data, and if you're going to make changes based on chunks of data, not just 1 or 2 or 3 trades. You need a big chunk of trades that show you something and then you go, okay, well, maybe I should do this based on the last 50 trades or the last 100 trades or what have you.
Yeah. And I think that's just hardwired into us, right? Like, it's like you put your hand on a fire and you get burned, and you're like, oh crap, I'm not going to do that again. So it's the recency bias, I guess, right? The last thing that happened is kind of what we emphasize the most.
Absolutely. Yeah, totally. Exactly. And that serves us well. Like, that serves you well in the jungle, but not so well in the markets. Yeah.
True. All right.
Yep.
Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
No, totally. I think people beat themselves up too much, or they think it's an insult on their intelligence if they lose a trade or they have a losing streak, right?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So in this episode, we want to talk about greed. And as traders, sometimes we have this problem of trying to overcome the need to win and this feeling of greed and trying to really take as much as we can out of the market. So how do we overcome that?
I think it comes down to practice. Like, what did your backtesting tell you? What has your demo trading told you? You trading your small account. There's a certain line, obviously, right, that you have to tightrope walk across. Like, there's being aggressive and making profits when they're available, and then there's being safe and not taking undue risk. So I think it just comes down to, what does your testing tell you? What does a certain extent, what does your gut tell you? And being able to discern which is which. And I think a lot of people get too greedy in the beginning because they think they know how trading works, and they don't really. But once you've been through a few boom and bust cycles or whatever, and you can kind of tell when it's a good time to be greedy and when it's a good time to lay back and just kind of play it safe. What do you think?
Yeah, I think, I think that I feel like we don't have, this might be kind of weird, but I feel like we kind of don't have a say in it as traders. I feel like we kind of have to just let the market decide when, the big winners are going to come. Mm-hmm. And it's almost like a letting go thing, sort of like you're sailing. Today's not going to be a windy day, so you're not going to go very far, right? Like, there's nothing you can do about it. You can put your biggest sail up, I guess, but that's all you can do really, and just kind of drift along. And I feel like part of my growth as a person, as a trader, has been learning that I need to just focus on what I can, which is the rules of the strategy. So whatever strategy I'm using, I execute those entries and those exits exactly as I should, exactly as I've back tested, and I don't deviate from that. And that's why I record all of that data in my journal. However, there are times when you're going to do everything perfect. And the last couple of weeks have been really rough for me, like in terms of win rate. And I have to examine that and go, well, what, it's not that I want to change what I'm doing. No. I just want to make sure that my exits and my entries have been where they should be, right? Is that what's going on? I mean, you've probably seen this. Like, when you're at your best, when everything's rolling and everything's clicking and you're making lots of great trades and all that, the markets are really, you're really locked in with the markets and you're doing well. Those periods are often when you're really ripe for making mistakes, right? It kind of sows the seeds for greed or mistakes or whatever in the near future. So to me, that has to be part of the awareness too, is like, how am I feeling today in terms of my trading prowess? Where am I at on a scale of 1 to 10? You can go back and look at that too in your journal. You can see, do you tend to make mistakes when you've had a winning streak and you're feeling really confident and your number's really high? Or do you tend to not take trades when your confidence is really low? Do you tend to like just let trades go that you should have taken, but you didn't because you were a 3 instead of an 8 or whatever, because you've had 6 losers in a row? So that's the kind of thing that I think we can see, like the data is there. And I do believe part of it is just letting go and just going, look, because you just never know. If you're a trend follower, you just don't know. You do not know when that trade is going to come. That 20R or 15R trade is going to come and make all the difference for your year. You just don't know when it's going to be. Like for me, those trades happened back in February, March, like the best months of the year so far. They were February, March. That's when the markets were trending and I was all in, right? And so that was great. But now it's kind of, there's a lot of drifting around and reversals and stuff, and Asia goes one way, then London goes one way, then New York goes the other. It's just kind of whipping around, and it's kind of difficult unless you're trading the perfect time frames for those setups. So I guess in essence, I would just say record your emotions because they can impact your execution, right? And also maybe think about trying to figure out ways that you can relax and just let go and know that it's not really entirely under your control. It's part of trading is just learning to be that person that says, okay, well, this is what the market's going to give me now, right?
Yeah.
And my system, I'm doing it. I'm executing. So, I know the system works. It's just the system needs certain market conditions to work well, right? So So there you go. Yeah.
No, totally. I think people beat themselves up too much, or they think it's an insult on their intelligence if they lose a trade or they have a losing streak, right? And like you said, it's just
they take it personally.
Whatever's going to happen is going to happen. Yeah.
Yeah, that's right. Yeah, that's right. Yeah, that's totally. And it's funny. Like I used to do that. I used to get mad at currency pairs. That Swissy, that loony. I want to get revenge or whatever. Like what? Like that. I don't even think about. I honestly don't even think about that. I really don't. I really do not think of them as adversaries or whatever. I think of it more as myself as the one that I need to deal with. It's not the loony or whatever, or the Swissy or the pound or whatever. Yeah, it's crazy.
Yeah, that's a good point.
Yeah.
All right. Thanks, Walter.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
All you really need to do is have one role model of someone who is wealthy and who breaks that stereotype, and I think that can really help. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, why do we think rich people are bad, and how does that affect our trading?
Well, for me, I don't know about you, but for me, a lot of times, and a lot of traders I know, their ideas, their stereotypes, it comes at a young age, So like I remember when I was a kid, I went to a birthday party of a friend of mine, and she was in my class, and her dad owned all the McDonald's, like all the McDonald's restaurants in the area, which is kind of a rural. I grew up in a rural area, so it's spread out, over maybe like say 50 miles. This guy had all the McDonald's restaurants. And so it was really funny. Like when I came back from the party, my mom and dad would be like, oh, what was it like there? And you know what I mean? Like, it's kind of like, it was kind of like I went to like the North Pole or something. Everyone's asking about with Santa Claus, like, so you pick up these things, I think, over time from growing up about like these stereotypes about, I wonder how many people he had to screw over to get that money. You know what I mean? And like these sorts of things. And so there's two things to untangle here. One, is that your relationship with money and your attachment to money. And two would be what you think about people who have a lot of money. And that usually comes pretty early. And you can even see it in movies. Like there are these movies about the rich old miser, or like A Christmas Carol. They have and there's another one where like there was a movie had Richard Pryor in it, and this kid, and the kid was really wealthy, and then Richard Pryor somehow like got connected into family, and he was like hired to be the kid's friend or something. And there's all these movies where they have this stereotype of the rich person and how they're kind of not doing exactly everything right, whereas the people that don't have the money are doing everything the right way and sort of thing. So I think you have to untangle that and see. One thing that can help is just having someone that you look up to when you're growing up that has a lot of wealth. So for example, my grandfather was a good example of this for me, because he adopted my mother and her siblings. Mm-hmm. And so, he came from he had built up a lot. He was a farmer growing up, and he married my grandma on the farm next door. But what was interesting was, he kind of built up his wealth over time and started making more money than the president of the company that he worked for and all this stuff. And so there's a lot of issues with that. And then he had these vacation homes and different islands and stuff that I got to visit as a young grandchild. And so I saw a really good example of someone who had done pretty well, in his life. Like there was nothing bad about him. You know what I mean? Everything we knew about him was great. And so it was kind of nice to have that role model, someone. But I think allowing your kids to have a role model, someone that they can look up to, that knows the game of money, because it is a game, and you can see that for who they are and not, pigeonhole them as someone that's negative. So I think a lot of it has to do with the stereotypes that you grow up with. So, and being able to find a mold or find a role model, someone that you can relate to and learn from that has already kind of done that in a good way can be really helpful. And that's always something that I want, my kids, and I feel like, even young adults growing up, there's a lot of indoctrination in stories and in the school system about what it means to be wealthy. And I think, all you really need to do is have one role model of someone who is wealthy and who breaks that stereotype. And I think that can really help. Otherwise, it's a lot of deprogramming. What are your thoughts?
Yeah, no, I totally agree. I think a role model is definitely the best thing, right? Because when you see it in action, then you can say, hey, this guy's not that way. So not everybody's like that. But I think I was doing some thinking on this recently, and I kind of realized that, okay, that's something that we have to distance ourselves from as traders, because if you want to be wealthy, you have to think of wealthy people as being good. Some are good, some are bad. And, but I think throughout history, I think really wealthy people, there have been more than a few really wealthy people who have abused their power, right? Like you're talking about kings in the medieval times, or certain politicians, in other times. And I think that has carried forward into our like collective psyche. And I think that's kind of where that comes from. So you got to kind of realize, okay, that's not always the case, but there were a few bad examples. And that probably has led to where we are now, thinking that most rich people are bad, right? So I think once you can kind of see where that came from and distance yourself from it, I think it's really beneficial.
Yeah, exactly. Yeah. And I think like the younger generations coming up behind us aren't going to have as much of an issue with that, because it's almost like we're the fish in the fishbowl. We can't see the reality of what money is. Mm-hmm. You know what I mean? Like money is a centralized thing. However, that's changing, and money is becoming a decentralized thing. Mm-hmm. And it's going to completely, like, that is not in the future. It's already here, right? With cryptos. So in the future, what's going to happen? Well, actually, if you go back in the past, think about this. We didn't always used to have these centralized money stations, right, around the world.
Decentralized, yeah.
Yeah, right. Like we think about back in the old days, there was like a bank out in California that would print notes, and you could use those notes out in California and Nevada. Mm-hmm. And there was another bank out in Illinois, Ohio. You know what I mean? Like it was like this regional thing.
Yeah.
And I'm talking about the United States here, but I'm sure it was similar in other places. With possible exceptions of the new countries that never had this. So what's cool about that, that's changing now. And what will happen is you're gonna see exactly the same thing that we saw with all these banks that printed their own notes. It's exactly what's happening right now with the cryptocurrencies. These are decentralized, and basically it's like a market of money. And so the market gets to decide which ones are useful, right? So if you took that note that was printed by the bank out in California and you took that to New York, it was up to the people in New York to decide whether or not that was worth anything, right?
Yeah.
And that's exactly what's happening now with cryptos, right? These cryptos, there's more than enough out there. And so people get to decide now which ones are actually worth anything. Which ones are you willing to, is the demand going to go up for, right? And so this has always been the case. It's only been recently with the centralized bank model that we've seen all the money go through one, through one thing, right? Through that. So yeah, so I think what the upshot of that, I think, is that the kids growing up now, or the kids that are yet to be born, like those generations, they're going to have a completely different concept of money than you and I do, because we've always been in this centralized economy where all the money goes through one spot, right? These guys print the money and they loan it to the countries, because that's how centralized banks work, right? They print the money and they loan it to the countries, and the countries take the money and they have to pay back the bank, right? That's how it works. So yeah, so I just think the whole thing is fascinating.
No, totally.
To see how this unfolds. Yeah,
I've seen several examples of like kids who are like 16 or whatever, and they saved all their birthday and allowance money and they put it into something like Doge. And now they have like $1 million. So like now they are the rich person, right?
Yeah, exactly. Yeah. So
all right, cool.
That's awesome. Yeah.
Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
You kind of just quiet your mind, you sit there, and then you imagine yourself moving out of your body and looking at yourself.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, somebody wrote in and they're asking, why do I keep making mistakes after a string of losers, and what can they do?
Right. So there's a couple of things that I would look to. I would look to your emotional context when you're making these decisions, and also the mechanical aspect of your system and how you're executing. So you need to score yourself on how well you are entering your trades and exiting your trades, also managing your trades if there's management decisions like moving to break even, and then having a journal where you're writing about your feelings and your thoughts during the time. You can probably pinpoint other things going on in your life that may be impacting your actual trading execution. So that those are two pretty common things. You might find, for example, like some traders like me, we get really overconfident when things are going well. So right now I'm currently in 4 trades and they're all going quite well. So it would be easy for me to see another potential 5th trade and get excited. In fact, I did this morning and get excited about, you know what I mean? And maybe even take it if it wasn't up to par, right? Yeah. According to your rules. Whereas other traders, so that's an issue for me. Now, the other side of that is that, you have a lot of losing trades, and then you might want to just make all that money back, right, as quickly as possible. So you might add too much risk onto a subsequent trade or something like that, right? So there are lots of ways to look at this. Typically, it's the emotion that's impacting the execution, right? And so what happens is you get attached to the outcome of those trades. You've had a lot of bad outcomes, and so that impacts your decision making. Or the other side of that, which is you get attached to the outcome of those winning trades, and that again impacts your emotions and your decision making when you're deciding on how to execute the next trade or the next following, chunk of trades. So that's how I look at it. What are your thoughts?
Totally. It all comes down to is if you're executing correctly, like you said, and if you're not, then figure out why. And if you are, then keep going. But beyond that, I mean, yeah, it's easy to get into that spiral of, oh, poor me, I'm just gonna try and make it up quickly, right?
Yeah, the catastrophic thinking, right? Where
Yeah.
you just say, "Oh, I'm never going to make it. It's never going to work for me." Blah 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 blah, and exactly right. So that, and you can stop that with logical thinking. You can have a trading accountability partner to talk to about that, and they can help pull you out of that. But there are lots of techniques. Actually, I've been thinking about making a course on this, just on this issue of, building up your resilience and stuff, because I think it's a really important thing. I think it actually, in some ways, like fortitude and the desire to make it work, trading work for you is important. And also with that would be like resilience, and they're kind of related in a way. I think if you have those things, then you will figure out the system, you will figure out the risk management, you will figure out the psychology, as long as you have the fortitude, the desire to make it work, and then also the resilience, the ability to withstand those really difficult times. Although, winning streaks can be painful too for people who, for example, you took a trade and it only made 50 pips, and then you watched it go another 690, you know what I mean, without you.
Yeah.
Those can be difficult too.
Yeah.
Right. So there's a lot there. But yeah. So yeah, I think you're absolutely right with that idea of, feeling like it's a downward spiral, catastrophic thinking. That's a big one for sure. Yeah.
Yeah. And one exercise that I found useful, I think I read it in a book a long time ago, but you kind of just quiet your mind, you sit there, and then you imagine yourself moving out of your body and looking at yourself at, sitting at your desk or whatever you're doing, and kind of evaluate yourself from like that third party perspective and say, hey, it's easier to evaluate somebody else than yourself, right? So when you kind of change your perspective, I think that helps also.
Yeah. That reminds me, what you just said, it reminds me of like an NLP thing I read about like in 2003 or whatever. And I started using the exact thing, which is, so it's kind of what you said, right? So you imagine, like let's say you're sitting there trading at your trading station, right? So you imagine that you're like a fly on the wall looking at you. Mm-hmm. So from that perspective, like what would the angle be from the height? And then what you do, so the way that you do it is you view yourself from another's perspective. It could be like from the top, like as if you're looking down, like from a drone or whatever, looking down on your head, doing the right thing, like doing everything right, executing as you should, right? And that's in full color, the sound, everything is as realistic as possible. And then if you want to kill a habit, what they said was you would look at it, you would see yourself making a mistake. Okay, so making doing the thing that you want to get rid of from another perspective, right? But it's in black and white, okay? And it's really kind of grainy and almost not like an old movie or something, right? So it's in black and white. It's not as vivid as the one that when you envision what you want to happen. And then you watch that film, and then you actually take that film, right? That black and white film of the recording of you doing the wrong mistake, and you like throw it into the fire, or blow it up with dynamite, or you know what I mean, like put it in front of the train tracks and let the train run over, or whatever, flush it down the toilet. And so that's a way of kind of like purging yourself of that. So anyway, that's a technique if people want to try it out. Let me know how it goes. Yeah,
no, that works really well. I think I heard that from Anthony Robbins somewhere, and he probably got it from NLP. But
NLP probably,
yeah. Awesome. Okay, thanks, Walter.
Okay, cool. All right.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
You just need to set up the routine of when you check your charts. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, somebody wrote in and they asked, can you guys speak about how being in front of the computer intraday as a swing trader can be sabotaging?
How being in front of the computer intraday?
Yeah, like I guess they're in front of the computer for quite a while during the day, but they're a swing trader.
So like I guess it sounds like they're kind of getting into the trade. So basically they shouldn't be fiddling with the trade, but they are, sort of thing. Yeah. Is that how you interpret that? Yeah. Yeah, I had that too when I first had the when smartphones came out before iPhones. I had like a smartphone, and it was the same thing. I put MT4 on it, and I was always looking at it. Stuff was stupid. So yeah, I mean that's definitely a case. I mean, it really comes down to discipline with that sort of thing. So if I don't know if it could also be a similar question would be like I'm spending too much time in front of the screen. Well, I guess it's sort of the same thing. Like if you're a swing trader and you're trading, let's say 4-hour charts, there's really no reason to be watching the charts, 8 hours a day, right? You could check in every 4 hours, essentially, right? In theory. The problem is the candles change, right? So, for example, I've been trading the 12-hour charts lately. And so I look at the 12-hour chart during Asian, and I go, holy crap, the market's going against me, right? And then, of course, and then London comes around and the 12-hour candle closes and it completely goes the other way and goes in my direction, And this has been happening for the last couple of days with my trades. Yeah, and so the problem is you think that the candle that you see right now is going to be the candle that prints on the chart, and that's never the case. They always change towards the end, right? It doesn't matter if you're looking at a 5-minute candle or 1 hour or a daily. They always, at the end of the candle, it always changes quite a bit, and something for you to check out yourself. So discipline is really the solution here. So what you need to do is set up a routine. And so you walk the dog at a certain time, whatever, you go to work and have lunch, check your charts after lunchtime if you're at work or whatever, or, you need to have like a process, right? A routine to go through. This is why those military people do so well with scalping and stuff like that, because they're, athletes that have trained for years and years and years, because what happens is they can easily slot in the routine of, okay, I wake up at this time, I check my charts at this time, I'm going to trade during this time, right? And that's what you really need. Even if you're a swing trader, even if you're not scalping for 3.5 hours a day, if you're a swing trader, you just need to set up the routine of when you check your charts. You can set alarms on your phone or send email reminders to yourself. Anyone can send email reminders by sending an email to @followupthen. So if you want to remind yourself to do something on a certain day or time, or whatever, you can just send it to, tomorrow @followupthen and put the headline in the email, and it'll come right back at you, right? So these sorts of things are all there for you. You can set alarms on your charts even. You can do whatever you want, but the idea here is that you need to set up your day in a regimented way so that you have a process that you go through every single day, and that allows you to, okay, now it's time to check my charts, right? I can't check my charts until it prints. If I'm a 4-hour chart trader, I can't make a decision on this until that 4-hour candle prints at 2 o'clock. When does the next one? Okay, at 6 o'clock, and the next one at 10 o'clock. That's it. I can't, that's the way to do it, I think. And if you can't be there right when the candle prints, then you have a schedule based on, an hour after it closes or whatever. So, for example, you might not get off of work in time to check the 4-hour chart, and you're busy with work stuff, so you have to do it an hour after it closes or whatever. But, you can find that. You can make that work. It doesn't matter what kind of life you have. If it's too hard, then you're trading the wrong time frame. Move to a 8-hour chart, whatever, right? So
yeah, no, totally.
Yeah,
and I think
that's what I would do.
At least my psychology behind that was I was trying to become successful faster, and I thought that looking at the chart would speed that up. So I think if you realize that that's what you're thinking also, then you have to understand that that's not how it works. You just have to, like you said, look at the chart when you should and not look at the chart when you're not.
Yeah. And if you want to get better faster, like you said, I know people they tend to say things like, back testing is a waste of time. Well, you get a lot more under your belt if you spend time back testing the last 3 years, right? Than if you watch the last 3 hours. So in that amount of time of sitting there watching this candle just do this, you could have taken 30 trades, right? You could have taken 30 trades in Forex Tester or some simulators so that you have that experience under your belt. So to me, that's a better use of time. So
totally. All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
If you just look at how the world works, right? Things go in cycles.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, there's a thing called Bitcoin maximalists, as you probably know. And, they're all about Bitcoin. They think that only Bitcoin's the only thing out there. It's the best thing. And they're going to stick with it no matter what. So what do you think about that? What do you think about the psychology behind that? And do you think that's dangerous to be stuck in just one thing, like, just trading the euro, US dollar or something like that?
I don't know about Bitcoin maximists, but I believe you. Look, I only know enough to be dangerous on that side of things. But here's my understanding of the crypto world is there's different things, there's different coins and tokens and for different reasons. And you know what I mean? Like they all have kind of different uses and stuff. But remember, I just keep thinking back to when like 1994, the Netscape stock was amazing, right? If you look back and look at Netscape, like that was amazing. Netscape actually blew up and it's kind of come back as Mozilla. So Mozilla today is kind of the people that had it's kind of the Netscape came from the ashes of Netscape. You know what I mean? So if you were like, oh, this internet's going to be huge back in 1994 or 1985 or whatever, like you're just thinking, dude, this is amazing. I'm all in on Netscape, or I'm all in on home computers with, in 1993 with Gateway, or 1992 with Gateway 2000 stock. You know what I mean?
Yeah.
Both of those got superseded. You know what I mean? Like that something better came along. I don't know. Maybe Ether is better than Bitcoin. Maybe Ether is actually going to be the thing, but they have different uses. You know what I mean? Like Bitcoin, as I understand it, is more like a storage, like gold, like holding value. Whereas Ether is a little bit more, well, my programmer tells me that in the future, the internet's going to run on Ether. That's what he tells me, I don't know, but that's what he told me. So, it's a different thing, altogether. But your point is a good one, which is, sometimes I will say though, I know a trader in Africa, and every year he locks in on one currency pair and he just trades it the entire year. Like one year it might be the pound yen, for example, right? And that's all he does. And he's made enough money to get to the point where the authorities don't want him to leave the country because his contribution to the federal budget is so great. You know what I mean? So and that was a big deal for him. Like, how am I going to get my family out of the country? So there's something to be said for that. But what you're saying is it's kind of like someone locks in on something and they're just like, I'm only going to do that for life. I think it could possibly work. I don't know why you would want it to work. Because I remember in 2003, I used to trade the EURUSD. I don't trade it anymore. The EURUSD used to move around quite a bit, and now it's just I don't like the look of it. And actually, I trade the Aussie Kiwi a lot, but I don't like the look of the chart as we record this on the Aussie Kiwi. It's too wicky, it's too choppy. There's certain nice. So I can understand why you would want to become a specialist, but I think as a buy and hold sort of thing, that can be a bit dangerous, which is kind of what you're getting at. I think like a buy, if I were to just buy Netscape and hold forever, I got no money now, same thing with Gateway. I don't know. Well, I don't know. Maybe Gateway, I think Gateway 2000 became Gateway, and then Dell Computers took over and kind of squashed, like they're the leader in that sort of niche now. So yeah, I don't know, man. I mean, I think you could do it, but as a buy and hold strategy, and I mean that in gold though, is you and I both that are like, I'm just gonna buy gold and I'm never gonna, like you can go to these guys that have the coin shops and stuff, or the gold, like kind of like / pawn shop / gold coins, like these guys, and they'll tell you like, no, we don't sell gold, we just buy it.
Yeah.
You know what I mean? Yeah. So I mean, look, I understand, but I think you need to be mentally flexible overall if you're going to be a trader. If you're going to be an investor, even you need to be, because you got to have, even as an investor, you got to have a point where you go, okay, yeah, this isn't working. I need to get out of this. So you always have to have your limits. It's just like as traders, we know when we get in, where do I get out? If it goes good or if it goes bad, like what's my rules in terms of that? Even if it's a trailing exit, there's got to be something that happens that kicks me out of this trade.
Yeah, no, totally, I agree. And I think that if you just look at how the world works, right? Things go in cycles. There's the tides, there's the stock market goes in cycles, all this kind of stuff, and there's the weather. So why won't investments go in cycles, right? So I think that, you could make a case for buying Bitcoin or maybe gold super, super long term. But I think in the end, especially in technology, there's going to be cycles where the next technology comes in and that's going to be better than the last one. And those guys are like the old fogies saying, back in my day, this and this was the best thing, and I'm going to do that forever. I think really kind of locks you into something that might not be working 10, 20 years down the line, right?
Yeah, that's right. And remember, like this dollar cost averaging idea of buying every year or buying every month or whatever, that was manufactured by the brokers to keep clients.
Makes sense. Yeah.
You know what I mean? Yeah. I mean, in Asia, they came up with that idea to keep clients in the game even when the markets were down, because as you and I both know, when the market, like especially when the stock market is raging, there's a lot of interest in trading, right? And funnily enough, the other time when there's a lot of interest in trading is when it absolutely crashes. Like those are the two. Do you know what I mean?
Yeah.
If it's just kind of doing nothing, just chopping around, there's the interest wanes. It's only when it's absolutely at a peak, or if it's completely crashed.
Yeah, totally.
Yeah. Or is it because you want to convert it to something else that's more useful? Because I can't, like, if I take my gold coin to across the street to the sushi shop, they're not gonna, like, they're gonna go, huh? You know what I mean? Like,
Well,
maybe
if they were
that
smart, they
changes,
would
I don't
take
know,
it, right?
But
But
yeah.
but not
Dude,
most places.
have you seen? Yeah, exactly. Dude, there's actually, I'll see if I can find it and put it in the show notes. There's this guy that went around and he was trying to sell like a gold coin. It was on YouTube, and he was trying to sell a gold coin to people for like $20 or whatever. And you know, and it was worth like 1,500 or $2,000 or something. You know, it was worth a lot of money. And nobody took him up on it, because they're like, no, I'm not going to give you $20 for that. You know, and he couldn't get anyone to buy it. It was so funny. You know what I mean? It just shows you the disconnect between what, like, people like you and I, like, what's the market, you know, the people that are kind of in tune with the markets versus the general public. There's no utility for something like that in the general public, you know?
Yeah,
it's funny.
No, totally.
Yeah.
But hopefully that'll change soon. All right. See you, Walter.
See you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Some people don't like to talk to people, you know? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I'm interested to hear your thoughts on talk therapy and how that helps people through, you know, certain psychological roadblocks or whatever.
When you say talk therapy, you mean like talking to someone?
Yeah,
Like
so you go to your therapist and then you just sit down on the couch and, you know, all that.
Yeah. Well, I'll tell you one thing that I found really fascinating, like when I was learning about psychology and stuff in university. Do you know that, so one of the biggest things that you go and talk to someone about is depression, right? When I was going through university, they had drugs for this sort of thing, but I don't think it was at the acceptance level. I don't think it took a big portion of the treatment. You know what I mean? Like, I don't think that as a large percentage of the population, maybe I'm wrong, but I think maybe it's just the world that I was in, but a lot of people would go and talk to a therapist, right? If they were depressed. Whereas today, I think even in psychology, I think I don't know if it's true, but they were pushing for some psychologists to be able to prescribe drugs, just as psychiatrists could for years. The psychologists could never do that, right? And I don't know if that ever got anywhere, but I remember, 20 years ago, where that was what they're trying to do. They're trying to get it to a point where certain psychologists could prescribe drugs. Now, depression is one of the big ones that depression and anxiety are the two big ones that people go to see a therapist for. And they've done studies on depression and these talk therapies, as you say, right? And what's interesting is it actually didn't matter the theoretical orientation of the psychologist or the therapist. So there's all these different theories, right? Like, people have heard of Freud, but there's other ones like cognitive behavioral, which is a lot, like in pop psychology, you'll get a lot of cognitive behavior where they're like trying to get you to quickly change your thinking, and that will therefore change your behavior. So that's a lot. Talk radio or like TV, you'll see that a lot. There's also humanistic, where it's almost like when you go to humanistic therapy, it's almost like they're just trying to get you talk as much as you can. And they're just trying to reassure you and like get you to open up. It's almost like a lot of the tell me more, and that's interesting. How does that make you feel? They just keep like you know what I mean? And so it's fascinating, I find, that it doesn't really matter if your therapist is Freudian or humanistic or cognitive behavioral or whatever. It seems like they're all about the same in terms of effectiveness. If you look at studies where they had people go through really traumatic life events, it's usually the ones that go and talk to someone and the family or the community that talks about what happened rather than just kind of brushing it aside. Those are usually the ones that do the best. I think it's useful. And in terms of trading, having someone that you talk to every week about your trades, about your feelings, about, having a trading accountability partner, that's extremely useful. So I think in terms of from a trading point of view, I think it's great. It's a great use of your time. So you can do all you want with hypnotherapy and all that stuff and subliminals and all that, but having someone to talk to about your trading, even if it's a non-trader, I think can be really helpful. Or writing it out in a journal, like talking about writing about your feelings about your trading and how things are going, rather than the technical details of every individual trade. So more of a big picture sort of thing. So no, I think it can be very useful. I think it can get a bad rap sometimes. People will say things about therapy that for certain things, or there's bad publicity. Certain therapists might do crazy things or whatever. But I think overall the data is pretty good. Like I think it's pretty good, and I think just having, like I said, it's hard. I mean, trading is a lonely thing, and so having other people to talk to about it, I think is really useful for a lot of traders. Yeah. What are your thoughts on that?
Yeah, no, totally. I don't have a lot of experience with that kind of thing, but yeah, I think from personal experience, talking to another trader is definitely good because nobody else in your life knows what you're talking about. I think a lot of people, especially in our modern culture, like they shove their emotions down. So I think talking about it is definitely helpful. At a certain point, you have to kind of say, okay, is this working as well as it did in the beginning? And if not, maybe I should try something else. Because I know some people who have gone to therapists for 10 years, and they're kind of at the similar spot they were in the first 6 months. So that's something to consider too. But yeah, I think it's helpful overall to talk about things.
Yeah, some therapists, that's their design, right? So the Freudians, they kind of want you to go through this huge process that takes years, and they'll tell you, it's just like you go to some chiropractors and they'll be like, well, it's going to take 15 sessions. You know what I mean? So they're like, okay, it's good marketing for them, okay, you can't just come in once and I'm going to crack your back and you're all good. We gotta really work on this, sort of.
Yeah. And sometimes it's true, but.
Oh, absolutely. Yeah. No. If you believe the Freudian thing, or if you believe in what the chiropractor is telling you, yeah, exactly. I mean, there's reasons for what they say. But the cynical people can say, oh yeah, you're going to a Freudian. Well, to get to the point of what's called transference, it could take decades. You know what I mean? Like literally. I mean, is your therapist going to live that long for you to get to the point? Like if you have an older therapist, you got to start doing the math. You know what I mean? Am I going to have to am I going to go to a new therapist before I get to the point? So I
think it's also on you to research all the modalities, right? And kind of see what to expect and look at people's experience with those things and say, hey, okay, I'll try this. If it's not going to work, maybe I'll try this. And this is the average time that those people seem to get results, and just kind of not take their word for it at face value.
Yes, absolutely. Yeah. And, our friend Adam, he did he knows the whole the tapping thing.
Oh yeah, the EFT.
EFT, emotional freedom technique, or whatever it's called. That thing that he talked about at the London conference, that was cool. Some people can try that. That's kind of one of the quick fix sort of things like that. But I would never say to someone that you need to talk to someone because that's the best thing to do. It's more about what works for you. You might find that EFT or subliminals or whatever, but I think just in general it can be useful.
Yeah.
Some people don't like to talk to people.
That's true.
So that's true. They're out there. Some people they're not. They could take it or leave it. So
Yeah.
But yeah. I think overall it's definitely something to consider. If you're considering it, it's probably a sign that you should definitely do that. And it doesn't have to be a professional. It could just be a trading buddy or someone that knows that you trade or whatever. Yeah.
Cool. Awesome. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Find a way to discipline yourself not to close it early.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we got a question here from a trader, and he says that he's been a break-even trader, although profitable as a long-term investor, and he's been developing some new strategies, and he wants to get out of the cycle where he makes really good progress and then he gives it all back. And so he says, look, it's good that I'm not overall losing money, but I'm not making that much too. And he noticed when he looks through his trading record that he closes trades when they were in profit rather than waiting for them to fully play out. And so that would have been better if he waited a little bit further. And so what I clearly need to do is practice my exits. And this is what I'm doing in Forex Tester in my testing. But how to judge when an exit proves to me is how to judge when to exit is difficult. So when do I exit basically is the question. What are some of your thoughts on that?
Yeah, so I think number one, you go back to your testing, right? Okay, when I don't exit early and I just hit that profit target, sounds like he has a profit target, then what are the results? And if it's acceptable, then you just go with that and find a way to discipline yourself not to close it early. Second thought on that is that maybe you're just a better investor. Maybe you should just stick to like long-term investing and, kind of double down on that instead of trying to spin your wheels with trading. Maybe your personality is such that it's not quite suited to trading. But I mean, if you want to do that, obviously, then, that's your choice. But I think going back to your records, looking at what happens when you do close it early versus when you hit the take profit. What do you think?
Yeah, no, that's great. I hadn't thought of the you should just be an investor thing. That's actually a good point. Yeah, that's a really good point. It's tricky though, isn't it? Like, sometimes everyone's a really good investor in certain markets. You know what I mean? Like,
yeah.
I think back to when I was trading stocks in the early 90s. Like, I was a really good investor.
So was most people, right?
Yeah, until 99. Yeah. So, So anyway, but yeah, and I'm sure it was the same in the 80s. Like, if you got into investing in 81, it was great until 87 and all that. Yeah, it's interesting. I kind of think that I almost feel like everyone needs to take a side or decide to be on both teams. And what I mean by that is, I think it's really important to consider what's more important, like what's more painful for you to have 100 pips and then watch the market go another 200 pips and go, oh, I lost out on 200 extra pips. I could have had 300 pips on that trade. Or watching the market go 300 pips in your favor and you're high-fiving yourself, and then it retraces and goes against you 200 pips and you get out with only 100 pips. One of those is probably going to be more difficult. And depending on your answer to that, that means that you should probably focus on profit targets if you find it okay or relatively okay to hit a 100 pip target and then watch it go another 200 pips versus, the idea of having 300 pips and giving back 200 of those. So you only get 100. That's so painful for you, which is obviously the trailing exit scenario. Then you should probably, go with just targets, but you can do both. And that's what I do. So you can have a trailing exit on half your position or a third or a fourth or whatever. And then you can have targets on the other bit. So I usually have a target and then trailing exit, or I have 2 targets and a trailing exit, depending on sometimes I'll have just a target, but that's kind of rare. Although my yen trade yesterday was just a target, and that was just because it was kind of in a range, and I had no reason to suspect it would get out of the range, So I just will use a target in that instance. But that's what I would suggest. Just figure out which one is more painful. Is it the trailing exit scenario where you give back 200 pips after having it, or is it the target scenario where you got out and then you watched it go another 200 in your favor? Because one of those is probably going to be something or if you just want to have both a trailing exit and a target, that way, no matter what, you kind of feel like you're right. Yeah, it's tricky though. I think you might be right. Like, it might be something to look at. Am I even cut out? Is this something I should do? Do I still want to do this? Make sure that you have good records and that you're knowing it. If you're taking the trades as you should, like you're getting in as you should, you're getting out as you should, you're following all your rules, because that's really important. So so that's basically, that's it for me. Yeah, that's my thoughts. Yeah.
Yeah, no, great points. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
The idea that your personality is formed when you're 5 is ridiculous, and that's we know now in psychology from studies that's not true. You can completely change. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I thought we could talk about personality tests. I know you've given people quite a few. I've taken a few. And how can they help traders? And is it better to take multiple tests or just rely on one test? And what have you tried before?
Right. Well, it kind of depends on what you're trying to do, I guess. If you take your car into the to get serviced, or like something's wrong with your car, they're going to ask you a few questions, like does it shimmy when you go up a hill? Or does it squeak? Does it make a noise when you stop? You know what I mean? Like they're going to ask you some questions, right? It's the same thing in psychology, I guess, is what are you trying to do? So like if you're trying to find out what you do really well, or your default mode is, or whatever, right? You know what I mean? Or are you trying to find out like if you have some challenges that you might not be aware of right now? You know what I mean? Mm-hmm. If that's what you're doing. Because psychology is such a screwy science, and some people would say it's not a science. There's a lot of it's so new. And it's so complex. There's a lot of, because people are different, right, and complex. There's a lot of different theories about what personality even is, right? So because of that, you have all these different tests that are all meant to test the same thing, right? Yeah. And I guess in some ways you would have that in other sciences. Like even in medicine, there are different approaches to health, and some that are not the traditional allopathic medicine way of trying to deduce what's going on. So there's a lot of different, it's throughout life, it's like that. But I guess from my point of view, my question has always been with a trader, where are the things that are going to be difficult for you in terms of your personality and your trading, and what are the things that are going to be that you can leverage, right? What are your strengths and what are your weaknesses, sort of thing. And so in trading, the things that I know that we got to look out for are impulsiveness. So that's like the tendency to just kind of like, quickly take a risk or something. Those sorts of people that are like, get on a plane right now and go to another country, sort of thing, right? I guess, back in the days when you used to be able to do that. Yeah. So, someone so-and-so says that the euro is going to go up, so I'm just going to take a trade on the euro. Has nothing to do with anything I've backtested or anything. It's just a tip, right, or something. So if you're impulsive and you're willing to just kind of do it on with little reflection or consideration of the risks, that can be a difficult thing for traders. On the other side of that, if you're conscientious and you're very deliberate and you're very measured, you kind of follow the steps whenever you do something. If that's your mode of operation, very conscientious, that's really good. I mean, it can run into problems with having difficulty pulling the trigger and so forth. But so when I designed the trading test that you're talking about that I've given to thousands of traders around the world, what I was trying to figure out was what kind of market are you most comfortable with trading? Like what's your style, right? Because we know that most traders, and I know this now after surveying people, but we know that most traders like to take reversal trades. Most traders are more comfortable finding the high or the low and trading off of that, because it's such a, visually, I mean, I was like that when I first started trading. It's so visual to see that high or that low on the chart and go, wow, if I had just gotten in there, sort of thing. Right. Yeah. So that's a really common thing. So I guess I would say it depends on what you're looking for. If you want the Big Five test, I can link people up to a free Big Five test. Big Five is has a lot of followers in psychology in terms of the Big Five personality. So you could take that test. There are other ones like the 16 PF or whatever, or the Myers-Briggs, and there's a guy named, I think his name's Howard Gardner. So his intelligence is defined as like there's all these different domains. So you might be really good kinesthetic intelligence, like an athlete or a ballet dancer, whereas other people are really good with interpersonal. So they're really good at like interpersonal relationships and really kind of connecting with people. So it's not sort of the broad domains that that's in the Big Five. So the Big Five tries to boil it down to basically five things where you're on one end of the scale or the other, or could be somewhere in the, near the middle or something like that. So, but I'll give you guys the link to the Big Five if you'd like to have a look at that. So I guess my question would be, if someone wants to do a personality test, what are you trying to figure out? That's the, you know what I mean? That's the overarching kind of point.
Yeah, no, totally. I think Colby's another big one too, right?
Oh yeah, Colby. Yeah, so Colby's really interesting. That's a new one that I came up on the last 6 years. That's basically, exactly what you're saying. About 7 years ago, I found that one. So that one is, what do you do well, right? So it's kind of like, this is the interesting thing about Kobe, because the psychologists have been talking about things about personality in terms of how you think and how you think about the world. So an introvert sees the world very differently to an extrovert. Extrovert sees crowds, lots of action, parties, a restaurant where lots of people are talking and there's a lot of, stuff going on. They get energy from that. Whereas an introvert gets energy from just sort of like decompressing, being alone, that sort of thing, right? So they see the world differently. But with Kobe, that is about what you do in the world. So it's not really about what you think, it's about what you do. It's not academic in a sense that I think it was designed like in the workplace to find out, for managers to figure out how, what am I going to do with this person in my team so that I can get the most out of them? You know what I mean? I'm not sure if that's true, but I'm guessing that's where it probably came from. That sort of that IO, it's called IO psychology, industrial organizational psychology, where it's kind of like applied to business sort of thing, right? So I think that's where that came from. So so that's a really good one too for people who are trying to figure out, how do I do things? How do I do things in the world? So it's not about thinking or considering or the way you see the world. It's actions. So that's really good for people who are trying to come up with a trading plan and figure out an approach to the markets and all that sort of stuff.
Yeah, no, those are great suggestions. I think another thing to consider also is that there's no one best personality test, right? I think a lot of people get stuck on that and they say, oh, the Myers-Briggs is the best thing, or the Colby's the best thing, or whatever. But I think each one has its strengths. So you have to kind of like take a few, see what each test has to offer, and then kind of take the ones that resonate and leave the ones that don't.
Yeah, exactly. And just like what you said, it's also true that there's no one ideal personality for trading as well. I mean, there's always going to be like gradations of things that fit really well with trading and things that don't. So like you'll find on the internet people talking about the INTJ personality, which is the Myers-Briggs INTJ. So that's introvert, neurotic, I don't know what T is, something, and then J, justice or something. I don't know, but that I'm not up on the Myers-Briggs, but they say like that that's the perfect personality for trading. So I wouldn't get caught up in that if you take the Myers-Briggs and you find out. I can give you guys a link to the Myers-Briggs too, but that you're not INTJ or whatever, right? Like that's just, do you know what I mean? Like that's not. I think I am INTJ. I think I took it on. I'm either INTJ or INT, the other thing that's not J. I'm not sure, INTF or INT, whatever the dichotomy is with J. But so I mean, it's not. I don't like. I wouldn't like. It's the same thing like your horoscope or whatever. You get the because personality changes. That's the other thing. Like people will say to you, "Hey, Hugh, your personality was formed when you were 5," or "Hey, Hugh, you got to be really, really careful with your kid when they're growing up and get to age 5 because that's when their personality is formed." That's a bunch of bunk. Like anyone who knows that, like if you've ever been someplace, actually you've been someplace in a certain situation and then you move to another area and then you have new friends and a new environment and you actually change and then you move to another place, right? And that's why I think I've always liked moving because you get to be like a new person. You know what I mean? You go to these places and you kind of adapt and you learn from other people and stuff. And so the idea that your personality is formed when you're 5 is ridiculous, and that's we know now in psychology from studies that's not true. You can completely change and become I became very outgoing when I went to graduate school. I was pretty introverted up to the point where I went to graduate school, and I became more outgoing than I was before. And that was like a deliberate attempt for me to kind of become more extroverted, become more like sensation seeking in the world. You know what I mean? So so that's another thing to remember, that if you score a certain thing and you think, oh no, you can become more conscientious if you're worried about that. If you worry that your conscientiousness score is low on the Big 5, you can you could totally change that. It's not something that's set in stone. So that's
no, totally. Another resource to look at that I found was useful was Principles by Ray Dalio. Have you read that book?
No, I haven't. I know who Ray Dalio is though.
Yeah, he basically profiles all of his employees or whatever, and he gives them baseball cards, what he calls baseball cards, and they have their, personality traits on there. And obviously that can change, like you said, but I think it was a really useful thing to keep in mind, because if you know what your traits are, at least for now, you can kind of like, either change them or play to their strengths or whatever. And I think that's a really cool concept that he explained in that book.
Yeah, that's awesome. That's great. Yeah, that's totally cool. Yeah.
Yeah. So, I mean, I think, I don't know, I've never found Myers-Briggs that useful. Like, I look at it, I'm like, that doesn't make any sense. But, that's just me. Maybe somebody else thinks it's useful. But I think some other things to look at also are like these books that give personality types. And like I mentioned before, Trading, Sex, and Dying, I think is a good one. And it not necessarily to fit yourself into a box, but to kind of like see, okay, where do I stand relative to other people? And I think that could be something useful. You talked about horoscopes. I'm going to get on my horse and ride off the ranch right now. But I think that if you go with like a qualified Vedic astrologer who reads your birth chart, I think nothing is set in stone, like you said, but I think there are tendencies. So like if, I had a reading and I sat down with her for like 90 minutes, right? And she got everything right. Like it blew my mind, everything right. And so I kind of, at that point, I was like, okay, this is probably a science somehow, right? And I think that is another thing that can also help you understand who you are, what your core maybe personality type is like. And obviously that can change, but there are those tendencies that everybody has, I think, right? And I think those are a couple other things that you can use to go beyond the basic personality test.
Yeah, and that brings up a good point. I think one thing that I've been thinking a lot about the last 2 years is this idea, like you bring up Vedic astrology, right? Mm-hmm. And one thing that I've kind of, and I see more and more examples of this, like when you see things that are like thrown away in the corner and put away as, not useful or pseudoscience or something like that. Like if you go back and look throughout history, a lot of times what's happening is there are really good things, really useful things that are kind of shunned for whatever reason, to the advantage of some other group or, domain, like another approach. Do you know what I mean?
Yeah.
Like you can go back in time and see the direction that medicine has taken, or like you say, like astrology, or there are certain forks in the road where it's like wow, we could have totally gone down this other path, but we ended up here. And it's the same in anything, right? Like with a country, the way that a country ends up could have totally gone different if there was just a slight, you know what I mean? If there was just a slight difference at this key juncture. And I think I'm at the point now where I am, because I look back, like when I was in academia, when I was in teaching courses in college and stuff, and I was doing my degree in psychology, my doctorate in experimental psychology. And I look back, like the dominant thinking back then. Okay, so this is like 20 years ago, right? Or more. That thinking back then, a lot of that stuff that everyone thought was definitely true has been proven, or I don't know if proven is a big word and it's a key word to use in science. You're not supposed to release. You just find evidence for, evidence against, right? So I don't want to say proven, but there are a lot of things that we thought that were true. And today there are some questions about whether it was valid to, go down that road. So I am like, when you say that, like, some people might think, oh, Vedic astrology, and they turn off. Like I think of the Chinese astrology, how can there only be like 11 types of people, whatever? But apparently there, the rat, the ox, all that stuff, the dragon and stuff. But apparently like it's more nuanced than that. It's not just the year that you're born. There's like, if you drill down, I never knew that until recently. But like, I always think about these things that have been thrown away, and I think maybe there is something there. Just because it's been thrown away and officialdom has thrown it away doesn't mean that there's nothing there, right? Because if you go back in history, you see this over and over again, where things were thrown away that everyone thought, oh, that's definitely wrong. Turns out that actually there was something there.
Yeah,
So
no, you've basically
yeah.
just described the past 3 years of my life.
Yeah.
So anything that's in a book, I have the tendency to think, okay, that's probably wrong. So what else is there, right?
Yeah.
Yeah.
Well, I think we're not alone, right? Like, there's a lot of people right now that are questioning,
Yeah.
going through that exact same process right now at this moment. Yeah. So people are everything is kind of shifting right now. It's kind of turning around. So yeah. Anyway, I just wanted to throw that out there. So yeah. So I think we're not alone. A lot of people listening to this are probably doing the same thing. Things that were thrown away and thought of just ridiculous are being re-examined from a slightly different light, going, wow, maybe that's interesting. Maybe there is some, that sort of thing. So I just want to, I think, because that's a personality trait in itself, openness.
Yeah.
The openness to new ideas, the openness to new experiences, openness, right? Like that openness idea. How open are you to, and how dogmatic are you versus how open are you to new ideas? Like that's another thing to consider. So
yeah.
Anyway,
yeah, I think
that
if there's a personality test that we haven't mentioned, or if we have mentioned one and you don't think it's valid or whatever, just give it a try. Try it out and see if it works for you or not. And I think that goes for anything in life.
Exactly.
All right. Thanks, Walter.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
It was amazing to me how often those systems didn't make money, even though when you look back, you see all these big winners and you think, wow, that's amazing, right? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk about this concept of prospect theory in trading and investing. And if people don't know what that is, it's the idea that a trader or investor is going to focus more on the profits as opposed to the potential losses when taking a trade or investment. So how have you seen that playing out?
That's really good. Actually, I was just thinking the biggest thing I've seen when I first started trading was when I would look at the charts through the filter of a new strategy. That's where it would come in, right? Because you would look at the charts. Before I was doing any sort of back testing with Forex Tester, before I ever found Forex Tester or whatever, or maybe it didn't exist, I don't know. I would look at something and I go, wow, that looks really good. And you would pick out all the perfect trades, right?
Yeah.
And so then I was smart enough to scroll back, okay, and then pull out a spreadsheet or a notebook, and I would take the trades, like usually in a notebook by hand, and see where they would, where I would go if I took all the signals, right? So it's sort of like a tedious back testing. And it was amazing to me how often those systems didn't make money, even though when you look back, you see all these big winners and you think, wow, that's amazing, right? So it's exactly what you're talking about, right? The other thing is what's called hyperbolic discounting, right? And that's this idea. So it definitely comes in back testing, or when we're looking sort of determining what sort of strategy you should use, right? But in hyperbolic discounting, that's when you're in a trade, okay? And if you're in a trade and you've actually got some profit, and yet there's the potential for even more profit if you hold and wait, right? And this always reminds me of the quote by Jesse Livermore that said, he said, any man can pick the bottom of the market or the top of the market and get in at exactly the right time, the perfect timing. But it's rare that someone can hold on to that position. And that's what really made my money. You got that? That's where I made my money, was by sitting tight. And so by holding on to his very best positions, that's how he made all of his money. And so with hyperbolic discounting, what you do is you go, well, I would rather have the $100 now and cash out this trade than to hold on to the trade with a possibility of $2,000. And so this sort of thing is what we see if you look at the data, and we can link up in the show notes here the data, the 43 million Forex trades data, where they talk about how most traders, actually retail Forex traders, they actually win more often than they lose. They have a better than 50% win rate, but they take profits so quickly because of
hyperbolic discounting, this idea that what you have right now is so much more valuable than what you could have. And you think about it, you could just move to break even, right? If you move to break even and you get stopped out, that's like a trade that never happened. But that's so painful for people to consider that I could have had that $100. Why did I move to break even? I could have just taken that $100. Next time I'll take the $100. And that's what happens over and over again. That's why we see these traders. The standard retail trader has a better than 50% win rate on all the currency pairs, but it's that those losers are so much bigger than the winners, and that's the killer. And so, yeah, to me, though, that's the big one, right? Those are the two biggies. You know, you fool yourself into trading something that's better than it is, and then once you are in a trade and it's a winner, you fool yourself into thinking it's better to take profit because you can't go broke taking a profit, right? That's what they always say. You can't go broke trade. That's exactly how you go broke. So, yeah.
I think it's interesting to see, like back when you used to be able to go to trading conferences, you see everybody open their laptops, and the manifestation of this, I guess, is you can tell the beginning traders because they have a Ferrari on their desktop wallpaper. And then so they're really focused on those short-term gains, right? So I think that's and then you see those guys who've been trading for a while and they got something else on their desktop or whatever, and that's one clue that you can kind of tell the psychology of the person. So I thought that was interesting.
Yeah, that's really interesting. That's super interesting. I found that. Yeah, it's fascinating. So how do you think that this relates to trading, the prospect theory idea? Like, what are your thoughts on that?
I think the prospect theory might be only half right. I think before you get into the trade, most people are generally looking at the benefits, right? But I think once you're in the trade, I think the losses become more painful than not having the gains. So you might stay in the trade longer and it might be more painful, but then that could get you to stop trading ultimately. So I think that there's two sides to that prospect theory.
And I think the pain, like the painfulness stuff, like that's kind of, you can almost see it on the charts, like in support and resistance, when you see like a support resistance level. So you can see where, like, let's say you have support and the price comes down to support, right? So there's traders that thought, okay, that's definitely support because it was support, back in the past. So it's going to be support again. So they buy there, but then it falls through that support. Okay. And then it comes back up and touches that support level from below. So now it's resistance. And that's where all the traders get out there, right? So then it falls again. Those traders that were long, they just want to get break even now. They're just like, oh, just come back to break even, please. And it comes back to break even, and then they get out and then it falls. You know what I mean? It's so fascinating, like that you can see almost like the psychology on the line, like literally just on the line chart, just looking at the line chart, you can see the psychology of the crowd and what they're doing,
Yeah, no, totally.
Yeah.
All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
They say there's nothing really new in trading, but I think there are certain advantages that you can come up with for yourself that could be new for you.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90%